Hello guys, welcome to the marathon of cost accounting paper number 8. Sir, I haven't started preparing it, so after marathon I am planning to start for our attempt. Can I watch the marathon? Yes, for the next attempt. All the best. And others who have already attended a classes once, already know what subject is, they can attend the marathon. It will be of some use. Okay. So if at all you are thinking after attending marathon I am going to write an exam, all the best. And if at all you get a good result, please let us know, so that we'll stop the main product and we'll do only marathons. So one more question, sir, will the 100% syllabus be covered? Yes, all the chapters will be covered. Sir, it will be of how many hours? To be frank, even I don't know, but I am targeting somewhere around 16 to 20. Actually, I can finish it off early also, but I am planning to go in depth. We are going to look at the few questions also. So accordingly, we'll be doing. So it might go for around max to max. You can keep for 20. Sir, I am watching the recorded. Sir, how many hours it will go? Just check how many hours the video is. So many hours it is. One part only, no second part and all. Done. Hey, we have to give the disclaimer. You don't know. So basically the weightage, all those things you guys already know. So sir, are you going to teach from the ICMA material? Yes. Are you going to teach 100% from the ICMA material? No. Okay. So straight away, without wasting any time, shall we start? Yes. First, what do you mean by costing, guys? Costing is nothing but the process of ascertaining the cost of a particular product. It could be a goods or it could be a service. Ascertaining the cost, how much it is, that process itself is known as costing. Now, sir, ascertaining what, sir? Cost of the product. So now the question comes, what do you mean by cost? Cost is nothing but expenditure incurred to make that product. In simple words, cost is the expenditure attributable to that particular product. Attributable to that particular product, the expenditure is known as cost. Okay. Sir, why we want a cost accounting? Why do we want a cost accounting? Guys, costing is the process of ascertaining the cost. To ascertain the cost, we need all the records and all, no? So, keeping the records of the cost, that is, keeping the records of all the cost information, that itself is nothing but a cost accounting. That itself is a cost accounting. Sir, why do we need the cost? What are the objectives? The objectives are, guys, ascertain the cost of production. How much is our cost of production? To ascertain, we need data, no? So that is one objective. And ascertaining the cost, what we will do, we'll find out how much is the cost per unit. For that, add the profit portion what we want. We'll arrive at a selling price. So to fix the selling price, again we need the cost informations, and by knowing how much cost we have actually incurred, we can do the cost control and cost reduction. What do you mean by cost control, sir? First, what we will do, we'll fix some number telling that, boss, our cost should not go beyond this. Our cost should not go beyond this. If at all it goes beyond that, we'll try to ascertain why it is happening and we'll try to control it. That is cost control. That is trying to make sure costs do not exceed the predetermined amount. Now, that is your cost control. Whereas cost reduction is, guys, there is no particular set standard. For example, this time we decided our cost should be somewhere within 10,000. Okay, sir, we achieved that. So we are not happy. Next time we are making sure our target is 9,000. After 9,000, 8,000. Like that, we keep on changing our targets to achieve that. Now that is cost reduction. Cost reduction means it is a continuous process. There is no end to that. But cost control is, if you achieve that number, finish, boss. If you achieve that number, finish. You achieved a target. That is your cost control, whereas cost reduction is continuous process, continuous improvement. It could be small improvement, but it is a continuous improvement. Kaizen costing, I told no, where small improvement is expected, but we need a continuous improvement over there. And okay, sir, so we should reduce the cost. No, sir. In cost reduction, can we compromise with the quality? No. We want to provide the same quality, but by visiting the certain things, whatever the activities we are doing, by bringing the improvement in those activities, we'll try to reduce our cost as much as possible. There is no end target to that. That is your cost reduction. And as the organization grows and grows, we want to know the information about how my separate divisions are doing, how my activities are doing, how my units are doing. So to know that particular activity wise, particular division wise, particular unit wise profitability, the cost accounting is going to help. And it also, once you know the cost, you know where exactly you are spending. So when you know where exactly you are spending, then you can avoid the wastage, etc. or no. You can avoid wastage, inefficiencies, gaps, etc. And to tell the management, boss, this is what we expected, this is what we incurred, this is what our cost per unit, this is what the selling price, etc. You should present it in a nice format. No, to present it in a nice format, you need a information. That information can be ascertained or gained from cost accounting. These are the few objectives of cost accounting. Sir, revision, sir, why you are telling this? They might ask these things in a theory. I'm just telling the theory is not everything, only to the extent which is relevant for the examination. Sir, so all the theories will come from there only? No. I think so far if we cover, we might cover a theory, but sometimes it might come out of that also. That time what we should do, sir? Choices are there, no. Skip it. Sir, choices also exhausted, sir. Then leave for 7 marks. What happens? Nothing. Correct, no. All we need is hey. Don't skip, guys. Just read and go everything, okay? Sir, what is the depth of cost accounting, or what are the aspects covered in cost accounting? That is your scope of cost accounting. 1. Cost accounting involves cost bookkeeping. That is keeping all the records of cost. That is one work of cost accounting. Cost ascertainment, cost analysis, where we spent, etc. Cost comparison. Either it could be with our own data, our preset standards, or our last time data, previous data, or with our industrial standard. Comparing this cost is nothing but a cost comparison. After comparing, trying to keep the cost as much as we determined. Cost control and preparing the reports for that, that is cost reports, and helping out in the cost audit. I hope cost audit thing is covered in your law, section 148. There or not there? Not there. Okay, then no need, leave. So, cost accounting system. Basically, guys, there are different kind of cost accounting systems. One is historical costing. What do you mean by historical costing, guys? Here predetermination, nothing is there. We'll incur the cost. After incurring the cost, based on the information available, actual information, actual figures, we are going to ascertain how much is the actual cost. That is your historical costing. Absorption costing is, we will budget in the beginning only. Based on that, we will charge to the product. And finally, we will compare with the actual data just to check that whether we under absorbed it or whether we over absorbed. Sir, what do you mean by under absorption, over absorption, sir? Stay tuned for a overheads chapter. Done now. Direct costing, guys, here we consider only and only those costs which are directly attributable to the product. All indirect cost will be ignored, which means only variable cost shall be considered. And standard costing is, here we are not going to take the actual data. Here what we will do, using the few techniques, we are going to ascertain what might be the cost and we are going to fix the cost according to that. That is your standard costing, predetermined cost in simple terms. Standard cost is nothing but predetermined cost. And uniform costing is where, guys, everyone in our industry, for example, we are an automobile industry. Let's say Suzuki is there, Toyota is there, Hyundai is there, Kia is there. So many other players are there. Each and every player using the same method of costing, that is uniform costing. Sir, what are the essentials of cost accounting system? That is, what are the things should be there in the cost accounting system? How you should ascertain which cost accounting system I should use? Guys, it should be tailor-made, practical, simple and capable of meeting the requirement of business. It should be tailor-made. That is, it is not general in nature. It should be exactly for your organization. It should give information to your organization. It's like your notes. How you prepare your notes? Whether everyone prepares the same notes? Whatever faculty prepares, we prepare, sir. Correct? But if you guys sit to do the revision notes on your own, will everyone prepare the same way? No. Few will write it in sentence. Few will do it as a chart. So that depends from the student to student. Depends from student to student. Now that is your tailor-made. So, and it should be practical and it should be simple to do as well as understand. And the data used should be accurate. In cost accounting, whatever the data using, no, that should be accurate. That should not be misleading in nature. And there should be proper cooperation between the executives of the different departments. Purchase department, sales department, planning department, proper coordination and support should be there to the cost accounting department. And it should not be high also. What? Cost. The cost of installing that system should not be high also. What do you mean by that, sir? For example, now let's say we are sitting in some place. Okay. Now when we are sitting in some place, let's say a few mosquitoes are biting us. So what we can do? Odomos we can use of, let's say 50 rupees. No sir, I am going to bring that big the smoke they will release now. That I will bring whole vehicle. How much it will cost? 50,000 sir. Hey, the work which you can do in 50 rupees, why the hell you are spending 50,000? Try to understand. Now let's say due to wastage, we are incurring a loss of 10,000 rupees. Just to make sure that loss won't happen, we are installing a system which will cost us 2 lakh rupees. Why? Fine, 10,000, let it go, no? To save 10,000 rupees, you are spending how much? 2 lakh rupees. What is the fun in that? So you should make sure the benefit what you derive from that cost is more. Then there is no need of incurring a cost, no? So it should not be too high also. That is, it should pass the cost benefit analysis test. That is, cost should be less than the benefit what we are deriving. The system of costing should not sacrifice the utility by introducing meticulous and unnecessary details. Sir, we need all the detail. Our employees are just doing the paperwork only. Don't. You should not bring any unnecessary works into organization. Only how much is necessary, that should be there in the cost accounting system. And proper careful phase program should be prepared. That is how the cost accounting flows. All those things properly should be prepared. And management should have the faith in cost accounting system. It should not be something like, sometimes what happens, you know, as per Companies Act, if you cross some turnover, I'm not going to tell how much turnover and all now, you have to prepare your cost accounting books. If you pass much more turnover, you have to get your books audited by the cost auditor. Now, just for that purpose, you should not have a cost accounting system. Management should have a faith in it. Management should use the information available from it. Okay. So these are the things. While installing the cost accounting system, what are the factors to be kept in mind, sir? Size of the firm. I should look at my size of the organization. For example, few things you can do it using a software called Tally. Now that software might cost you yearly around 10,000 rupees. Small organization, I can afford 10,000 rupees. Also, there are a bigger software like SAP and all. Now, SAP and all annual maintenance itself will cost you 10 lakh, 20 lakh rupees. Now, for my small organization, why the hell I need 10 lakh, 20 lakh rupees data? So, while preparing the or while installing the good cost accounting system, you should know about size of your firm also. If it's a smaller firm, small software is enough. Bigger firm, you need bigger software. ERP and all is required. Manufacturing process. You should know exactly what process is involved in. For example, for few organization, only one step. For few organization, the raw material should go through different processes before it becomes final product. So both can't use the same cost accounting system. So your process also you should know what exactly my manufacturing process is and how many numbers of products we have and what nature of product we have. That is also important, and how much management want to have a control over our cost. That is also important. Management is least concerned about keeping the control over our cost, then there is no point in having the cost accounting system at all. Management want a complete control, sir, then we want a proper cost accounting system. And raw material, how many like different types of raw material what we are going to use, that also matters. For example, few products need only one kind of raw material. For that, control required is very less. But few products need hell lot of raw materials. For that, lot of control is required. So based on raw material requirement also, your cost accounting system decision depends. Organization structure, how your organization structure is, there are different kind of structures. No, divisional structure, functional structure, hourglass, so many structures are there. Based on your structure to structure, the requirement changes. And external factors like what are the government rules and all. I told no, you need to do the cost accounting if you exceed some turnover, let's say 25 crore. And if you exceed 35 crore, you have to get your books audited also. Now, those are the external factors. To help that external factors also, your cost accounting should have enough information. Okay, sir. So all these are the benefits only, sir. So cost accounting don't have any disadvantages? Of course it has. What is it? It is expensive process. You will be already having the accounting team with you. Now again, if you want to put one more team into picture, don't you think it's expensive? It is expensive. So you are installing the cost accounting system is a very, very, very expensive process. And result shown by the financial accounting and cost accounting, almost all the time it won't match, because financial accounts is based on the actual figures. Majority of the cost accounting is based on the absorbed figures, budgeted figures. Okay. And also notional expenses, notional things, financial account won't consider. Financial account considers only and only which is actually incurred. But when it comes to cost accounting, for decision making purpose, we consider the notional figures also. Got it? And organization to organization, the cost accounting items, the treatment will differ. For example, one organization might treat administrative expense as part of cost of production. The other organization might treat administrative overhead as a part of selling and distribution, part of cost of sales. So there is no integrity as such. So it depends from organization to organization. Few authors also gives the different opinion for treatment of cost items. For example, few will tell, boss, interest should not be form part of your cost of sales. Few will tell, sir, if the interest is on the borrowed fund, it should be forming part of your cost of sales. So it depends from organization to organization, person to person. So there is no hard and fast rule as such. So these are the certain demerits. Okay, sir, What is the difference between the financial accounting and the cost accounting? Guys, financial accounting gives information only and only relating to financial aspects, whereas cost accounting is relating to cost incurred. Whereas your financial considers everything which is actually incurred, cost considers actually incurred as well as other things as such. Whereas your management accounting, cost accounting is relating to financial amounts only, like only monetary aspects, whereas your management accounting considers those monetary things plus qualitative in nature. Those monetary things plus qualitative in nature. For example, I will tell one simple thing. Let's say morning, let's say you have two options. Option number one, sir, I will come by cab. Okay, cab, let's say it will cost me 300 rupees. No sir, I will come by bus, but bus will cost me 250 rupees. Now as per costing, we will consider only these two figures. Cab will cost me 300, bus will cost me 250. Where I will go? Bus. Correct? But sir, bus will take 3 hours, cab will take 2 hours. Qualitative information. Now based on my time availability, I am going to take a car. If I want to reach there by 2 hours, I will prefer cab over bus. Sir, you are paying extra, sir. Fine. I am going to earn more there. Getting it? So always remember, management for decision making, they will not only consider the cost information, along with the costing information, they will also use the qualitative information. Whereas cost accounting is basically quantitative, management accounting is both quantitative as well as qualitative. Guys, this is also important. That is comparison between cost accounting, financial accounting, cost accounting, management accounting, financial accounting. Before going to exam, go through those things once. Okay. Few important terms are there. I already told you what is the meaning of cost. Cost is nothing but a expenditure attributable or expenditure incurred on a particular product, that is goods or service. Whereas few cost information they have given, like historical cost. What do you mean by historical cost, guys? Actual cost, what is already incurred. Whereas out of pocket cost is also one more term. What do you mean by out of pocket cost? Actually we are paying it. Out of pocket cost is actually we are paying it. For example, I bought a loan from you. I have to pay you the interest or no? I have to pay the interest or no? I have to pay the interest. But I bought money from the proprietor. And we decided interest on capital. That is, our proprietor is blocking money. So the proprietor deserves the interest. Now, whether do we really pay that interest or we will consider only for the decision making? Only for the decision making. Now, that is, guys, your first one is out of pocket cost, where the money outflow is really there. Second one is not a out of pocket cost. That is, what do you mean by economic cost, guys? Also known as opportunity cost. That is, instead of selecting one alternative, you selected the other alternative. Now, because of not selecting the next best alternative, what you are going to lose? That is your opportunity cost. Now, let's say for this 20 hours, I have a costing marathon. Okay. So, for that, they are going to pay me some X amount. Instead of taking this costing marathon, I had one more option. Okay. Something else. Let's say one normal fast track class. I would have spent my time there. There they would have paid me some X amount. For example, for this costing batch, let's say they are paying me 10 rupees. There they would have paid me 8 rupees. Now, what I am losing there? 8 rupees because selecting this. That is your opportunity cost. That is the amount given up, the benefit given up for by not selecting the next best alternative. That is your opportunity cost. Sunk cost means done, irrelevant cost, because we already incurred it. It has nothing to do with the decision making. For example, we already set up a class. Now to run the class or not to run the class, it has nothing to do. We already incurred. Now to run the class or not to run the class, what matters? To run the class extra, how much I have to spend. Now the extra what I have to spend for that batch. For example, this classroom is already available. Now to run this marathon batch, whether we should run the marathon, whether we should not run the marathon, that depends upon your number of students attends and what we should pay to faculty, whether that is beneficial or no. They don't consider whether this classroom cost I should include or no. No. Why? Whether I run the marathon, whether I don't run the marathon, what this classroom has to do, I have already incurred it now. I am already paying the rent now. That is irrelevant cost. Sunk cost, already done, already committed. Whereas relevant cost is to take the decision which is relevant. Now, for example, number of students attended 50. Each and everyone paid, let's say 2000 rupees, 1 lakh rupees. Faculty cost, if it is less than 1 lakh rupees, run the batch. Faculty cost is more than 1 lakh rupees, don't run the batch. Simple. Now, the faculty cost is there, no? That is relevant. Sir, we are paying a rent for this building. Did you take it for this batch? No. General in nature, irrelevant cost, sunk cost. Got it? Next is avoidable cost and unavoidable cost. Cost which you can avoid. That is your avoidable cost. Cost which you cannot avoid at all. Unavoidable cost. For example, let's say you are having one transportation business. Now in the transportation business, you got a penalty for signal jump. Avoidable, unavoidable? Avoidable. You would have avoided it. Yearly you have to pay the road tax, yellow board. Now, can you avoid it? You cannot avoid it. Now that is unavoidable cost. What do you mean by imputed cost? Sir, imputed cost is notional cost. That is not actually a cost, but for decision making it will be considered. For example, this building I own. Now, here I can give it as a rent, give it for a rent, or I can use it for my own. If I use it for my own, I am leaving the rent there. Basically, opportunity cost. That itself is your imputed cost. And controllable cost and non-controllable cost. Cost which is within the control of the managers and management. That is controllable cost. And which the management and managers cannot control at all. Uncontrollable cost. What do you mean by cost object, guys? Cost object is nothing but an item for which the cost should be determined. For example, here for this marathon batch, now this batch is the cost object. That is, if I want to find out a cost for this batch, now this batch itself is a cost object. Regular batch itself is a cost object. Cost object is nothing but an item for which a separate measurement of the cost is required. Separate measurement of the cost is required. That is your cost object. Cost unit means what, sir? Now I found out, let's say the cost of running the marathon batch for this batch is around 1 lakh. Now when the cost is 1 lakh, let's say number of students are 50, per student it is 2000. Now the cost we divide by some unit, no. In this case per student. Now that is cost unit. That is cost unit. That is device for the purpose of breaking up or separating a cost into smaller subdivision. It is a device for break up the cost into smaller subdivision. That is your cost unit. For example, let's say you prepared a biryani. Now biryani, how will you sell? Number of plates. Now that is your cost unit. You can't ascertain the cost for plate of biryani, guys. In the beginning, you are going to do for this much kg of rice, this much kg of chicken and all. Now that biryani, that cost, now that is cost object. And now the cost object cost is divided into number of pieces, sorry, plates. Now that is cost unit. Got it? So, composite cost unit means what, sir? Not only one cost unit will be there. Here, two or more cost unit will be there. For example, now we are running a transportation business, bus. Now, or let's say share auto. Okay, I am a driver of share auto. Now, guys, can I consider only number of kilometers I travel for ascertainment of cost? No. I will consider the passengers in auto also, because from each and every one I will collect the money. Now, I will consider passenger kilometer, not number of passengers, not kilometers. I will consider passenger kilometer. Hotel, I am running a hotel business. Am I going to consider only and only number of days? Number of rooms also I will consider, because I will charge per room per day. I am running a hospital. Will I consider only number of patients? No. Number of patients, they were there in my hospital for how many days? Patient days, or we call it as bed days. So number of beds also we consider, number of days also we consider. That is two units we are considering to ascertain the cost. Now that kind of units are known as composite cost units. Cost center is what, sir? Before allocating the cost to different things, we are considering the cost for this division is how much. For example, before allocating CA batch how much, CS batch how much, CMA batch how much, ACCA batch how much, ArivuPro is allocating cost to Bangalore branch how much, Chennai branch how much, Coimbatore branch how much, one more Bangalore branch how much. Now Chennai, Coimbatore, Koramangala, Malleshwaram, all these are the cost centers. Before allocating a cost to the cost units, will bring it together, no? That is your cost centers. What do you mean by responsibility center, sir? It is a division of organization where the different certain managers will be held responsible. For example, responsibility center could be divided into cost center, revenue center, profit center, investment center. Cost center means what, sir? The center for which the manager is there, no? That manager is responsible for incurrence of the cost. The manager is responsible for incurrence of cost. For example, if you take ArivuPro. Now, in the ArivuPro, we have a faculty division. They are least concerned about how many students should take admission, how much fees we should charge, etc. Their work is very, very, very simple. I mean, simple in the sense, their work is to make sure to bring the right faculty at the right cost. Cost should not exceed. Got it? Now that is what? Cost center. Okay. So those managers are responsible for incurrence of the cost. HR manager, their work is to what? Get a right person at right place. Are they concerned about how much sales our company is doing? No. They will be given a target. Your HR cost should be so much. They should make sure the cost is well within that. Production department, their work is what? To make sure so much production is done at the so much cost, not more than this one. Got it? So that is your cost center. Whereas revenue center, their responsibility is to raise the revenue, bring the revenue to the organization. They are least concerned about how much cost we are incurring. For example, sales team. The sales team target is to make sure so many students take the admission. Now that is revenue center. That is your revenue center. Got it? Where the manager is responsible for generating the revenue. They are least concerned about the cost. Whereas cost manager is least concerned about the revenue. Now there will be few departments or the few part of the organization where they will be responsible for revenue as well as cost. That department or that center we call it as a profit center. That center we call it as a profit center. For example, here in ArivuPro, Chennai branch head. The Chennai branch head should make sure the cost is less, at the same time revenue is more. Now the Chennai branch head is there. No, that person is your responsible for your profit center. Got it? Also investment center, where the managers will be held responsible for generating a revenue, for generating a so much revenue. That is your investment center. I mean, not return, not revenue, returns. For example, I will give you 1 crore means I expect 20 lakh rupees. So you should make sure you invest in such a place that where you will be able to achieve that target of returns. That is, in an investment center, the managers will be held responsible for achieving the return on investment. Achieving the return on investment. That is your investment center. What do you mean by cost of production, sir? Whatever the cost we incur to produce a product, that is your cost of production. Conversion cost means what, sir? Raw material to convert it into finished goods. Whatever the cost we incurred, that is known as conversion cost. Whether conversion cost includes the material cost? No. To convert the material into finished goods, which means material cost is already incurred. Raw material cost is already incurred. So you can tell it as total cost of production other than the material cost is a conversion cost. Basically your labor, direct expense, production overhead. Labor, direct expense, production overhead, that we call it as what, guys? Conversion cost. Overhead cost means what, sir? All the indirect cost together we call it as a overheads cost. That overhead could be production overhead, that is relating to production department. Administration overhead relating to administration. Again, that administration could be relating to production or relating to general administration. If it is relating to production, it will form part of cost of production. If it is not relating to production, general in nature, that will form part of your cost of sales. Distribution overhead, that is relating to distribution, all the indirect expenses, selling overhead and marketing overhead. Okay. Cost allocation, cost apportionment, cost absorption, under absorption, over absorption, I am going to tell you in the overheads unit. I am going to tell you in the overheads unit. Now, sir, what are the different elements of the cost? Guys, elements of the cost, you can divide it on a different basis. You can divide it on a different basis. That is, generally we'll divide into this: direct cost and indirect cost. Direct cost and indirect cost. Direct cost means whatever the cost you can attribute to the final product and which you can trace it in the final product. Attribute to the final product, trace it in the final product, that is your direct cost. Which you cannot trace it in the final product, that is indirect cost. Okay, that I will show it in the classification of cost. See there, cost could be classified on different basis: nature or element, traceability, functions, nature of behavior, and based on the process involved. First, nature of expense. Guys, nature of expense, cost could be divided into 3: material cost, employee cost, other expenses. Material cost, employee cost, other expenses. Material cost means cost of the material involved in the production. Employee cost means cost of employee involved during that period. Other expense means anything expense incurred other than your material cost and labor cost. Any other expenses incurred other than your material and labor cost, that is known as other expense. Now guys, material cost could be divided into 2: direct material cost, indirect material cost. Labor cost is direct material cost, indirect material cost. Overhead is, sorry, other expense is direct expense, indirect expense. Now, direct material, direct labor and direct expense means these are the cost of material, labor as well as expense which you can trace it in the final product or which you can directly attribute it to the final product. Those expenses are known as direct expenses. That is direct material, direct labor, direct expenses. By the way, direct material, direct labor, direct expense, together we call it as a prime cost. Together we call it as a prime cost. Clear? Whereas indirect material, indirect labor, indirect expense are those expenses which you cannot trace it directly in the final product. I am not telling that is not required. Of course that is required, but you cannot trace it in the final product directly. Now those are your overheads. Those are your overheads. That is indirect material, indirect labor, indirect expense. Together we call it as a overheads. Now overheads could be production overhead. That is all the indirect material, indirect labor, indirect expense involved in the production process. Production overhead, administration overhead, selling and distribution overhead, research and development overhead. Like that, in the different functions when it is involved, we will give that particular name. Whereas traceability, indirect cost, direct cost which can be traced in the final product is direct cost, which you cannot trace it in the final product is indirect cost. By functions, again production cost, whatever involved in relating to production, selling cost relating to sales, distribution cost relating to distribution, research and development relating to research and development. Like that, based on the functions, if you divide the cost, that is based on the functions, nature of the behavior, that is the cost behavior, we can divide it to fixed cost, variable cost, semi-variable cost. Fixed cost, variable cost, semi-variable cost. Now, what do you mean by fixed cost, sir? Fixed cost means cost which won't vary along with the units produced. Whether you produce 10 units, whether you produce 100 units, cost remains same. Provided, guys, that is up to some extent. Not that that itself is the complete, like whether you produce 1 unit or 1 lakh units. No. For example, my capacity is 10,000 units. Now you produce 1 unit or 10,000 units, rent I have to pay is so much only. That doesn't mean that if I want to produce 1 lakh units also cost will be same. No. I have to increase my factory. For example, this classroom capacity is 200 students, let's say. Now, whether 1 student comes or whether 200 students come, rent is same. However, if I want to accommodate 250 students, whether rent will remain same? No, I have to take 1 more room for a rent. So always try to understand up to some extent where the cost will be fixed. It won't vary. Now that cost is a fixed cost. Whereas where the cost will vary along with the number of units produced, more you produce, more the cost, less you produce, less the cost. That is your variable cost. That is your variable cost. And your semi-variable cost means cost will vary but not in the same proportion. It is not fixed also. It is not variable also. See, I will tell the feature here. Let's say right now 10 students are there. Okay, 100 students are there. 10 students are there, 100 students are there. Rent. Let's say for 10 students it is 1 lakh. For 100 students also it is 1 lakh. Now guys, this is your fixed cost. Irrespective of number of students, that is irrespective of units, cost remains same. That is your fixed cost. Whether it is 10 student or whether it is 100 student. But the best feature about fixed cost is what you know. Per student, cost keeps on reducing when the number of students keeps on increasing. That is 1 lakh for 10 students, which means per student 10,000. But if it is 1 lakh for 100 student, per student it is 1000. That is, total fixed cost won't change. Fixed cost per unit keeps on reducing. Fixed cost keeps on reducing. Now. Try to understand. Faculty cost. Let's say for faculties, let's say per student we are paying 2000 rupees. Now here it is rupees 20,000. Here it will be rupees 2 lakhs. There it will be rupees 20,000. There it will be rupees 2 lakh. Now this is your variable cost. Faculty cost is your variable cost. Why, sir? It is not same. And best part about variable cost is per unit is same. Total is changing, but per unit it is 2000 only. Per unit it is 2000 only. Now that is your variable cost. That is your variable cost. Got it? So variable cost feature is what, guys? Total will change along with the units produced change. Changes in units produced. However, per unit will remain same. Whereas semi-variable cost, let's say sales team, for them commission is also there based on the number of students takes the admission, let's say, and also they will get a regular salary also. Now let's say when the number of students were 10 students, the cost of the sales team was 1 lakh. Now the number of students went to 100, the cost of the sales team became 4 lakh. Now try to understand. Is it varying? Total is varying. So it is not a fixed. It is not a fixed. Now we have to ascertain whether it is a variable or semi-variable. Guys, 10 students, 1 lakh means per student 10,000. If the same was variable, then for 100 students, don't you think it should be 10 lakh? But it is not 10 lakh. It is 4 lakh, which means per unit it is keeping on changing. Also, total is also changing. Now, this is your semi-variable cost. Now, sir, semi-variable cost is there. We want to ascertain for 50 students how much. For 50 students, cost will be how much? Guys, rent remains same. 1 lakh only. Fixed cost is done. 1 lakh only. Faculty cost 2000 per student. So, this will also becomes 1 lakh. Semi-variable cost, what you will do? Now, in this scenarios, what you should do is, you should segregate the semi-variable cost between variable and fixed. Can I tell that? Can I tell that when 10 students were there, 1 lakh was my cost. When 100 students, 4 lakh is my cost. Can I simply tell that 3 lakh increase what is happening in that no fixed cost is involved. Only and only variable is involved. Can I tell it or no? Why? Yes. Why, sir? Because in that 1 lakh only fixed cost is there. Whether it is 10 students or 100 students. If the fixed cost is 50, that remains 50 only, no? Which means here the cost is changing means, can I tell that as a total variable cost? Can I tell that as a total variable cost? So 3 lakh is my total variable cost. To produce how many units? Or to for how many students? 90 students. So per student how much? 3 lakh by 90. Sorry? 3,333.33. Now guys, this is nothing but your variable cost per unit. This is nothing but your variable cost per unit. Now, once you found the variable cost per unit, taking the either the level 1 or level 2, that is either by taking the information of 10 students or 100 students, we can ascertain the fixed cost. How, sir? Let's take 10 students. Can I tell total cost is equal to variable cost plus fixed cost? Total cost for 10 students semi-variable is how much? 1 lakh. Can I tell variable cost is 10 students, for each one of them it is 3,333 plus fixed cost. So can I tell that fixed cost is nothing but rupees 66,667. Can I tell this or no? No, I mean 0.33 will come, so it will be 33,333. Okay. Now, can I tell my fixed cost is 66,667? Sir, can you prove it? Yes. 100 students, how much will be my cost? 3,33,333. What is my total cost? 4 lakh. So what is the difference? 66,667. So my fixed cost is not changing, but variable cost is not per unit, total. Now this is how you are going to segregate the variable cost and the fixed cost. How to segregate, sir? Very simple, guys. Change in total cost. Change in total cost divided by change in units. Change in total cost divided by change in units will give you variable cost per unit. That is change in total cost. That will be due to variable. My total cost in the first scenario was 1 lakh. Second scenario was 4 lakh. That's how we got 3 lakh. So change in total cost, that is 1 lakh and 4 lakh difference, 3 lakh divided by change in units, that is 10 units and 100 units, 90. Can I tell that? That is nothing but a total cost involved or variable cost involved to produce 90 extra units. So that is the one. Now we will get a variable cost per unit. Now if you apply variable cost per unit into number of units at any level, you will get the total variable cost. From the total cost, if you reduce the total variable cost, you will get the fixed cost. Now you know variable cost per unit, you know fixed cost per unit. Now for 50 students, what we should do, sir? 3,333.33 into 50 is my variable cost and 66,667 is my fixed cost. This will be my total cost for 50 students for a semi-variable cost. This is how we are going to ascertain in case of semi-variable cost. That is very important steps. Keep this thing in mind. How to find out a variable cost per unit? Change in cost divided by change in unit. You will get the variable cost per unit that you can apply to any level. You will find out the total variable cost. From the total cost of that level, if you reduce the total variable cost, you will find out a fixed cost. Now once you know the fixed cost, you are going to apply to that particular level. That is fixed cost plus variable cost for that particular level. By the nature of the production operation, basically we have different cost methods. No, that itself is that this thing. See here, linear, high, low, least square, all those nonsense things are given. Don't worry, you go for only one method. That is equation method. Got it? Classification by nature of production or operation, guys. Job cost is there, that is ascertaining the cost relating to that particular job. Batch cost, that is to that particular batch. For that particular contract is contract cost, where for that particular process we used to calculate, no, for process A how much, process B how much, process C how much. That is your process. And when you produce the different products but using the same process with the same raw materials, same production process, there the cost which is involved together till the point of split off, that we call it as joint cost. That we call it as joint cost. Faculties in here will cost? I don't know. No idea how they cost charges. I am working for free. That is all about. Basically, if you pay to faculty on a batch basis, that is batch cost. If you ascertain the cost of the faculty for a whole batch, that is batch cost. Now, if you give the faculty, for example, this marathon is a job. So, if you ascertain the cost of this marathon, that is your cost of the job cost. If you give the contract to the faculty for next 2 years, these many hours you have to book, these many batches you have to take. Now, that is your contract cost. How the faculty charges, I don't know. Ask Karthik sir, he will tell. Done. With that, our basic chapters are done. From these many things, whatever we discussed so far, you can expect up like 5 to 7 marks in the theory and MCQs. Got it? Now, we are going to cost sheet. Before that, guys, we'll take a break of 5 minutes, quick 5 minutes break, and 4:10 we are starting. Okay? Yes. Now, we'll be starting discussion on preparation of cost sheet and ascertainment of cost. Once again, A category chapter or A category unit you can tell, where you can expect around 7 marks. Okay. So, that is preparation of cost sheet and ascertainment of the cost. Now, cost sheet, marathon, exactly. I had food and cake. So, it is a statement of cost which shows various components of total cost for a particular product or for a whole cost center as a whole, and it will also might contain the previous data for comparison. Basically, cost sheet is a statement where we will systematically show all the cost involved in the product, and for a comparison purpose, sometimes we might show the previous period's data also. That is your cost sheet. Now, sir, why the cost sheet is required, or what are the objectives, what are the importance? Guys, using cost sheet only we can ascertain the cost per unit. Using cost sheet only we can ascertain the selling price, fix the selling price. Using that only we can compare the cost. Using that only we can make the decision, and using that only we can compare intra-firm and inter-firm. And sir, cost sheet is divided into how many parts? Very, very important. Cost sheet is divided into prime cost, gross works cost, cost of production, cost of goods available for sale, cost of goods sold, cost of sales. What is it? Come on, guys. Prime cost, gross factory cost, also known as gross works cost, cost of production, cost of goods available for sale, cost of goods sold, cost of sales. Now, sir, what do you mean by prime cost? As I already told you, direct material, direct labor, direct expense, together we call it as a prime cost. Direct material, direct labor, direct expense, together we call it as a prime cost. Whereas, to the prime cost, if we add the factory overhead, if we add the works overhead, what we get is a gross works cost. What we get is a gross works cost. Now, to that gross works cost, if we add the opening stock of WIP minus closing stock of WIP, because last year's WIP, work in process, is getting over this time. This year's work in process is not yet over, so we can't consider it as cost of this year, so we are going to reduce from the cost. Last year's is completed this year, so add it. This year's is not completed in this year, next year you transfer. That is, add opening WIP minus closing WIP, you will get a net works cost or a works cost in simple. For the works cost, if you add the administration overhead which is relating to production. Sir, how to determine administration which is relating to production? Guys, in CA course it's different, in CMA course it's different. In CA course, what it is, sir? Admin overhead related to production. If they give, then it is related to production. Otherwise, it is general in nature. However, in CMA course, if they give administration overhead, Kali administration overhead, not related to production and all, still it is related to production. If they give administration overhead, which is general in nature, then it is general in nature. If they just give administration overhead, treat it as administration overhead related to production. Treat it as administration overhead related to production. So For the works cost, for the factory cost, if we add the administration overhead related to production, plus if any research and development overhead is incurred which is relating to production, that also you should add. Quality control cost if any, that also you should add. Packing cost will be there, no, that is two type of packing cost will be there. Primary packing cost, secondary packing cost. Primary packing cost, secondary priming cost. Primary packing cost means to keep the product in a good condition. Basic packing will be there, no, that is your primary packing, whereas secondary packing is related to marketing of that particular product. Secondary will be relating to marketing of the product. Primary will be relating to keeping the product in a good condition. For example, toothpaste tube will be there, no, within which the toothpaste will be there. Now that is primary packing, because without tube, how you can provide a paste? How you can keep it in a good form? Over and above that, one more box they will give, no, paper box. That is for a marketing purpose. That is secondary packing. That is secondary packing. Dairy milk. The gold and the silver sheet, what they give? Gold sheet. Yes, KitKat is silver, no? KitKat silver. Now, the gold sheet, what they keep? That is to keep the chocolate in a good condition. Primary packing. Over and above that big dairy milk they will give, no? Sir, how big, sir? Depends on your friend. How rich that person is. Richer he is or she is, bigger the chocolate, good, smaller the chocolate. Now listen. Now, the outer cover is there, no? Big dairy milk and all. That is marketing purpose. That is your secondary packing. Sir, but that 5 rupee, 10 rupees dairy milk will be there, no, sir? Also 20 rupees dairy milk. Yes. In that, also crackles. Now, less than 100 rupees dairy milk will be there, no, sir? Inside that, the gold sheet won't come at all. It will come in which one? Hey, 20 rupees also it won't come unless and until it is silk. And silk it will come. Wherever the hard dairy milk is there it won't come. Now, in that, only one cover will be there. Which cover? Outer cover. Now, whether it is primary or secondary? Guys, primary also, secondary also. What do you mean by that, sir? That only is there to keep the product in a good condition. At the same time, that only is there to market also. Now try to understand. In that scenario, what you should do? Over and above that, paint to, print to, etc. will be there, no? Dairy milk, blue color, gold color, silver color, crackles, all those things. That cost what they incurred, that is your selling and distribution overhead. Whereas, just for that packaging, plain packet, what they use, that is primary packaging. So, you are going to divide the cost of that single packet into primary and secondary. Now, primary is there to keep the product in a good condition. So, take it as a part of your cost of production. Secondary is there to marketing purpose. So, treat it as a selling and distribution overhead. Also, sir, at the time of production, there might be few scrap. Yes, we might recover some amount from that scrap sale. That what we should do, sir, reduce it from the cost before arriving at a cost of production. That is, if any scrap recovery, defective recovery, all those things are there, that what you should do, reduce it from the scrap. Sir, what if they give, there is some defective, to make the defective into proper this thing, we incur 10 rupees per unit. Then, sir, then add it as your factory overhead. To make the defective product into proper product, if you incur any expense, that is expense, not the recovery, add it as a cost. Where we should add it, sir? Factory overhead. Treat it as a factory overhead. Got it? Sir, what if the raw material is spoiled and we recovered some money? Don't bring it till here. While arriving at direct material cost, no, there only you reduce it. There only you reduce it. So, that I will tell anyhow, it is going to come again. So, for the time being, so for the works cost, that is net works cost, net factory cost, if you add the administration overhead which is related to production, research and development, quality control, primary packing, minus scrap recovery, you will arrive at a cost of production. Now, you got to know how much is your cost of production. Now, cost per unit produced, how to ascertain, sir? Cost of production divided by units produced. You will get to know how much is cost per unit this particular period. For that, if I add the cost of opening stock, I will get to know how much is the cost available for sale during the period. Goods available for sale, no. What is the cost of that? Because how much goods will be available for sale? What I already had in the beginning plus what I produced during the period. This will be available for sale, no. So, for the cost of production, if I add the cost of opening stock, I will arrive at a cost of goods available for sale minus cost of closing stock. How to arrive at closing stock cost, sir? Closing stock unit they will give, let's say, they don't give how much it is valued at. That time what you should do, you know cost of production, you know units produced, cost of production divided by units produced, don't you think you will get the cost per unit? Total cost of production divided by cost of units, number of units produced, you will get the cost per unit. Now multiply it with the closing stock, you will arrive at a cost of closing stock. Then you will arrive at cost of goods sold. For that, if you add the administration overhead, which is general in nature, selling and distribution overhead, then you will arrive at a cost of sales. For that cost of sales, if you add a profit, you will arrive at a sales. For that cost of sales, if you add a profit, you will arrive at a sales. Got it? Now, sir, what is prime cost? Direct material, direct labor, direct expense. To the prime cost, if you add the factory overhead, will arrive at a gross factory cost. For that, add the opening WIP minus closing WIP will arrive at works cost or a factory cost. Now, for that factory, always remember factory cost is different, factory overhead is different. Now, to the factory cost, if we add the cost of administration overhead which is relating to production, R&D overhead, primary packing cost, quality control, minus scrap recovery, it will be cost of production. Hey, by the way, guys, always remember quality control and pollution control are not same. Pollution control is your factory overhead. Pollution control is your factory overhead. Quality control is your cost of production. Pollution control form part of your factory overhead. Got it? Now these things, and also will arrive at a cost of production. For that, add the opening stock minus closing stock, you will arrive at cost of goods sold. For that, add administration overhead which is general in nature and selling and distribution overhead, you will arrive at cost of sales. For that, if you add a profit, you will arrive at a sales. If the administration overhead, I will come to that. Material, direct material means what, sir? Direct material consumed during the period, not purchased, it is consumed. How to ascertain how much we consumed, sir? How much opening we had plus how much we purchased. How much opening we had, how much we purchased. Don't you think that is the direct material available for consumption? Don't you think that is the direct material available for consumption? Now, whatever the direct material available for consumption, from that, if I reduce closing stock, don't you think I will arrive at direct material consumed? That is opening stock of raw material plus purchases minus closing stock. Now the question comes, sir, purchase cost includes what and all? See, I am not going to tell the same thing again in the material chapter. Now only remember what and all should be included in the cost of material. what should not be? First, what you pay to purchase, cost of purchase, that should be there. That should be there. Plus, if at all you already paid a tax, refund or a tax credit is available, will it be your expense? For example, I paid a GST now. Let's say ArivuPro people, okay, I gave a lectures to this ArivuPro. Now ArivuPro people will pay me a money along with the GST. Correct? Now I collected GST. Think from the point of view of ArivuPro. So they paid me. So you think it is an expense, but they will collect GST from you. Yes. Do you think whatever they collected from you, they will deposit it to government? No. ITC, input tax credit, that is, let's say they collect 1 crore from you guys as a GST. Let's say they paid 60 lakh rupees as a input GST to get the services, product, etc. Now that 40 lakh rupees only they will pay to government. 60 lakh rupees what they already spent, they will keep it with themselves. Now my question is that 60 lakh now really ArivuPro's expense? It is not a cost at all. Why? They spent it, again they recovered it. So tax you should check whether input tax credit is available, input tax credit is not available. If the input tax credit or refund is available, that is not a cost. If the input tax credit or refund is not available, that is cost. So if it is already added in the cost, input tax credit is available, reduce it from the cost. Not added in the cost, ignore it. Sir, not added in the cost, sir, but input tax credit is not available, add it to the cost. Sir, added to the cost, sir, input tax credit is not available, already added, no, ignore. Basically you should treat it as a cost. When the ITC is not available. When the ITC is available, ignore. Don't treat it as cost. If at all you already treated it as cost, reduce it from the cost. Keep that thing in mind. Now, sir, RCMA, FCM, reverse charge mechanism or forward charge mechanism, whatever the hell it is, end of the day you only have to pay. So it doesn't matter whether it is RCM or FCM, whether ITC is available or ITC is not available, only so much. RCM means instead of you paying to supplier, you only paying to government. FCM means you paying to supplier, supplier paying to government. End of the day you are paying, no? So whether it's RCM or FCM, that is not going to change the fact. So that is not considered to decide whether it is forming part of cost or no. What should be considered? ITC available or no. Now, if any discount is there, which discount? Trade discount, that is at the time of purchase, for purchasing at bulk. If they give us the trade discount or quantity discount, no, that should be reduced from the total cost, not the cash discount. Cash discount is not given for the sake of purchasers. That has nothing to do with the purchase cost of material. That is relating to the prompt payment. Cash discount is there, ignore. Only trade discount is there, then only reduce it from the total cost. And whatever you incur to bring the product into from the supplier place till our place into current position, into current condition, that is whatever the expenses incurred till bringing the inventory into our go down, transportation, freight, your loading, unloading, your insurance, that is transit insurance, not go down insurance, transit insurance, transportation insurance, all these should be forming part of your total cost of purchases. Also guys, cost of containers. But when doing the cost of containers, you should take only net amount. Why, sir? Sometimes cost of containers are returnable in nature. Cost of container is returnable in nature. For example, let's say you are a soft drink seller. Now Coca-Cola and all, they will send that containers, no? Do you think that will be left with you only? No, they will recover it. But when they send it for the first time, don't you think they will charge you the money? For example, Bisleri water cans if you get, first time they will take 200 rupees. 100 rupees for can, 100 rupees for water. Next time onwards, they will take that can, give the new can. That time they will take only 100 rupees. Why? Your deposit is already there with them, 100 rupees. Now, once you discontinue that, they are going to give back that 100 rupees, or let's say they are going to give back that 80 rupees, which means here the containers are returnable in nature. Sometimes containers are non-returnable in nature, like egg crates and all, those are non-returnable. In that scenario, what we should do, sir? If it is non-returnable, whatever the cost you incurred for containers, add it to cost of purchase completely. For example, if I incurred 100 rupees, add it as 100 rupees. No, sir. No, sir. They are going to give us money back. For example, now they collected 100, sir, I agree. But once we return our containers, they are going to give back 80 rupees. In that scenario, the cost will be just 20 rupees. You should take only the cost of net containers. Clear? And if at all any scrap is there, from that scrap, if you are recovering any raw materials, that also you should reduce. That also you should reduce. Minus scrap value of raw material recovered. Got it? Now, sir, what do you mean by employee cost, sir? Direct employee cost, direct labor. Factory workers will be there, no? Which are direct in nature. All those costs, whatever you spend on them, everything is a direct expense. Sir, what is paid during the period or what, sir? No. What is for the period? Whether you paid during the last year or next year. Whether it's outstanding or paid during the last year only. Advance only. End of the day, what we incurred matters. Accrual concept. That is paid during the period plus whatever was there paid earlier, last year, plus, because that is of this year only. Yes, advance, paid in advance, plus outstanding for the period, which is already incurred but not yet paid, minus what we paid for the next period. Basically, we should ascertain how much is for the period, not how much is paid during the period, how much is for the period. And direct expenses, guys, there is a code word. There is a code word, trash DP. That you remember the story? Yes? Nibani B. If Nibani B fights, madam, what they will do? Nibba will put the story. Nibbi will trash the DP. She will take out her DP. Correct? So that whole world will get to know that this lady fought with her boyfriend. Now, try to understand what they will do. Trash their DP. Trash means what, sir? T means technical know-how. If you pay anything to the technical know-how. Royalty, if you pay any royalty on production. A, that is amortization of patent, etc. Yes, sir. If you spend on any specific software for that particular work. H, hiring charges for any equipment. D, drawings and designs for that particular product. P, power, fuel and steam. Power, fuel and steam. P is technical know-how. R is royalty on production. A is amortization of patent, fixtures, patent. S is specific software. H is higher charges of the specific equipment. D is drawings and designs, not drawing and design department, that is overhead. Drawings and designs. P is power, fuel and that is your direct expense. Whereas factory overhead is Adi is DSLR. Adi is DSLR. A is what, sir? Amortization of jigs, fixtures, tools, all those things. D is what, sir? Depreciation of whatever is there in the factory. Machinery, building, all those things. Depreciation of that. I is what, sir? Insurance. Insurance on your raw material. Sir, not the transportation insurance. Insurance which happens in the godown. Godown insurance on raw material, building, machinery, all those things. That to insurance. Adi is, one more is indirect employee cost. Indirect employee cost. Factory employees only, but it is indirect. Like your foreman, supervisor, all those things. Sir, directors, if they are relating to production, directors, managers, if it comes, that is administration. Treat it as administration overhead related to production. Always remember, manager's salary is not a overhead. Manager's salary is overhead, but not relating to factory. That is relating to production, but administration. Managers administers. So treat it as an administration overhead, not the factory overhead. Managers and directors salary. Done. Adi, I is done, no? Yes. Yes is your service department cost. Service department cost. D is drawing and design department overhead, not the drawing and design cost. That is direct expense. Drawing and design department cost. One more S is your stores, spares, etc. what you use. L is lease, rentals, etc. Rent, lease, etc. R is repairs and maintenance, which is happening inside a factory. Clear? Admin overhead, guys. It could be related to production. It could be general in nature. If it is related to production, consider under a cost of production. If it is general in nature, consider under cost of sales. If the hint is given in question that it is relating to general, then treat it as relating to general. Nothing is given, then in that scenario, treat it as a production related. Scrap. Scrap recovery of raw material could be there. Scrap recovery of the finished goods could be there. If the scrap recovery is there relating to the raw material, reduce it from the cost of direct material. Whereas if the scrap recovery is relating to production, then reduce it from the cost of production. Hope you remember that. Packing cost. Packing cost could be primary or secondary. Primary cost, consider it under cost of production. Secondary cost, treat it as selling and distribution overhead. Interest on borrowings, don't consider. Pure financial items like dividend, bad debt. Bad debt also sometimes you can treat it as your cost of sales. That depends on you. You have to write a assumption income. Your donations, income tax, all these things you should ignore. Don't consider those pure financial items in the cost sheet. So you will get here. Sir, per unit how to check, sir? Guys, till the cost of production, for per unit column, you should consider number of units produced. In the cost sheet, till the cost of production, per unit, you should consider the number of units produced. For opening stock, you should consider opening stock units. For closing stock, you should consider closing stock units. And after cost of goods sold, you will consider units sold. Units sold. Till the COP it is number of units produced. After COP, for opening stock, closing stock, closing stock. COGS onwards, units sold. Units sold. This is all your cost sheet. This is all about your cost sheet. Shall we quickly see whatever the question is there in the your study material? Padapat. Yes. Guys, sales for the year they have given. Inventories in the beginning, they have given finished goods inventory, WIP inventory, purchase of the material for the year, that is 1,10,000. Beginning of the year 3,000 was there, 4,000 was there. Direct labor they have given, factory overhead, 60% of the direct labor cost. Inventories at the end they have given, closing inventories. Other expenses are selling and administration. First, we'll consider the direct material consumed. Direct material consumed is what, guys? Opening stock of raw material, that is 3000 plus purchases, that is 1,10,000 minus closing stock, that is 4,000. So 1,03,000 plus 4,000, 1,10,000 plus 3,000, 1,13,000 minus 4,000, 1,09,000. So direct material is 1,09,000. Next is direct expense. They only have given it as 65,000. Is there a direct labor? Direct expense is there? Not there. So this will give you prime cost. How much is your prime cost, sir? 1,74,000. 1,74,000. Add factory overhead. Factory overhead is 60% of direct labor cost. 65,000 into 60%. 13,000, 13,000, 30,000, 39,000. 39,000. This will give you gross works cost. This will give you gross works cost, which is 2,13,000. For that, add opening stock of WIP minus closing stock of WIP. Opening stock of WIP, they have given it as 4,000 minus closing stock of WIP, they have given it as 6,000. 2,11,000. This is your works cost. This is your works cost. Add administration overhead they have given, and they haven't told whether it is relating to production or relating to general in nature. Then it is treated as relating to production. So administration overhead, that is 5% of sales. That is 27,500 divided by 2. That is around 13,750. 13,750. And they haven't given anything relating to sale of scrap, R&D, etc. Primary packing cost also they haven't given. So this itself will be my cost of production. This itself will be my cost of production. How much will be my cost of production, guys? Come on. 2,24,750. This is my cost of production. For this, if I add a opening stock of finished goods, opening stock of finished goods, they have told it as 7,000 minus closing stock of finished goods. Closing stock of finished goods, they are telling it as 8,000, which means 2,23,750. This is my cost of goods sold. For this, add the selling and distribution overhead, which is 10% of sales, 27,500 will give me cost of sales. How much is my cost of sales? 2,50,000. 2,51,250. For that, add profit, which is basically balancing figure, because I know the sales. Sale is 2,75,000, which means around 23,750 is my profit. 23,750 is my profit. This simple is your cost sheet. Got it? See, here they are using the word works cost for the gross works cost itself. You don't do like that. You use the particular term called gross works cost, net works cost, or a works cost. See here, X provides you the following figures. Direct material is there, direct wages is there, production overhead 25% is variable in it, which means 75% is fixed. Admin overhead 75% is fixed in it, which means 25% is variable. Selling and distribution 2/3 is a fixed. Sales is rupees 125 per unit. For the year 22-23, they are telling that output and sales quantity will increase by 20% by incurring the additional advertisement expense of 45,200. Material price will go up by 10%. Wage rate will go up by 5% along with increase in the overall direct labor efficiency of 12%, which means, what do you mean by direct labor efficiency, sir? Right now, if they are able to produce 100 units, in the same hours, next year they will be producing 112 units. Right now, if they are able to produce 100 units, next year in 10 hours, if they are producing 100 units, next year in the same 10 hours, they will be producing 112 units. And variable overhead will increase by 5%. Fixed production overheads will increase by 33.33. They are asking you, calculate the cost of sales for 2 different years and find out the new selling price if the same amount of profit is to be earned like last year, if the same percentage of profit to sales is to be earned in that year, if the existing percentage of profit to sales is to be increased by 25%, if the profit per unit is 10%, that you leave. First we'll ascertain the cost of sales. Okay. First, guys, direct material. Direct material, now when we are selling 100%, we are incurring 320,000. Correct? But they are telling in future 20% production will increase. If the production increases, guys, if the production increases, don't you think direct material also will increase? That is, for 100, if it is 320,000, they haven't given how many units it is. Have they? Have they given? No. They have just told. Sales they have given a total sales. Here they have given. No. So units we know. Guys, 25 lakh is there. Total sales and selling price is 125. May I know how many units? 20,000 units. 20,000 units. They are telling that next year you can sell 20% more. That is 20,000 into 20% is 4,000. You can sell 4,000 units more. Guys. 320,000 was for 20,000 units. For 1 unit how much? 16? 16 per unit. Now, guys, they are telling material price will go up by 10%, which means it will become 17.6. Always remember, don't directly do this 320 plus 10%. Hey, 320 is direct material for 20,000 units, but it is direct, variable in nature. First, we should compute for 24 how much on that extra 10%. That is basically, guys, rupees 16 plus 10% into 24,000. 4 lakh 22,400. 4 lakh 22,400. Next, direct wages. Direct wages, they are telling rate will go up by 5%. Before that, tell me, how much is per unit? Rupees 40. That is 8 lakh divided by 20,000. 40. Correct? New rate will be 40 plus 5%. 42. But one thing you have to remember here. Last year, what we used to take to produce 100 units, this year we are going to take to produce 112 units. Last year, how much we have taken to produce? 100 units. This year we are going to take it to produce 112 units. Which means, guys, try to understand. 8 lakh we have taken to produce how many units? This year 8 lakh we have taken to produce 112 units. 112 percentage. Or guys, listen. Last year if I take 20,000 as 100. Last year if I take 20,000 as 100. 112 is how much? 22. So, can I tell 8 lakh I am taking to produce not 20,000 units this year. 8 lakh I am going to incur for 22,400 400. Hey, the rate increase I haven't given, that I will give later. But right now you try to understand. 8 lakh. Last year I incurred to produce just 20,000 units. But this year I am going to incur to produce 22,400. But actually we are producing 24,000. For that, how much it will be? Without increasing the price. Huh? 8 lakh? 8 lakh? What? 143. This year they are telling that price will increase by 5%. Eight lakh 99,999. Basically 9 lakh. Hope you understood now. This efficiency thing, what you should do, boss, last year so much we incurred to produce just 100 units. This year using that we are able to produce 112 units. So 100 units means 20,000, 112 means question mark. We'll get to know. Now that we incurred to produce 22,400, 8 lakh we incurred to produce 22,400, but we produced 24,000. For that, how much we should have incurred? At the old price. We'll get it at old price. New price will be 5% more than old price. So plus 5%. You will arrive at direct wages for the period. Now, production overhead, they are telling 25% is variable. So what I will do? 480,000 I will take, divide it into variable and fixed. Divide it to variable cost and fixed cost. They are telling 25% is variable. Rupees 120,000 was variable. Rupees 360,000 is fixed. Correcta? Correcta? Huh. Now, guys, 120,000 we incurred to produce 20,000 units. May I know per unit how much? Rupees 6. Should I divide fixed cost also? No. Why I should? No. Fixed will be fixed. So this year also it will be 360 only. Because have they told any increase here? Fixed production overhead will increase by 33.33%. So it will be 360,000 plus 33.33%, which will come to rupees 480,000 if I am not wrong. Huh? 4,80,000. So fixed cost will be 480,000. Variable cost will be rupees 6. And did they tell any increase here? Plus 5%. Rupees 6.3. Per unit it will be rupees 6.3. May I know 6.3 into units produced is 24,000. 1,51,200. Can I tell my total factory overhead is 5 lakh or 6 lakh 31,200. My total factory cost is 6 lakh 31,200. Got it? Got it? 6,31,200. Now, administration overhead, how much it is? 1,60,000. In that 75% is fixed, which means 120,000 is fixed. Did they tell any changes here? They haven't changed. They haven't told any changes. So fixed will be 120,000. Correct? Variable was how much, sir? 40,000. 25%. See there. 75% fixed they are telling no. So 25% is variable, which is 40,000. Guys, 40,000 is to produce 20,000 units. But we are producing 24,000 units, which means 48,000. So total is 168,000. So my administration overhead is 168,000. My administration overhead is 168,000. Is it clear? Sorry? Have they told? Oh, every variable overhead it is. Okay. Then we'll do that. 48,000 plus 5%. plus 120,000. 1,70,000. 1,70,000. 400 will be my admin overhead. It will be my admin overhead. Selling and distribution, 2/3 is fixed, which means fixed is around 160,000. Yeah, fixed is 1,60,000. Variable is 80,000. Variable is 80,000 to sell 20,000 units. See here, whenever you are doing selling and distribution, you should consider the number of units sold, not number of units produced. So 80,000 for 20,000 units, but we are selling 24,000 units, which will come to 96,000 plus 5%. Rupees 1,08,000. So that is 160,000 plus 1,08,000, which is 2,60,800. 2,60,800. May I know the total cost of this year? Huh? 23,84,000. This is my cost of sales for the period. This is my cost of sales for the period. Hey, last time how much was the cost of sales, guys? Last time cost of sales was 320 plus 8 lakh plus 480 plus 160 plus 240. Rupees 20 lakhs. Guys, so we sold the goods at 25 lakh, which means last year's profit was 5 lakh. Last year's profit was 5 lakh. Correct? Now, find out the new selling price if the same amount of profit is to be earned. So, cost is this much. Profit will be 5 lakh. So, my total sales I am expecting is 28 lakh 84,800, but from how many units? 24,000 units. So per unit, how much selling price I should charge? 120.2. So it is rupees 120.2. Next they are asking if the same percentage of profit to sales to be earned. Last time how much was the profit to sales, guys? Last time 5 lakh divided by 25 lakh, 20%. Profit on sales was 20%, which means profit on cost was 25%. That is 5 lakh divided by 20 lakh. 25%. So this year my cost is 23,84,000. On that 25% is how much? 5 lakh 96,000. This will be 25% on 23,84,200. Total it is 29 lakh 81,800. Divided by 24,000. Per unit, how much I should charge? 124.2. Correct? If the existing percentage on profit to sales is to be increased by 25%, right now whatever is there, right now 20% is there on sales. In future they are telling it is to be increased by 25%. That is 20 plus 25 is how much? 20 plus 25 percentage. Hey, 25. So on sales they are expecting 25%, means on cost they are expecting 33.33 percentage. So how much is 23,84,800 into 33.3333333333 percentage? 7 lakh 850 933 total 31 lakh 79,733 divided by 24,000. 132.48. If the profit per unit to be earned is 10 rupees. So how much is my cost of sales? 23,84,800. For how many units? 24,000 units. How much is per unit? Calculate. 23,84,800 divided by 24,000. 99.36. We want to make the profit of 10 rupees means selling price should be 109.36. Selling price should be 109. Hey, we got different cost total. Oh, this advertisement expense we left. No. This year additional 45,200 advertisement expense we are incurring. So the cost is not only 23,84,800, 23,84,800 plus 45,200. 24,30,000. So cost of sale is 24,30,000. First one, what they are asking? Same amount of profit to be earned. That is 24,30,000 plus 5 lakhs will give you 29,30,000 divided by 24,000 units. 122.08. So the first selling price will be 122.08. Next one, what they are asking? Same percentage of profit to sales is to be earned. That is 20% on sales, 25% on cost. How much is 25% of this 24,30,000? 6,07,500. Total will come to 30,37,500. That is for 24,000 units. Per unit, how much should be the selling price? 126.57. Next, if the existing percentage to be increased, which means on cost it is 33.33 percentage, that we have already computed and told. No, so how much is 24,30,000 into 33.33 percentage? 34.3333333333 percentage. 8,10,000. 8,10,000. 32,40,000 for how many units? 24,000 units. Per unit how much? 135. They are asking you how much selling price it should be if you want to earn a profit of 10 rupees per unit. Straight question. That is 24,30,000 is a cost for selling how many units? 24,000 units. Per unit how much is the cost? Per unit how much is the cost? 1 For this, add a profit of 10. So you have to charge 111.25. 111, 135, 126.56, 126.56 we got a 57. This one around 122.08. Hope it is clear. Mark it as LMR question. Any doubt? No doubt? Direct wages? See madam, right now we are producing 20,000 units by incurring 8 lakh rupees as our direct labor. Correcta? Now, if at all prices won't change also, due to increase in our efficiency, next year 8 lakh we don't incur to produce 20,000 units. 112% of 20,000 units. 22,400. That is, next year if the prices won't increase, 22,400 we will incur to produce 8 lakh units. But the best part is, next year we produced 24,000 units, which will come to some amount. But that is without increase in the price. Whatever you get now, the answer, that is your wages without increase. For that plus 5%. For that plus 5%. You will get due to price change how much. That is, first whatever you get answer, that is due to quantity and efficiency change. For that, if you add 5%, that will be along with the price change, total change. Sixth one, nothing much, guys. Seventh one also, all these go through once. Eighth one also go through on your own. That is, number of hours you have to multiply with the rates for a labors, and here for overhead rate for a factory overhead. Okay. Here in the ninth illustration, they have received an inquiry for which you are supposed to submit the quotation. They are asking. So all these are the, as I were a photography thing, all these are the direct expenses. I mean direct materials in fact. And decided to hire one by paying 10,000 to him as a photographer. Now photographer is also direct. You are going to treat it as a photographer charges as a direct labor. Guys, you should go through this ones. And by the way, this is your examination question, past examination question. They've asked this question in the examination. Okay. Now, for this job, how to ascertain the artist cost, copywriter cost, and client service cost? Guys, listen. Agency works 25 days in a month for 6 hours, which means we have hired them for how many hours in total? 150 hours. Now, guys, 12,000 for them we are paying for 150 hours. But in this job, their work is only 80 hours. 10,000 we are paying for 150 hours, but in this job their work is just for 75 hours. 9,000 we have paid for 150 hours, and in this question their job is that for 30 hours. Accordingly, we'll get to know how much is your employee cost. How much it is? 6,400, 5,000, 1,800. Hope it is clear. Nothing much special is there. Please keep all this thing in mind. Tenth one, guys. Raw material inventory opening they have given. Where it will come? Direct material consumed. You are going to add it to the purchases to arrive at a direct material consumed. WIP, while arriving at a factory cost, we are going to add it. Finished goods, while arriving at a cost of goods sold, we are going to add it to cost of production. Office appliances, it won't come in the cost sheet, but depreciation on this will come in the cost sheet. As it is relating to office, it will be administration overhead. Plant and machinery, factory overhead, not the whole plant and machinery, but depreciation of plant and machinery. Building, if the building is relating to factory, the depreciation on building will come in factory overhead. Sales and sales return together. If at all you are preparing a costing P&L, that will come in the P&L, not in the cost sheet. In the cost sheet, till the cost of sales will be taken, that cost of sales will be taken to P&L compared with the other costs which are not forming part of cost sheet, and final profit will be ascertained. That time sales will come. Material purchased, direct material consumed, freight on material, direct material consumed, purchase returns, direct material consumed, you should reduce it. Direct labor, indirect labor, factory overhead, factory supervision, factory overhead, factory repairs and upkeep, factory overhead, heat, light and power, factory overhead, rates and taxes. Rates and taxes, you have to check. If nothing is given, then admin overhead. Otherwise, we have to check there. Wait. Miscellaneous factory expense, factory overhead, sales commission, selling and distribution, sales traveling, selling and distribution, sales promotion, selling and distribution, distribution department salary and wages, selling and distribution, office salaries, administration overhead, interest on borrowings, ignore. Yeah.
Distribution department salaries.
That is distribution department, no? Yeah. Administration means other than selling and distribution. It is clearly they have given distribution departments. Then that should be selling and distribution overhead. Indirect labor, no, salary means. Further, closing inventory they have given. Accrued expense of direct labor is 8,000, indirect labor is 1,200, which means direct labor you are going to take 8,000, add it to the cost, indirect labor 1,200, interest 2,000, ignore. Depreciation should be provided 5% on this one. Heat, light and power to be distributed in the ratio of 8:1:1 to the factory, office and distribution. Factory overhead, admin overhead, distribution overhead. Rates and taxes, 2/3 to the factory, 1/3 to the office. So rates and taxes, 2/3 to the factory, that is factory overhead, 1/3 to the office, that is admin overhead. Depreciation on building, 8:1:1 for the factory, office and distribution. So 8th portion will go to factory, 1 portion will go to admin, and 1 portion will go to selling and distribution. Got it? Go through these ones. Whatever we don't take there, that is interest on borrowings, wages, all those things will come here, and we will ascertain the profit. 12th one, nothing special is there. These are the few things you have to remember in the cost sheet. Cost sheet format though never forget. Don't ever forget the cost sheet format. Once again we'll repeat. Yes, cost sheet is nothing but direct material plus direct labor plus direct expense, which will give you prime cost. For that add the factory overhead, you will get a gross works cost. For that add opening stock of WIP minus closing stock of WIP, will get the works cost. For that add the admin overhead, which is relating to production. Scrap recovery, if anything is there, reduce it. And quality control and primary packing, you will get the cost of production. For that add opening stock minus closing stock, you will arrive at a cost of goods sold. For that add the profit, you will arrive at for that add a administration overhead, which is general in nature. Selling and distribution, you will arrive at a cost of sales. For the cost of sales, if you add a profit, you will arrive at a sales. Correct? Direct material consumed means opening stock plus purchase minus closing. Opening purchase means whatever we incur, taxes, if the ITC is not available, then it will be cost. Trade discount should be reduced. All other expenses should be incurred. Whatever incurred should be added to the cost. Scrap recovery from the raw material is there, that you should reduce. Direct labor, direct expense means accrued, not paid. And primary packing, secondary packing, interest, all those adjustment I have told. Please go through this one. 7 easy marks is there in this particular chapter, particular unit. Okay. With that, we have completed our module 1 also. before going to exam, I expect you guys to go through all these question once. Gotcha? Yes? Done. Now we'll take a quick break of 5 minutes and we'll start with material cost. Done? Now, guys, one more important chapter, that is material cost. Sir, what do you mean by material cost? Material cost means whatever the cost we incur relating to the materials used in the production. Need not be direct material. Need not be direct material. Whatever the cost we incur on the materials used in the production, that is your material cost. On the physical object what we use, no, everything is material. Now whatever the cost we incur to that physical object, that is your material cost. Material cost could be, guys, direct material cost, indirect material cost. Direct material cost means cost of the material which could be attributable to the final product directly or could be ascertained in the final product directly. Now those are your direct material which you cannot trace it in the final product. That is your indirect material. Now material control. What do you mean by material control? Sir, it is a system of having control over material procurement, storage and issue. It is the system of control over material procurement, that is relating to buying of the material. Material storage, how we store the material and we'll issue it to the production. No, to that, when we have a control over this, that is known as material control. That is known as material control. Got it? Sir, what are the aspects, important aspects of material control? One, to ensure the smooth flow of the production process without interruption. Second one is to prevent excessive investment in material. If at all we store more than necessary, don't you think we block our money without any necessity? Why to block our money? So these are the two things. What are the objectives, sir? One is availability. That is to make sure what and all the material is required for the production, that will be available all the time in the required quantity. Otherwise what happens? Production process will stop. Production process will stop or will get interrupted. So to avoid that, you should have a better control over your material storage, where you will be having required material in a required quantity. Proper quality and price. That is, whatever the material we produce or whatever the material we purchase, that should be of the proper quality and proper price. It should not be of the full inferior quality, where if you take this break, then your final product also will become like that only. At the same time, it should not be of a superior quality also. Why? If that's the case, it will be costly to you. So you should make sure you will be having a right quality product at a right price. In fact, you expect it to be the low price possible. Next is minimum wastage. That is, when you have control over your issue, you will be having the minimum wastage. For example, your mom sometimes might ask you to cut onions. Correct? Have you guys done it? If the mom is seeing, what we will do? Only the outer layer will go out. Correct? If the mom is not seeing proper, the thick layer, that will only go out. Yes or no? Same way, if the material control is there, wastage will be minimal. If at all material control is not there, whoever wants that taking and going the issue, automatically it will be more only. Correct? Now, no overstocking. That is, when we have a control over our procurement and our issues. Now, we know that within so many days, when we place the order, we get the product, and this product can be used for so many days. I will try to maintain the balance. I don't just overstock. So I will try to maintain a balance there. So overstocking could be avoided. If you overstock, what and all will be there. Obsolescence is possible. That is, it will be of no use, and there is a possibility of blockage of your money for so many days. Your carrying cost will be more. That is, carrying the inventory for go down for many days will cost you more. All these will be there, and if you have a better control over your issue, procurement, and storage, you will be having the proper information about which and all are the material available in our storage, where those materials are available, in which quantity those are available, and in process also it will be of minimum loss. But sir, to have a better control over material, that is to have a material control system, what and all are the required things? Coordination and cooperation between various departments will be there. Purchase department, issuing department, receiving department, production department. All these departments should have a proper coordination among themselves, and they should be proper standard document, which means similar kind of document in all the stages, and classification, coordination and standardization of material should be there. Requirement of the material planning should be there, otherwise we can't have a proper control over our storage. Yes, and purchase, efficient purchase organization should be there. Budget control of purchase should be there. Plant storage, physical control, all those things should be there. These are the few things you should have in a material control prerequisites. To have a better material control, what are the requisites should be there? Basically, material control implemented in purchase and receipt of the goods, storage of the goods, issue of the material. Purchase and receipt of material, storage of such material, and issue of that material for the production. Got it? Now, procurement of material involves what, sir? That is what we should purchase, what quality of product, at what price we should purchase, how much you should purchase, when you should purchase, at what price you should purchase. That is what to purchase, what product you should purchase, what material you should purchase, when to purchase, from where to purchase, who should be the supplier, at what price to purchase, and that is how much quantity should be purchased. Guys, few documentation involved in the materials are: first, whenever we get to know how many units we should sell, straight away planning department will be there. They will plan and tell how many units we have to produce. To produce so many units, how much material of what is required. Now, when the planning department maintains that document telling to produce so many units, which and all are the raw materials required, in what quantity it is required, that itself is your bill of material. Bill of material is prepared by which department, guys? Planning department, stating what kind of materials are required for production, in what quantity it is required for production. That is your bill of material. And material requisition note is also required. What do you mean by material requisition note, sir? Now we got to know, as a production department, as a requisite department, now we got to know, to produce so much, what raw material is required in what quantity. Now we will check in our department how many materials are there. Okay, so many materials are not there. Now we are going to ask to the storage. No. So to ask to storage department, generally required department, generally it will be production department, will raise one document asking that, boss, send us this material of this quantity. Now that document is material requisition note. Material requisition note. Now storage department will check whether they have so much material in their hand or no. They got to know that, oh my god, this material is not available with us. This material is not available with us. Now what they will do, they will raise one document called as purchase requisition. That is sending to purchase department, asking them to purchase so many units of the product, of the material. Okay. Now purchase department got the purchase requisition. Now what they will do is, they will prepare one purchase order telling our supplier, boss, you will be supplier, you will be supplying us these many units of these many specification at these prices. Basically, we are placing a order, purchase order. When purchase department places the purchase order with the suppliers, the document prepared by the purchasing department is purchase orders. After that, what happens? Our supplier will send us the goods. Along with the goods, they will send a goods receipt note. That is, they will send one list, challan kind of thing, delivery challan kind of thing. Based on that, we will prepare one delivery goods receipt notes, also inspection note, telling that which and all our goods are received, at what quantity it is received, in what condition it is received. Now, that is when we inspect and when we, after the truck comes inside our godown, inside our gate, we'll write no what goods of what quantity we received. Now that document is nothing but a goods received notes. And sometimes what happens, few materials are not required for different production, but it is required in the other production. Now one department sending goods to the other department, that time they will raise the document called as material transfer note. For example, few steels that is not required in the this Nungambakam metro construction. Here it is not required. Somewhere, let's say in T Nagar it is required. Now they don't have to go to stores and all. Here it is not required. There it is required. Now these guys will send it to T Nagar. While sending, these guys will raise a document called as material transfer note. And sometimes whatever the department have received, they will send it back to storage. That time they will prepare something called as material return notes. In fact, even sometimes what we purchased, we send it to our supplier. That time also we might prepare a material return note. Got it? Now, sir, what quantity we should purchase? Guys, you should not purchase something very less also, because if the shortage happens, your production will stop. You should not purchase something more also, because if at all you purchase something more, then what happens? Your investment will be high, your carrying cost will be high. So what you should do, sir, you should try to manage somewhere in between. Now try to understand, guys, when the price remains same, the best quantity to purchase is economic order quantity. The best quantity to purchase is EOQ, economic order quantity. Basically, guys, your cost of inventory includes three things. What are those, sir? One is your purchase price. Next is your ordering cost. Whatever the cost you incur relating to each order. Ordering cost. Next is your carrying cost. That is carrying the inventory in the godown. Godown rent it could be. Godown insurance it could be. Like that, so many expenses will be there, no? So what are those expenses you are going to incur to carry the inventory? That we call it as carrying cost. Now our target is to keep this purchase price plus ordering cost plus carrying cost to the minimum. Now to keep it minimum, we should place the order size which is going to achieve all these things. Now that is decision making question they will ask. Which order size is better? However, there is one order size, guys, called as EOQ, economic order quantity. What economic order quantity will do, sir? Economic order quantity will make sure your ordering plus ordering cost plus carrying cost together, not both of that will be minimum, no. Ordering cost plus carrying cost will be minimum. Ordering cost and carrying cost will be minimum. Not ordering cost will be minimum, not carrying cost will be, both will be minimum. No. Both together will be minimum. What do you mean by that, sir? Guys, try to understand. My annual requirement is 10,000 units. My annual requirement is 10,000 units. My ordering cost is, let's say, rupees 1000 per order. Rupees 1000 per order. Carrying cost per unit per annum is, let's say, rupees 10. Carrying cost per unit per annum is rupees 10. Now guys, try to understand. If I place 2 orders or if I place 1 order, how much will be my ordering cost? 1000. If I place 1 order, how much will be my ordering cost? 1000. Correct? But my carrying cost will be there, no? How many units I will carry at a time? Whole 10,000 will come and fall in the go down at a one time. Whole 10,000. So from 10,000 it starts reducing, which means on an average half of 10,000, that is 5,000 I will carry throughout the year. First half of the year I am carrying more than 5,000 units. Second half of year I am carrying less than 5,000, which means on an average I am carrying 5,000 by paying rupees 10 per unit per annum, which means 5,000 into 10, 50,000. 50,000 total will come to 60,000. This will be my ordering cost plus carrying cost. Hey, not purchase price is not included, not total cost. Sorry. $51,000. Sir, we'll do one thing, sir. What is it? Instead of 1 order, let's place the 10 orders, sir. Which means for each and every purchase, we are going to buy 1,000 units. How many units? 1,000 units. If you buy 1,000 units, how many orders to be placed? 10 orders. Which means ordering cost will be 10,000. On an average, how many units I will be carrying? Guys, try to understand, not 5,000. Why, sir? Hey, in a year I need 10,000. Do you think I will bring and store the whole 10,000 at the same one time? 1,000 I will bring, I will empty it. Next again I will bring 1,000, empty it. Which means, can I tell on an average I am going to maintain half of the order size? Always remember, to find out the carrying cost, you are not going to take the annual requirement. Why, sir? You are not going to keep the annual requirement throughout the year. You are going to keep the order size throughout the year. That to order size also, beginning when you place the order and got it, that time inventory will be more. After half, inventory will be less. So I will take half of the order size for computation of carrying cost, not the annual requirement. But last question you took 10,000, sir. Hey, that was because order size was 10,000. 1 order. Now it will be half of order size is 1,000 into rupees 10 per annum. That is, on an average every day, on an average I will be maintaining 500 units, and 500 units on an average every day means 1 unit if we keep it for a whole year 10 rupees. 500 units if I keep for a whole year 5,000, which will come to 15,000. Guys, one thing you have to observe here, that is, once the ordering cost is more, carrying cost will be less. Carrying cost will be more, ordering cost will be less. Which means ordering cost and carrying cost never be same. Will never be minimum together, will never be same. So one, if it goes like this, the other it will go like this. So somewhere here we will find a EOQ. At EOQ, both will be minimum together, because if you see, this is the minimum together. So both together will be minimum, not each and both the components are minimum. No. Both together will be minimum. That level we call it as a EOQ. Economic order quantity. Sir, how to arrive at economic order quantity? Guys, I already showed you a formula working out and all. I'm not going to show that in marathon. I'm just going to show you formula 2AO divided by C. 2AO divided by C. What do you mean by A, sir? Annual requirement. A means annual requirement. O is what, sir? Order cost per order. Ordering cost per order. Ordering cost per order. C is what, sir? Carrying cost per unit per annum. In the question, if they give per month, you have to multiply it by 12. You will arrive at per annum. And annual requirement, guys, it is not the finished goods. It is all about to produce the finished goods, how much you want. Raw material. Relating to raw material, no. So here it is talking about consumption, not the production. Not the finished goods. For example, if they tell during the year number of units to be produced is 10,000. Each and every unit takes 3 kgs of raw material. Now annual consumption is 10,000 into 3 kg, not 10,000. 10,000 is finished product. EOQ is relating to raw material. So you should take 3 into 10,000, 30,000. Annual consumption. Got it? Got it? Sometimes they will not tell the annual consumption directly. That time what you should take is, sometimes they will tell average consumption per day. In a year, they will tell 365 days. Then if you multiply average consumption into 365, you will get to know on an average in a year how much you consume. Average consumption. So always remember, to calculate the average consumption also you can use the annual requirement, or to calculate the annual requirement you can use the average consumption. Sir, they just told consumption, sir. Not maximum, not minimum, average. In that scenario, guys, if they tell only one, maximum or minimum or average, always and always remember one thing. Minimum itself will be the maximum, minimum itself will be the average. Average itself will be the minimum, average itself will be the maximum. Maximum itself will be the minimum, maximum itself will be the average. Which means, if they give information regarding consumption, only one, either average or either minimum or maximum. No other information is available. In that scenario, you should treat that itself as a maximum, minimum, average. Okay, that won't be of useful for the EOQ, but of course for the stock levels is. For computation of stock levels is. Clear? So EOQ is nothing but, guys, square root of 2AO divided by C. 2AO divided by C. Guys, always and always remember, if you don't get any discount, then always and always EOQ is the cheapest cost. Total cost under EOQ will be least. If at all you get a discount, then only the things will change. You have to prepare that comparative statement, total cost statement, purchase price. For EOQ, whatever the price they have given. For the order size they are telling, whatever the price they have given. Ordering cost according to that. Carrying cost, always remember, if they give carrying cost in percentages, they will give storage cost so much, insurance cost so much, interest cost so much, then add everything. End of the day, it will be in percentages. Let's say it will come to 15% per annum. It will come to 15% per annum. Always remember, this 15% you should apply it on purchase price. 15% you should apply it on purchase price. And remember this point in your decision making questions. Let's say EOQ is coming as 3000 units. Our supplier is telling, if we buy it in the size of 5000 units, let's say we are buying 15,000 in total. Okay. Our supplier is telling, if at all we buy 5000 units per order, now the price is 10 rupees. If we buy it at 5,000 per order, then he is going to give it at 9 rupees. Now guys, always and always remember, for computing EOQ, purchase price is 10 rupees. For computing the special discount, 9 rupees. And carrying cost, here it will be into 15%. Here it will be 9 into 15%. Carrying cost won't remain same when purchase price changes. carrying cost will change. Keep this thing in mind. Majority of you will do mistake here. When purchase price changes, if the carrying cost is given in percentages, that also will change. Hope it is clear. That is your EOQ. What is the EOQ formula? Square root of 2AO divided by C. Got it? We'll see few questions and we'll come back to this level. So ABC, etc. later. Fine, no? Yes? That's the EOQ questions, guys. Illustration 1. See here. Calculate the EOQ from the following information. Also state the number of orders to be placed in a year. Guys, consumption per annum is 10,000. By the way, what is the formula for EOQ? Come on. Square root of 2AO divided by C. What is A? Annual requirement. O. Ordering cost per order. C. Carrying cost per unit per annum. Now, the EOQ will be square root of 2 into annual requirement is 10,000 kgs. Ordering cost per order is rupees 50. Guys, carrying cost, they have told 8%, which means 2 rupees is the cost per kg. 2 rupees into 8%. How much? 2 rupees into 8%. Rupees 0.16. You will get to know how much is your order size. If at all you get it in decimals, round it off to nearest number. In case of EOQ, if the number of orders you get it in decimals, whether it is less than 0.5, more than 0.5, always and always round it off to next number. Always round it off to next number. Number of orders, next number. EOQ, nearest number. Got it? Because if you go for a less number, then you won't be able to purchase so many units. How much you should have produced in total? So many units you won't be able to purchase. How much you thought of purchasing? Because if you get 10.4, each order is of 1000. You thought of purchasing, let's say, or you thought of 11,000 units. Okay, each order is of 1500 units. How much you will get? 11,000 divided by 1500. 7.333. If at all you round it off to nearest number, you will tell it as 7 orders. If you place a 7 orders of 1500, how much you will get? 10,500. But how much you want? 11,000. So automatically you won't get us so much. How much is annually required? So guys, always remember this. If it's a order size, round it off to nearest number. If the number of orders, next number. How much is the answer here? 2,500 units is your EOQ. So how many orders to be placed in a year? We need 10,000 units. And per order you are placing 10,500 units. So you have to place 4 orders. How many days once we should place the order, guys? 3 months once. That is, in a 12 months, if you place 4 orders, once in a 3 months, you should place the order. In days means, if they give 360 days a year, 360 by 4. If they give 365 days a year, 365 by order, number of orders. Okay. They will ask it directly or they will ask it interval between the orders. Now, the average annual consumption is 18,250. Price is so much. Storage cost is 20%. So how much is my carrying cost, guys? Rupees 36.5 into 20%. Rupees 7.3. My carrying cost is rupees 7.3 and placing an order, ordering cost is rupees 50. And how much should be quantity is to be purchased at a time? EOQ square root of 2 into annual requirement 18,250, orders cost 50 divided by carrying cost 7.3. 500 units. 500 units. How many orders to be placed? 18,250 divided by 500. 37 orders to be placed. What if it's 36.45? Whole night we told a story. Whole Ramayana we told. Next day morning, who is Rama, who is Sita, that is fine. Now you guys are acting like Duryodhana is coming in Ramayana. I told so many times, and again you are rounding off to previous number. Order size should be next number. Order size should be nearest number. Order size, number of orders should be next number. Always remember this. Hardik sir is right. Now I started getting scared. Let's see this decision making question. Shall we? First, Anil Limited buys its annual requirement of 36,000 in a 6 installment. Now they are buying it in 6 installment, which means order size is 6,000 units. Correct? Each unit cost ₹1 and ordering cost is ₹25 per order. The inventory carrying cost is 20% of the unit value, which is basically ₹0.2. Find out the total annual cost under existing inventory policy, and if you go for EOQ, how much you will be saving? Sir, here how do you know that you will be saving under EOQ? Guys, purchase price remains same, which means your purchase cost remains same. Only place where you are going to get the price difference or cost difference is ordering cost and carrying cost. Whole world knows one thing. What is it? Under EOQ only it will be minimum, not at any other level. So now EOQ will be square root of 2 into 36,000 into ₹25 divided by 0.2. 3,000 units. Your order size, your economic order quantity is 3,000. How many orders to be placed as per EOQ, guys? As per EOQ, we should place 12 orders. Correcta? Correcta? Now, shall we compute the cost? Shall we compute the cost? Two options are there. One under EOQ, one more is under existing policy. Yes or no? Yes or no, guys? One is existing policy, one is EOQ. Decision making table. First is purchase price. Guys, in a year we are purchasing 36,000 units. And both the places we are paying ₹1. So purchase price will be 36,000 and 36,000. Now, under the existing policy, we are getting in 6 orders. So ordering cost per annum will be 6 orders of ₹25, which will come to 150. And in case of the EOQ, we are placing 12 orders, which will cost us ₹300. Oh my God, sir, you told in EOQ it will be least. Together it will be least. And together it will be same. Got it? Both will be same. Together it will be least. Not each and everything is least. Carrying cost. Guys, in first scenario, how many units we are carrying on an average? Half of the order size, not the annual requirement. First case order size is 6,000 units into 20.2. 3,000 into 0.2. 600. In first scenario, it is 600. In second scenario, it should be 300. that is half of order size, that is 3000 into 0.2. So total cost under first scenario is 36,750. Next one is 36,600, which means by going to EOQ, you will be able to save 150 rupees. By going to EOQ, you will be able to save 150 rupees. Got it? Look at this question. The annual demand for an item is 3,200. The unit cost is rupees 6. Inventory carrying cost is 25%. That is rupees 1.5. Correct? Per annum. If the cost of one procurement is 150, this is ordering cost per order. Determine EOQ. EOQ will be 2 into 3,200 into ordering cost, which will come to rupees 150 divided by 1.5. 800 units. 800 units. Number of orders per year, 4 orders. That is, we should get 3,200 and we are going to place 800 per unit, which means around 4 orders. Time between 2 consecutive orders. Guys, in a year, how many orders to be placed? 12 months divided by 4 orders, which means 3 months once we are going to place the order. So, 1 order to 1 order, how much is the difference? 3 months. Guys, there is one question, okay, where they will tell you whether to accept the discount or not to accept the discount. Then the answer will come as not to accept the discount. Sorry, not to accept the discount, because and cost under EOQ will be least. Cost under EOQ will be least. That is general question. But they might ask like this, like what, sir? They will ask, if you don't accept the discount, tell the supplier how many percentage discount you will accept. Supplier will give some percentage. As per that you don't accept, because cost under EOQ is less than that percentage cost. Now question only they will ask, if supplier want to know that, how much percentage you will be okay with. Now what you should do is, guys, max to max, how much discount I will accept. If my cost will be equal to EOQ, I will tell supplier, okay boss. Correct? What I should do is, I should take my discount as unknown number, X. Discount as X. Sir, where and all it's going to affect? It's going to affect the purchase price. It's going to affect the carrying cost. It's going to affect the purchase price. It's going to affect the carrying cost. Now, I should take my purchase price, or I will do it in this question. Will it be fine? Actually, I have done that 2 questions of CA questions in that additional question bank discussion. If you have seen it, don't see. I told it no. So you can go and watch it there once for the more clarity about those kind of question. I don't know why I am feeling that kind of question might come in the examination this time. See here. A company manufactures a special product which requires a component alpha. The following particulars are collected. Annual demand of alpha is 8,000 units. Sir, voice is not audible. What are you talking? Oh, sorry, mic was off. So, 8,000 unit. Cost of placing order is 200 per order. Cost per unit of alpha is 400. Carrying cost is 20%, which will come to, guys, 80 for the given level. The company has been offered a quantity discount of 4%. That is, If you purchase to some level, you will get a discount of 4% on the purchase of alpha, provided order size is 4000 components. Okay. Now they are asking you, compute how much will be your EOQ and advise whether the quantity offered should be accepted or not accepted. Listen. First we'll compute EOQ. Yes. Then we'll go for comparison. EOQ is equal to square root of 2 into annual requirement. If they give monthly demand, then make it as into 12. Annual requirement, that is 8000, into ordering cost is rupees 200 divided by carrying cost is 400 into 20%. Rupees 80. May I know how much it is, guys? 200 units. 200 units is our EOQ. Now they are asking whether the quantity discount should be accepted or no. For that, we are going to compare the cost under EOQ under the given level. Shall we? Yes. EOQ and offer. EOQ and offer. First is purchase price. Guys, purchase price, total purchase price. We are purchasing 8000 units. Under EOQ, we are purchasing it for 400. How much is 8000 into 400? 32 lakhs. 32 lakhs. Under offer, they are giving us discount of 4%. So, which will come to rupees 384. Correct? 30 lakh. Sir, what are you talking? Offer is better, offer is better, offer is better. Let's check. Next is ordering cost. Guys, under EOQ, we are placing order for 200 units. How many units? How many orders we should place? 8000 divided by 200. 40 orders. Each order will cost you 200. 40 into 200. 80? 8000, no? 40 into 200? 8,000. 8,000. Guys. Under the policy, they are asking us to buy 4,000 component at a time, which means just 2 orders, which will be just 400 rupees. Array sir, now you should accept. No. Wait. We'll do the carrying cost. Carrying cost, what is the formula, guys? Half of what? Annual requirement or order size? Order size into carrying cost per unit per annum. Guys, try to understand. Both the places carrying cost is changing. Why? Both the places purchase price is changing. Under EOQ, carrying cost is 80 rupees. No doubt in that. But under new policy, it is 384 into 20%. 76.8. 76.8. Good. Now, try to understand first EOQ. Half of order size. That is half of 200. 100. 100 into rupees 80. 8,000. It should be 8,000. Always and always. Under EOQ, total ordering cost and total carrying cost will be same. And majority of you will do in the mistake in calculation of total carrying cost. It's not the annual requirement. It's half of order size. It's half of order size. Okay. In case of discount offer, half of order size is half of 4,000. 2,000. 2,000 into 76.8. $1,53,600. May I know the total cost, please, guys? First one, it is 32,16,000. Next one, 26,000. Now tell me which one you will accept. EOQ. Because if you go for EOQ, you are able to save 10,000 rupees. You are able to save 10,000 rupees. Now, To this question, they will give an add-on telling that if at all you are not going to accept the offer at this given discount, at what discount rate you will accept the offer. Now we want to find out the purchase price at which we will be okay with going for a discount. Guys, under EOQ my cost is 32,16,000. Am I even going to pay 1 rupee more? No. I will tell supplier, see boss, now I am getting 32,16,000. If at all your price gives me less than 32,16,000, then I will go for yours. If at all it is equal to 32,16,000, I will think about it. Both gives me same, but practically we'll go for it because it will be a good relationship between supplier and a customer. But if at all the cost is even 1 rupee more than 32,16,000, dream, I'm not at all going to buy from you at a given level. I'm going to buy it at a EOQ only. Now supplier is like, okay sir, calculate and tell no, let's see how much discount you want. Guys, do we know the new purchase price? Do we know the new purchase price? You don't know. Can I tell total purchase price will be, how many units we are buying? 8,000 units, correct? At rupees X. Purchase price, let it be X. Clear? Plus ordering cost. How many orders we are placing? 2 orders. And each order cost us 200. This is pretty clear. That is what our supplier is offering us. Carrying cost, listen here very carefully. Half of order size. Half of order size, that is half of 4,000 into carrying cost per unit per annum. Guys, carrying cost per unit per annum is 20% of purchase price. Purchase price is X. Purchase price is X. So carrying cost will be 0.2x. 0.2x. Got it? Now I expect this to be lesser than or equal to 32 lakh. What 10,000? This is total cost. This is not the difference. This is the total cost. My total cost should be somewhere less than 32,16,000. Okay. Now I should solve for X. 8,000x plus 400 plus 400x is equal to 32,16,000. Now X is equal to, guys, 32,15,600 divided by 8,400. 382.81. Correct? I am ready to pay max to max per unit 382.81. I am going to tell my supplier I am ready to pay 382.81 max to max. Now we got to know this. Let's say this comes in the examination. We did so much, so happy. We wrote it, came new price. We are going to accept it if it is less than or equal to 382.81. Sir, how was exam? Awesome, sir. What did you do? Sir, we wrote and came 382.81. They asked it in percentages. You will accept how many percentage of discount? You should check. You are expecting a discount of 17.19. You are expecting a discount of 17.19 divided by 400 into 100. 4.2975%. So I am going to tell my supplier, see boss, if you give me discount more than 4.2975%, I am going to accept your offer. Otherwise, forget about it. Understood? This kind of question I am expecting this time in the examination. 400 minus 382.81. Right now price is 400. We are expecting him to sell at 382.81. Hope it is clear, guys. Yes. If at all they give question like this, if at all they give the question like this, guys, always remember, take somewhere, first number you take whichever you want. After that, you can take any number, but better to take the minimal numbers here. Okay, 250, 800, 2000, 4000, like that. And this is also one kind of question where they have asked you to calculate the total cost of material purchased. Always remember, guys, one thing, your GST will be calculated on your purchase price. Your purchase price includes what you are paying for that product, plus if you are paying anything to containers, etc. That one, minus trade discount if any. After adjusting the trade discount, whatever the net price will come now, on that the GST will come. After that, your freight, insurance, all those things will come. Clear? That format you should keep in mind. First what? Purchase price minus trade discount if any. Your container cost. Container cost, take the gross amount. At last, from the invoice value, reduce the refund for returnable containers. You will get the cost. On that you compute a GST. After that, your insurance, all those things will come. See here. The particulars relating to 1200 kg of certain raw material during June were follows. Lot prices quoted by supplier and accepted by company. Up to 1000, 1500 to 500, 1500 to 2000. So now we are purchasing 1200. So our price will be how much? 20 rupees. And trade discount is 20%. So the price will be 20 minus 20 percentage, which will be rupees 16, which will be rupees 16. Got it? Additional charge for container 10 rupees per drum for 25 kgs. How many drums we want, guys? 1200 divided by 25. 48 drums we want. So for each and every drums we are spending 10 rupees, which means around 480 rupees. Credit allowed on return of container 8 rupees. This you don't reduce. This you reduce after last things. I will show. GST 12% on raw material, 5% on drums. 5% on drums, should I calculate it on 8 rupees or 2 rupees or 10 rupees, sir? 10 rupees gross amount. 10 rupees gross amount, not the net amount. GST on the sales value. Total freight paid by the purchaser 240. For this should come after GST. Insurance, this should come after GST. Stores overhead applied 5%. The entire quantity was received and issued. The containers are returned in due course. Draw up a suitable statement. Listen here. Price per unit 16 rupees into 1200, 19,200. Drums, 48 drums, 10 rupees each, 480 rupees. Total 19,680 on this GST. For goods it is 12%. For drums it is 5%. Accordingly we will get so much. Total net invoice price will be this one. For this you add the remaining cost like insurance, freight, and when you receive the drums credit that you reduce, you will get to know how much is the total cost of material purchased. For that add the stores overhead, you will get the cost of issue. Sometimes they will tell, guys, listen here. Sometimes they will tell all the cost information they will give. Okay. Last they will tell other cost 2% of total cost. Other cost 2% of total cost. Now what you will do, you will ascertain the total cost. Correct? Let's say whatever the information is given, on that you will ascertain the total cost, which will come to 20,000. You will tell other cost is 2% of this 20,000, 400. So your total cost will be 20,400. Try to understand. Don't you think other cost will form part of your total cost? Don't you think other cost will form part of your total cost? Which means, don't you think 2% is not to be computed on 20,000? If you take the other cost as X, your total cost will be 20,000 plus X. On this 2% will be your X. Understood? Based on this, you are going to ascertain the other cost. There is few question, I don't know which chapter it is, but somewhere it's there. Whether it's in the cost sheet or budget, I'm not sure, but it is there. That is, they have given all the expense, total cost they are telling 2% or 3%. Now, I think in cost sheet only. Then other cost, when you are computing, you are not going to compute with the all other information. For all other information, add the other cost, that will give you total cost on that 2%. Hope it is clear. Sir, what is the relevance of that and this, sir? I don't know. Fine. That was relating to your EOQ. Now we'll be further proceeding into, see, we have three more kind of question. Store ledger, ratio, inventory turnover ratio, stock levels. That if we see, the chapter will get over. And majority of the time, EOQ is the very important aspect. I hope if the EOQ any question if they give, you will be able to answer it. Able to or no? Done. Give me a minute. We'll start with the other things. Okay. Now, yes, madam. Nothing. Peace. Shall we proceed? Now, inventory management and control. Guys, how you can store it? You can store it in two different ways. Centralized and decentralized. What do you mean by that? Centralized means there will be different production department, but storage will be in only one place. Whichever the production department, they should come, take and go from the single stores which is available. So the control will be more or less? More. Because one single store. Decentralized means for each and every production things, we have given a different stores. For each and every different productions, we have given a different stores. For department A, one store, department B, one store, department C, one store. There the control is less. There the control is less. That is your decentralized stores. Central store with sub store or impress store is what, sir? Guys, one major stores we will have. One major stores we will have. Along with that, for each and every department, we will give sub stores also. One major stores we will have. Along with the major store, for each and every department, we will give the sub stores also. Now, that is your major, central stores with the sub stores are impressed. That is, in that sub store, we are not going to store everything. Only few items which is required for an emergency purpose. That will be kept there. Otherwise, main storage will be somewhere far, no? Somewhere far, no? Time waste, right? So, small things will see. Basically like hospitals. District hospital will be one big hospital. At the same time, primary healthcare centers, they will open in a small towns. Will primary healthcare center will have everything? No. Basic how much is there, that will be having. Emergency purpose. But main thing will be there in the district. Same way, main things will be there in the main stores. Small things which is required for the emergency purpose, that will be kept in the sub stores. Got it? Codification and classification of material, you can do it on an alphabetical basis. Basically, you should pour the materials, no. You can't keep the steel. For example, if you go and see the steel industry, 100 types of steels will be there based on the size, specification, etc. So they can't call everything as steel. Then gone. So they will give the code. If they will give alphabetical code, or they will give a numerical code, or alphanumerical together, like that they can give it. All those are the things. Now, maximum level. Maximum level means what, sir? To make sure our cost don't go beyond the level, we are going to decide maximum how much stock I am going to keep, sir. See, here I am not going to explain the formula and all. I am going to just tell the formula. Formula explanation and all in main class, it's done. Yes. So here I don't explain the formula. I will tell the formula. I will tell the meaning and I will tell the formula. If you want a form, how we arrived at a formula? You have a recorded access now. Go ahead, watch it. Sir, I am not your student, sir. Watching through YouTube. Buy it. It will cost 1,450 something. Buy it 1 month. Now, maximum level is what? Maximum level is maximum stock, how much we are going to keep. Maximum stock level. Try to understand maximum consumption, maximum stock level, both are equal. Maximum stock level and maximum consumption are not same. Maximum equal, it seems. This guy is also telling equal. Maximum stock level means relating to how much inventory I should keep. Consumption means in a given time, it could be in weeks, it could be in days, it could be in months. In the given time, how much max to max I will consume. Both are not same. So maximum stock level is maximum stock I am going to keep with me. Formula is what, sir? Formula is reorder level. That is level at which we are going to place the order. Basically, if it's your stock level, try to understand. This will be 0. This somewhere it will be minimum stock level. Okay. Somewhere it will be reorder level. Somewhere it will be maximum stock level. Somewhere here it will be average stock level. Okay. Somewhere here it will be danger level. Now, we are trying to find out maximum stock level now. Reorder level is the level at which we are going to place the new order. So what we will do, we'll take the reorder level, and by the way, your answers and all will be in quantities, not in rupees. We are calculating in units basis. Maximum how many units I should keep. So reorder level plus, by standing at reorder level, how much units I am going to place the order. Reorder quantity. Reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Reorder period means what, sir? From placing the order till we receive the order, how many days will be there? From placing the order till we receive the order, how many days or how many weeks, whatever they have given based on that. Always remember, if the consumption per week is there, reorder period also should be there in a weeks. If the consumption is in days, reorder period also should be there in the days. One in days, one in weeks means that weeks thing is there, no? Bring it to days. Weeks things, bring it to days. If you get it in decimals, then days you bring it to weeks. Into 7. Now listen. What is the formula? Come on. What is the formula? Reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Guys, reorder period is also known as lead time. Lead time. Lead, L-E-A-D. Not need. That is different. Lead, L-E-A-D. That is lead time. That is placing the order to till receiving the order. So what is the formula? Come on, guys. Reorder level plus reorder quantity minus minimum stock level, minimum consumption into minimum lead time, minimum reorder period. Clear? Sometimes what happens, they don't tell how much is ROQ, but That time in question they will give you all the information to calculate EOQ. In that scenario, your EOQ will be ROQ. Your EOQ will be ROQ. But sir, all the information they have given, sir, except annual consumption. Oh my God. All the information they have given except annual consumption. Guess what we should do? EOQ only we should calculate. Exactly. That time you should check whether average consumption is given or what. If they have given average consumption per day, average consumption into 365 will be annual. Average consumption per week, if they have given, average into 52 will be this one. Per month, if they have given, average into 12 will be annual consumption. That's what I told at the time. EOQ. That's what I am repeating now. Which means you should understand how important it is. So, sir, but in class you didn't tell, sir. I told, but I didn't tell continuously like this. Because that is 110, 120 hours. This is. So there if I speak one word, by that time I should speak 5 words here. Sir, but result is same, sir. There also we didn't understand anything. Here also we didn't understand. Shameless. Yes, it seems. That we will calculate. That I will tell. Now, reorder quantity, if it is not given, only EOQ things they have given, you have to find out EOQ. To calculate EOQ, if they haven't given a annual requirement, annual consumption, you are going to calculate a average consumption into days, you will get a annual consumption. Got it? Done. Sir, they haven't given maximum or minimum average. They just gave a consumption, sir. Or they just gave only one type of consumption. Then always assume if at all you are not able to find out the other consumption, then this itself will be the 3. Average also same, minimum also same, maximum also same. That is your maximum level. That is reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Now, sir, minimum level means what, sir? Then we should make sure that our stock will not go beyond this. If it goes beyond this, sir, danger level. I mean, production won't stop. Production won't stop. But it is a red flag telling that went below. For example, in our vehicle and all, petrol, do we think we will use it till 0? No, we'll keep some minimum level. No. Okay, once it reaches, I have to refill. I should make sure it won't reach there. That doesn't mean that I am going to keep that as 0. I am going to keep it somewhere above 0. Now, minimum level will be nothing but, guys, reorder level minus average consumption into average reorder period. Reorder level minus average consumption into average reorder period. Sir, how to know that whether it's plus or minus? Guys, if you remember that table what I wrote, minimum level, reorder level, maximum level. So maximum level you should add, minimum level you should reduce from the reorder level. So reorder level minus average into average. That is average consumption into average reorder period. Always remember, consumption and reorder period should be same in the same units. Days means days, weeks means weeks, months means month. Done. Reorder level minus normal consumption into normal reorder period, or average consumption into average reorder period. Okay, sir. Then reorder level. From that time you are telling, no, sir, what the hell is reorder level? Guys, you can compute reorder level just by taking average into average. Peace. What is it? Average into average plus minimum stock level. Same formula. Minimum stock level is equal to reorder level minus average into average. Reorder level is equal to minimum stock level plus average into average. Or reorder level you can tell it as maximum into maximum. That is maximum consumption into maximum reorder period. What is it? What is it? What is it? Maximum consumption into maximum reorder period. So one thing is clear here. Either the ROL they should give or the minimum stock level they should give to use the first formula. To use the second formula, we can compute ROL, then we can compute minimum stock level. Come on, reorder level has two formulas. What are those? Minimum level plus that you leave. First formula. Priority should be given to maximum into maximum. Maximum consumption into maximum reorder period. Or minimum stock level plus average into average. Or you can tell it as minimum level plus consumption during lead time. That is rarely we use it. Danger level is what, sir? Guys, less than your normal level. That is, minimum level. We kept a minimum petrol. This much should be there. Now petrol went beyond this. Still our heartbeat is fine only. But once it reaches much more less, there is a high possibility that whatever the location we are planning to reach, we might not reach. Immediately what we do? We will take it to the nearest petrol bunk. Correct? Same way, danger level is where for example, one petrol bunk is there, 3 kilometers to our left. Our destination is 10 kilometers. What do you think? First we will go 3 kilometers and then go to 10 kilometers, or 10 kilometers will straight away follow? 3 kilometers, then 10 kilometers. Which means in the danger level, what we will do? Normal production we will stop. Normal production we will stop and will start issuing only to the emergency production. We'll start issuing only to emergency production. So danger level, guys, generally we calculate it as average consumption into not the lead period which is there normally. Because see, we are buying from some supplier. Some emergency is there. That supplier is 10 kilometers far. If emergency is there also, we will go to 10 kilometers only. Nearby, no. So what we will do is we'll get it from the nearby. That is maximum reorder period for emergency purchase. For emergency purchase, we'll keep the nearest one. That will be the one. That is danger level is nothing but, guys, your average consumption into maximum reorder period for emergency purchase. That is your danger level. Average level is nothing but, guys, half of maximum stock level plus minimum stock level. Half of maximum stock level plus minimum stock level. Got it? That is your average stock level. We'll revise the formula once again. Maximum stock level is equal to reorder period, reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Your minimum stock level is reorder level minus average consumption into average reorder period, whereas your reorder level is nothing but, guys, maximum consumption into maximum reorder period or minimum stock level plus average into average. Average stock level is minimum stock level plus maximum stock level divided by 2. And your danger level is average consumption into maximum reorder period for a danger, these things, emergency purchases. Got it? Got it? Inventory system, guys, we got to perpetual and physical. Perpetual, generally what we will do is we'll keep the count of the stock each and every time whenever it goes out, whenever it comes in, and physical check will happen throughout. That is your perpetual inventory system. ABC analysis, guys. ABC analysis is basically we are going to divide our raw material on a inventory on Pareto basis. What do you mean by Pareto? Pareto was one nonsense guy. He gave one theory. What theory he gave, you know? Your company's profit, 80% of your company's sales will come from those 20%. 80% of your company's profit will come from those 20%, whereas remaining 20% will come from those 80%. Which means, for example, India you take, some tax amount is there, we'll collect some tax. In the tax, the 80% will be paid by those rich class people. Correct? Ambani, Adani, Infosys, those people pay the maximum tax. So 80% of the tax collected will be from those 20% of people, whereas remaining 20% will be out of remaining 80%. Or you take any business, your business 80% will be from those regular 20% people, remaining 20% of the sales will be from outsiders, other 80, who will come only once. Got it? Same the Pareto basis what we applied here in the inventories. What inventories will do? In inventories, guys, 80% of the value of your inventory. How much? 80% of the value of your inventory will be relating to 20% of the inventory. Quantity wise it is just 20, but value wise it is 80 or 70, you can tell. That is your A category. Okay? Or A, basically based on that only it is, generally it is 10% of your inventory in terms of quantity will have a value of 70%. Other 20% of the quantity will have value of 20%. Other 70% of the inventory will have a value of 10%. Sir, is this the numbers to be followed always? No. Bit here and there is fine. But generally these are the numbers. That is 10% of inventory will have a value of 70%. This we call it as A category. 20% inventory value will have a 20% quantity, B. Whereas size wise it is 70%. But see, basically you take in a classroom maximum marks. For example, if we conduct a test, yes, and total we take. Now, in the total, 70% will be there from, let's say 100 students are there. Total came to 1000. Now, in that 1000, around 700 marks will be there from that first 10 students. Correct? Proper studious, they will study and come, all those people. Other 200 will be there from the other 20 students. Average. Other 100 will be there together from the 70 students, Samim and team. Now, 70 students together how much? So, 100 marks. C category. So, A category, inventory, storage wise, 10%, but value wise, 70%. B category, 20-20. C category, 70-10. Gold, silver you told in class, not gold, silver. Gold box and water bottle. Is it? Gold, silver and water. But now silver is also like crazy, no? Gold to leave. 1 lakh. 1 lakh for 10 grams, no? Or it increased more than that? 1 lakh for 10 grams. Gold basically, gold, see, there are few things, parameters, generally how it will be valued. Gold for 10 grams, how much they will tell. Per gram, generally they don't tell. If you read the newspaper and all, newspaper in the sense, Samim, there will be a sheet of paper where the news will be there. There they will mention. Okay. For example, few like your coffee, pepper, all those. They will tell for 50 kg how much. Silver, per kg how much. Like that they will tell. Everything they won't tell per gram. Like that it is. Gold generally they will tell it 10 grams how much. 24 carat how much. 22 carat how much. Next, weed analysis. Weed. Vital, essential, desirable. What do you mean by vital, sir? Now only is cupping. See. Hey. It's a high only already. Weed. V is, sorry, not weed. Weedy. Vital, essential, desirable. Vital is what, sir? Vital. Very important. That is, if the stock out happens, you can't produce anything. Stock out happens, can't produce anything. For example, in a automobiles, engines. Engines only is not there. Can you produce car? Can you? No. Essential. It is required for production. No doubt in that. But if at all it is not there, to some extent you can push it. You can push the production. Need not be immediate. Tires. You can park the car in that side, no? Or seats of the car. You can push the car for a time being somewhere near the godown. Later we can fix the tires. Okay? Lights. D. Desirable. Desirable means, guys, if it's there, great. If it's not there, it won't affect our production much. Slowly we can do it. Your music system, mirrors, biryani, spices, all those things. I mean spices in the sense only those things. Clothes and all. Major spices is required. Otherwise it will become like chicken and rice. We will put the same thing to dog in our home. What you prepare now? Called biryani. Pongal, chicken pongal. Oh, yes. So that is vital, essential and desirable. Desirable, if it is not there for some time, you can push it. No problem. FSN. Fast moving, slow moving, non-moving. Fast moving is the one which has a lot of inventory turnover. It keeps on changing. Slow moving is on an average. Non-moving is it is there, go down since so many years. Just throw it away whenever you get a time and availability. Just in time is what, guys? You are not going to store the inventory. You have that system between you and your supplier. So whenever you need an inventory, your supplier is going to send you a inventory. That is just in time. You don't keep you don't store your inventories. You have that control. Whenever you need for production, immediately supplier will supply it to you. Sorry? Drop shipping. Not exactly here. How it should work is, you should be located in the same areas. It should be somehow linked to your factory. Your supplier should be giving it to you. Because production is continuous in nature, no? Immediately you should be able to give it to you. That is your just in time. Inventory turnover ratio, guys, that is how many times our inventory is getting over and refilling, The more the inventory turnover, more the fast moving it is, less the inventory turnover, less the fast moving. Now, how to ascertain the inventory turnover, sir? Cost of goods consumed divided by average inventory. Cost of goods consumed divided by average inventory. Cost of goods consumed divided by average inventory. Cost of goods consumed is nothing but, guys, opening stock plus purchases plus direct expenses if any minus closing stock. Average inventory is opening stock plus closing stock divided by 2. If they don't give both of this, whatever is given, that itself is average inventory. If they give just closing stock, then closing stock itself will be your average inventory. That is opening stock plus purchases plus direct expense minus closing stock divided by average inventory. Clear? That is your inventory turnover ratio. Got it? Hey, by the way, if I move when I am teaching, will it be a distraction? No. What I believe is if I sit and do, it will be to some extent. You will also tell, I will also tell. Correct. I don't know. Recently in this CMA Inter marathon, what I had put, one person has commented, sir, please avoiding moving and dancing. It is distracting. I'm like, okay, what to tell? Imagine, no, 8 hours if you sit from the morning to evening, what should happen to our back? Yeah, I don't know. That comment is still there. I told them not to delete. Let it be there. Thank you for the valuable feedback. We'll keep in mind. The person was like, sorry, sir, if I had hurt with you, my words, sir. I meant in a normal way. I liked the comment. I left it. It didn't hurt. I'm like, what kind of, like these kids, sir. YouTube. Guys, inventory accounting and valuation, all these things I already told you how to adjust. You can just go and check once. Basically, whatever expenses you incur to bring the inventory till the usable condition and usable location, that we call it as that all will be treated as a cost of inventory. All other things will be ignored. Cash discount, trade discount. Trade discount should be taken. Cash discount should be ignored. Subsidy, ignored or taken, reduce it from the cost. Trade discount, reduce it from the cost. Insurance, transit insurance, consider. All those things I told no there. Those things here they have given. Just go through this. And valuation of the issue, we'll do one thing, we'll continue tomorrow. Valuation of the issue as well as the question on the stock levels will continue tomorrow. So tomorrow's our target is material, labor and overhead. We'll see how much ever it's possible. Okay. Thank you. So before that, can we revise the levels, stock level formulas? Yes. We had learnt about maximum stock level. What is maximum stock level formula, guys? Maximum level, reorder level plus reorder quantity minus minimum into minimum. That is minimum consumption into minimum lead time or minimum reorder period. And we learnt about minimum stock level. That is nothing but reorder level minus average into average. Whereas your reorder level is nothing but maximum into maximum or minimum plus average into average. And average is nothing but minimum stock level plus maximum stock level divided by 2. Danger level is average consumption into maximum reorder period for emergency purchases. Correct? Those are the things. And we are left with the 2 more concepts. But before going to those concepts, let's see the question based on the stock levels. Okay. The questions based on the stock levels. I think illustration 1 done, illustration 2 we have discussed. Look at the illustration 3. They are asking reorder level. What and all they have given, sir? They have given normal usage, maximum usage, minimum usage, reorder quantity, reorder period, and calculate reorder level, minimum level, maximum level, and average level. Guys, try to understand over here. The usage as well as reorder period both are in weeks, so no need to convert. If both are in different units, that is one in weeks, one in days, you have to convert it. Either you have to take it in terms of days or either you should take it in terms of weeks. However, multiplying days into or weeks, if you divide by 7, there might be a possibility of getting in a decimals. Instead of that, if you multiply the number of days into week, they will give either 6 days or 7 days. Then that is better than converting days into weeks is better than weeks to days, because decimals possibility will not be there in case of days to weeks. Now, normal usage they have given, that is average usage, maximum and minimum, reorder quantity, reorder period they have given. Reorder level, guys, reorder level formula is what? Max into max, correct? That is maximum consumption into maximum reorder period. Maximum consumption is 450 units per week, whereas maximum reorder period is, for A it is 6. So which is 2700 kgs, whereas for B it is 450 into 4, 1800 kgs. This is your reorder. This is your reorder level. Next is your minimum level, minimum stock level. That is nothing but reorder level minus average into average. That is average consumption into average reorder period or average lead time. Guys, what term they have used in the question? The same term you have to use. Here they have used normal usage. So instead of average usage, use the term average usage. Sorry, normal usage. And they have used the term reorder period. So instead of lead time, use the term reorder period. So reorder level, guys, for the first one it is 2700. For the second one it is 1800 minus average into average, that is 300 into, see here, 4 to 6 week. Minimum is 4, maximum is 6. So average will be 5. That is 4 plus 6 divided by 2. Here it will be 2 plus 4, 6 divided by 2 will be 3. So average lead time will be 5 and 3. So it will be 300 into 5 and 3. So the first one will be 1200 kgs. Sorry, units, not kgs, because they have given it terms of units. So use the term units, and 1800 minus 900 will be 900 kgs. Will be 900 kgs. Got it? Sorry, units. Next, maximum level. Maximum nothing but reorder level plus reorder quantity minus minimum into minimum. So reorder level for A will be 2700, B will be 1800 units, plus reorder quantity is 2400 and 3600 minus minimum into minimum. Minimum is 150 into minimum lead time is 4 and 2. That is 2400 plus 2700, 5100 minus 600, 4500 for the first one units, 1800, 5400 minus 300, 5100 units. Hope it is clear. Average stock level is minimum stock level plus maximum stock level divided by 2. That is 1200 plus 4500, 5700 divided by 2. That is 2850. First one it is 2850. Next one it is 900 plus 5100, 6000 divided by 2, 3000. 2850 and 3000. These are the average stock levels. Got it? Guys, yesterday I told about inventory turnover also, if I am not wrong. Yes. So inventory turnover is nothing but cost of goods consumed divided by average stock. Cost of goods consumed will be opening stock plus whatever the cost of purchases plus direct expense minus closing stock. In the given case, they haven't given that and all, they have given directly how much is material consumed. Average stock is nothing but opening stock plus closing stock divided by 2. Opening stock plus closing stock is 26,000 divided by 2 will give to 13,000. So your inventory turnover ratio will be nothing but 78,000 divided by 13,000. If I am not wrong, it should be 6 times. Yes, it should be 6 times. If they ask in a year how many days on an average inventory will be held, guys, in a year you have changed your inventory for 6 times, which means if at all it is 360 days, which means on an average you held inventory for 60 days. On an average you held the inventory for 60 days. That is your inventory turnover. Got it? Fifth one, let it be. Sixth one, let it be. Seventh one, eighth one, ninth one, 10th, 12th one. Concentrate here. Normal usage they have given, reorder quantity they have given, maximum usage, minimum usage they have given. So here they are not using the term consumption, they are using the term usage. And reorder period also they have given. A, B. Calculate reorder level, minimum level, maximum level, average stock level. Come on guys, reorder level formula is nothing but maximum into maximum. So for A, maximum is how much guys? Maximum 75 per week and maximum lead period is 6. So 75 into 6 is 450. And for B, maximum is 75 because for both maximum is remaining same. So maximum into maximum reorder period is 300. This is for A and B. This is your reorder level. Minimum level is nothing but guys, your reorder level minus average into average. Reorder level minus average into average, A and B. Reorder level is 450 and 300 minus average into average, that is 50 into 5, 50 into 3. Correct? 50 into 5 is 250. That is 200. Next one is 50 into 3 is 150. That is 150. This is your minimum level. Next maximum level they were asked. What is the formula for maximum level? Reorder level plus reorder quantity minus minimum into minimum. So for A and for B, reorder level is 450 and 300 plus reorder quantity is 300 and 500 minus minimum into minimum, that is 25 into 4, that is 100, and 25 into 2, that is 50. So that is 750 minus 100 is 650. This they didn't tell anything, so it will be in the units. And next one is 800 minus 50, 750 units. Average is nothing but minimum plus maximum divided by 2. That is 200 plus 650 divided by 2, which will come to 425. Next one, it is 150 plus 750 divided by 2. That will come to 450. Got it? 13th one we have discussed, 14th one we have discussed, 15th one we have already discussed, 16th one I told you what to do, 17th one we have discussed, 18th one. From the following data, you calculate the inventory turnover ratio and put forward your comment. Basically guys, inventory turnover ratio is nothing but cost of material consumed divided by average inventory. Cost of material consumed is nothing but opening stock plus purchases plus direct expense minus closing stock. Here direct expenses is not there, only opening, purchases, closing is there. So for material A, cost of material consumed is opening stock 10,000, purchases 52,000, 62,000 minus 6,000, that is 56,000. And for material B, it is 9,000 plus 27,000, which will come to 36,000 minus 11,000, which will come to 25,000. Average inventory is opening stock plus closing stock divided by 2. Opening stock is 10,000, closing stock is 6,000, divided by 2 is 8,000. Whereas your B will be 9,000 plus 11,000, 20,000, divided by 2 is 10,000. So A will be around 7 times, B will be around 2.5 times. So basically A is fast moving than B. So the comment is A is fast moving compared to B. If you want to give it by giving the numbers as the inventory on an average holding period, you are going to divide 365 divided by 7 and 365 divided by 2.5. You will get to know on an average how many days the inventory is held. So based on that, you are going to give your comment. Hope it's clear. 19th one, they are asking you to calculate these 4 levels. Reorder quantity is calculated on the basis of the information given. So guys, try to understand here ROQ is not given. As I already told you, instead of ROQ, they will give you EOQ computation information. Using EOQ computation information, you are going to compute a ROQ. EOQ itself will be ROQ, or they will tell ROQ is 50 plus EOQ or 100 plus EOQ. Then accordingly, you are going to do. For EOQ, if you add 50 or 100, you will get it. And sometimes for a EOQ, they don't give annual consumption. That time what you should do, sir? Average consumption they will give. If it's in weeks, multiply it by 52. If it's in days, multiply it by 365, provided they haven't given how many days in a year. So listen here. Cost of placing order is 20, that is O. Number of units to be purchased during the year is 5,000. So A. Purchase price unit inclusive of transportation cost is 50. And annual storage cost is 5, that is C. So your EOQ, that itself will be ROQ, that will be guys 2 into A is 5,000 into O. O is 20 divided by carrying cost will be 5. Carrying cost will be 5. That is 2 into 5,000, 10,000, 10,000 into 20 will come to whatever it is divided by 5 square root. Sorry? That is there, that is 50. But for us, what we need? Carrying cost. Now, carrying cost is your storage cost. Purchase price is purchase price. Okay. So, 200 units. That will be your ROQ. EOQ itself will be your ROQ, as the question is not talking anything about it. Lead time they have given. Here they use the lead term. So, formula you should use lead time instead of reorder period. Average 10 days, maximum 15 days, minimum 6 days, emergency purchase 4 days. Rate of consumption 15 and 20 they have given. Guys, average you know, maximum you know, so minimum easily you can find out. Average is nothing but maximum plus minimum divided by 2, which means minimum you will get it as 10. If you use the formula, you will get it as 10. I am not going to tell it again. Very basic. It is average is nothing but minimum plus maximum divided by 2. Average is 15. 15 into 2 will become 30. Minimum plus maximum. Maximum will come this side. 30 minus 20 will come 10. You told you don't tell, sir. Reorder level. What is the formula, guys? Maximum into maximum. So maximum is how much, guys? 20. Maximum reorder time is 15. 20 into 15 is 300. 300 units. 300 units. Done. Next, they have asked the maximum level. Maximum level is reorder level, that is 300 plus reorder quantity, that is 200 minus minimum into minimum. Minimum is 10 and here minimum is 60. So that is 440. 440. Next is minimum level. Minimum level is nothing but reorder level minus average into average. Reorder level is 300 minus average is how much, guys? Average is 15 and average is 10. 15 into 10, 150. 15 into 10, 150, which will come to 150. Danger level, guys. Average consumption into maximum level, maximum number of days for a lead time for a emergency purchase. Average is how much? 15. Lead time is how much for emergency purchase? 4. So which will come to 60. This is your danger level. So the answers are 300, 440, 60 and 150. Hope it is clear. By the way, when I am doing this question of valuation of inventory, no, that LIFO, FIFO and all, remind me something called as goods receipt date and purchase order date. Goods receipt date and purchase order date. Okay, leave. I will tell now only. If at all I forget, I will tell once again, but for the timing, try to understand. They will ask you to do the stores ledger. Also, they will ask you to calculate the minimum level, maximum level, etc. Guys, try to understand. Using the stores ledger, you will get to know how many units you are consuming. Correct? Consumption column, issue column, if you see, you will get to know how many units you have consumed. That is, in issue column, you are going to take everything. If any returns and all is there, that you are going to reduce. How much you consumed, you will get to know. Based on that, you can find out average consumption. In that only, you will get to know in which month you consume maximum. So maximum consumption you can find out. Minimum consumption you can find out. Correct? At that time, lead time, how to compute, sir? They will give you purchase order date relating to that goods receipt date. So that itself is purchase order date is date of placing the order. Goods receipt date is date of receiving the goods. What is the difference? That itself is a lead time. So you are going to compare the lead times. They will give 2-3 purchase orders, 2-3 goods receipt numbers. So you are going to check maximum how much is a lead time, minimum how much is a lead time, like that. If at all they give in the stores ledger, see, basically purchase order date we have nothing to do with the stores ledger, but still if they give means they will give it to calculate a lead time. Purchase order date to goods receipt date, whatever the difference is there, that is your lead time. That is your lead time. If at all they give the stores ledger plus the levels, if they want to check in a single question, they will give it like that. Got it? Now, listen. Measure tubes are manufacturers of a picture tube for TV. Average monthly market demand is 2000 tubes. So, see here, that is tubes itself is a raw material, tubes itself is a finished goods. If at all they told raw material consumption is 5 units per tube, then your annual consumption is not 2000 or monthly consumption is not 2000, it will be 2000 into 5 because your EOQ is relating to raw material, not the finished goods. Here the tubes are finished goods only, but as the other informations are not there, that itself will be the raw material also. They have given few information and they are calculating, they are asking compute EOQ, and also if the supplier is willing to supply quarterly 1500 units at a discount of 5%, is it worth accepting? Reorder level they are asking, minimum level they are asking, maximum level they are asking. First, let's calculate a EOQ. EOQ is nothing but square root of 2AO divided by C. First, 2 into A. Guys, 2000 is monthly demand, which means for a year it is 24,000. 2000 into 12. Annual requirement is 24,000 into O. By the way, sir, annual consumption is also there. In the question only, they also told how many units to be purchased. For computation of EOQ, whether we should take the annual consumption or number of units to be purchased during the year. Number of units to be purchased during the year. Because EOQ is relating to purchases. No. EOQ is not relating to consumption. Hey, EOQ is not relating to consumption. EOQ is relating to purchases. So always and always remember, A means consumption, purchases. If they give consumption as well as purchases, always go for purchases, annual purchases. During that year, how many units I have to purchase? Got it? Into. So we don't tell A is equal to annual consumption. We tell A is equal to annual requirement. Annual requirement. 2AO. O is what, guys? 100. Divided by C. C, they are telling inventory carrying cost is 20% per annum. Cost of tube is 500. 500 into 20% is 100. Correct? So how much is 2 into 24,000 square root? 219.0. So 219 tubes. 219 tubes. It is my EOQ. Correct? 219 is my EOQ. Now, guys, how many orders I should place as per EOQ? I need 24,000. Each and every order, if I place 219, how much will get? So basically, yeah, they are not taking a market demand. You are telling that they have taken a normal usage per week and into 52 they have done. That also you can take. Yeah, you can take that. How much? 5,000? 102. So it is 102 tubes. Correct? So 102 tubes. Now, guys, try to understand. We need 102 tubes. We need 102 tubes. And by the way, one more question which I told in EOQ is that thing. When the goods are perishable in nature, that we have solved in that additional question discussion thing. Just go through that once. Goods where they are perishable in nature. For computing maximum stock level, for computing EOQ, cost of EOQ, all those things, it's a bit different. Now, go through that once, okay? Perishable in nature. Don't miss it. So, how many units you want? 5,200. If you place 102 tubes per unit, this one, how much it will be? Sorry? 51 orders. 50 point, how much you are getting? If you get 50.1, till 51 only. Number of orders. Otherwise, you won't be able to get 5,200. 102 into 51 is how much? You are getting 50 point? If you do 50 into 102, how much it will be? 5,100. Let's say it is 0.1 also around. If you not able to get 10-15 units also, you can't be able to get annual requirement. So you should always and always, in EOQ you can round it off in a normal way, but for number of orders it is always next number. 51. In case of our normal suppliers offer is was 5,200, each and every order I am going to give you 1,500. 4 orders. 4 orders. Now, first, cost shall we compute under EOQ. Purchase price will be 500 only, no doubt in that. 500 into 5,200. How much? Purchase price under EOQ and under offer. 26 lakhs. Done. Under offer price, he is giving a discount of 5%. That is 500 minus 5%. 25. 475. So how much is 5,200 into 475? 24 lakh 70,000. This is purchase price. Ordering cost. In case of EOQ, we are placing order for, where we have written 51 orders. We are placing order for, 51 orders we are placing. Each order cost 100 rupees. 5,100. 5,100. In case of the supplier offer, we are placing just 4 orders. So 4 into 100, 400. Correct? Carrying cost. Carrying cost is nothing but, guys, half of order size. Half of order size into carrying cost per unit per annum. Carrying cost per unit per annum. Guys, in first scenario, that is in EOQ, half of order size is 102 into carrying cost per unit per annum. We already calculated it as rupees 100. How much it will be? 5,100. Might be difference might come because of the rounding of stuffs. Now, in case of the other order, half of 1,500 into, guys, carrying cost is not 100. Why? Purchase price is changing. Purchase price is 475. So the carrying cost will be 20% of 475. Sorry? 95. So half of 1,500 into 95. 71,000. May I know the total cost, please? 26 lakh 10,200 and 25 lakh 41,650. So which is better? Offer is better. So better to accept the offer. Better to accept the offer. Next, reorder level. That is nothing but maximum into maximum. Maximum is how much? 200 tubes per week. Maximum lead time is 8. 200 into 8, 1,600. Minimum is nothing but reorder level minus average into average. Minimum is 1,600. Average is 7 weeks. And here average is 100. So 100 into 7, 700. So 1,600 minus 700 is 900. So minimum stock level is 900. Maximum is reorder level plus reorder quantity minus minimum into minimum. Now, how much is our maximum? Maximum is reorder level of 1,600 plus reorder quantity of 102 minus minimum into minimum. Sir, why 102, sir? EOQ is a reorder quantity if the question is silent. If the question is no, that is beneficial in the particular question. Is it worth accepting or no? The conclusion is yes, worth accepting. If they give, consider that as reorder, then only reorder. Otherwise, it's always and always EOQ is reorder. Got it? So based on that, we will calculate a maximum level. This is all about your stock level and inventory turnover. Now we are last one part is remaining, that is your valuation of inventory. Don't talk there. Don't talk. In class also you talk, in revision also you talk. In examination, if you talk 5 years, you can't write examination. So make the habit of not talking. Already Papa, one faculty is almost in the edge of depression. Law faculty. Now listen. That is the worst part of taking it as a last paper. When you take the first paper, majority of you guys won't be a friends. So slowly it will start. Second paper also it will be in the growth period. Third also it will be kind of growth period. Fourth paper it will be saturation point. Where you will be like, hey, I know that person's whole life history. So what else you will do? You will talk. So luckily this time it is our Karthik sir. And your management accounting, if I am not wrong, mine will be second or third paper. But the worst part is, already majority of your friends who are coming for the second group. But let's see. By then Karthik sir again will come for an audit if at all. I don't know. If at all he feels like coming, he will come to auditing, and after auditing I might take a MA. Then it would be peaceful, because he would tight and go, no. So in that only I might sail for 100 hours. Management accounting done. Done. Listen guys. Valuation of issue as well as closing stock, we got different methods like FIFO, LIFO, base stock method, average, simple average, weighted average, moving simple average, moving weighted average, replacement method, realizable method, standard price method, inflated price method. Now, first, FIFO. Sir, in FIFO, how it works, sir? Guys, always and always remember this. FIFO, all these things are assumption. Assumption. FIFO means what? Whichever the inventory we received first, we issued first. Whichever the inventory we received first, that will go first. Which means in FIFO, closing stock will consist of recent stocks. Correct? So, this is the assumption. Need not be we have issued in the same order. These are the assumption to value the issue as well as closing stock. So, in FIFO, what is the assumption? Whichever we received first, that will go first. LIFO, whichever we received last, that will go first. So which means closing stock will be which were there in the beginning. Closing stock won't be the recent stocks. Closing stock will be old stocks. Assumption. Average prices, simple average price means, guys, we are going to consider only prices. We'll take the average of prices. But always remember, in your study mat, what they have done is, when doing a simple average ledger, stores ledger, they have used a FIFO also for that. That is, prices will be averaged out. For calculating what are the inventories are available, issue they will take it out from the first lot. Along with question, I will show that again. Weighted average is basically, you are going to consider quantity as well as prices. Quantity as well as prices. Moving simple average, moving weighted average means 3 months means we will take 3 months average. 1 month you will leave. Next you will take next 3 months average. Like that it is. January, February, March for the month of April. February, March, April for the month of May. March, April, May for the month of June. Like that it is. That is your moving average. Simple. If you take only prices, moving simple average. If you take the weighted, I mean both quantity as well as prices, then it will be moving weighted average. If it's a 5 year average, 5 months average means you take 5 months. So 6th month will be based on those 5 months. Then first month you exclude, next 5 months for the next 1 month. Like that it is. For the month of June, January, February, March, April, May. average of this for the month of July, February, March, April, May, June, like that. That is your moving averages. Replacement method means basically right now whatever the inventory I have, for that in market, not the similar kind of product in market, how much is the value. For example, I am a iPhone dealer, let's say. Now I have a stock of iPhone 15, not 16, iPhone 15. Now I might have bought it for 80,000, 19,000, but in replacement method, what I am going to check, for the same iPhone 15, not for my iPhone 15, for the same iPhone 15 in market, what is the value? Now let's say in market the value is 60,000, which means I'm going to value my issue, value my closing stock at the market price of similar product. That is your replacement method. Realizable price method means, guys, exactly my iPhone only. If I sell my iPhone, my customers are ready to pay how much? Exactly my raw material only will fetch how much? If I sell the my raw material only, that is realizable price method. Got it? Replacement price means similar product, how much it will fetch. Realizable price means this particular product, how much it will fetch. Whereas standard price means you are going to predetermine the price. Irrespective of the actual price, the issue and the closing stock valuation will happen at a predetermined price. That is your standard price method. And inflated price method means, guys, there might be a possibility of the prices more than predetermined. For that, what you are going to do, whenever the fluctuation happens, that you will adjust in the prices and you will write a inflated prices. Shall I show you the ledgers, few ledgers? Yes, then it will become easy for you guys. And always remember how to treat certain things they have asked: scrap, wastage, defective, etc., etc., etc. Very clear, guys. If the defective material it is, to rectify it, if at all you incur any expense, treat it as a factory overhead. Okay. If at all you sell the scrap, reduce it from the cost of production. There could be normal scrap, abnormal scrap, normal wastage, abnormal wastage. Normal wastage, normal means which you cannot avoid due to inherent nature. What you should do, add it to the cost of good units. Add it to the cost of good units. Whereas if it is abnormal, charge it to costing P&L. Sir, how to ascertain the cost? Guys, I'm not going to tell all the history and all now. I will show you one simple formula. If you remember, I will take the total cost. I will take the total cost minus scrap recovery from normal loss units. That's it. Not the total loss units, from normal loss units, divided by total input, how much I have given, minus normal loss. Only normal loss. I will get a cost per unit. That only I am going to apply. If you multiply it with the abnormal loss units, that is loss over and above the normal loss, that you will get the cost of abnormal loss, which you should charge it to costing P&L. However, while charging it to costing P&L, if any scrap recovery is there from the abnormal loss, that should be reduced and remaining amount should be charged to costing P&L. However, the same thing we are going to do it in the process costing also. Okay. So basically very simple. If it's a normal in nature, charge it to cost. If it's abnormal in nature, charge it to costing P&L. See guys, fifth one. See, here they have given only purchases. The thing which I told, they will give purchase order dated, goods receipt number and goods receipt date relating to which purchase order. Let's say one is 10th of January, goods receipt is 20th of January, which means 11th, 12th, 13th, 14th, 15th, 16th, 17th, 18th, 19th, 20th. 10 days. 10 days is a lead time. 10 days is a lead time. So like that they will give 3-4 purchase order, 3-4 goods receipt number. You will compare each and every purchase order with each and every goods receipt number. There you will take maximum, minimum. Minimum lead time, maximum lead time. And consumption, how you can compute, sir? Issue column, you will get to know how much consumed, provided in the from the issue column other than issues like return and all will be there. No, that should be excluded. Only issues should be considered. Got it? See here, prepare a statement showing the prices of issue on the basis of simple average and weighted average they are telling. Guys, very simple. The stores ledger will be have three parts. Which are those three parts? Receipts, date, basically date, receipts, issues, balance. And in the receipts also, quantity, price, value, quantity, price, value or amount, whatever you want to write. Balance also, quantity, price, value. Okay. First, guys, purchase of 100 units. Opening stock is not there. If the opening stock is there, that will come in the balance column. Okay. First, on 1st March, we are purchasing 100 units. Simple average I am showing first. 100 units at the price of 10 rupees, which will come to 1000. Issue column, no. Balance column, 100, 10,000. Guys, I am going to do it as per your ICMA material only. Listen here. I am not going to tell again what are the history and all. Whatever they have given, I am going to show under that. Now, purchase 200 again. Again 200 we are purchasing. Guys. Only once you will write the amount column. After that, see what you are going to do. You are again purchase 200 units at the rate of 10.2. Value will be 2040. Now guys, try to understand. Units I will write 100 plus 200. 300. At what price, sir? At what price, sir? Guys, 10 plus 10.2. 20.2 divided by 2 observations. 300 into 10.1. 3030, or what I am going to do is 1000 plus 2040. I am going to consider 3040. I will tell what. Okay. Now, next, there is a issue of 250 units. Sir, when the issue is happening, which price we will consider? Guys, we got 2 stocks. We got 2 lots of stock. Now, 10 and 10.2, 20.2 divided by 2. 10.1. How much it is? 250 into 10.1. 2525. Now, what I am going to do is, in balance, out of 300, 50 is remaining, and 3040 minus 2525. 515. I am going to write 515. Clear? Now, again, what is happening? Purchase of 200 units at the rate of 10.5. 2100. In balance, I will write 250 and 2615. 2615. Clear? Done. Next, purchase 300 units at the rate of 10.8. 300 into 10.8. Sorry? 3000? 240. So, that is 550 and 2615 plus 3240. 5855. Clear? Now, next, we are issuing 200 units. Guys, for this price, you should be very careful. What is it, sir? Along with LIFO, you are going to apply FIFO also. What do you mean by that, sir? Guys, we issued 250 now. We are going to assume out of that 250, we are going to first issue from the first stock. That is 100. Remaining 150 is issued out of 200. Which means out of the 200, 50 units are available. First stock is completely exhausted. Only second stock is available. Third stock is available. Fourth stock is available. For the price average now, I am going to ignore the 100 units price, because I am going to assume that is completely exhausted. See, I am again telling, I am sticking only to your assumption as per your material. Clear? Now that 100 is gone. So for price, average price, it is 10.2 plus 10.5 plus 10.8 divided by 3. 10.5 and 200 into 10.5, 2100. Now try to understand, out of 550, 200 will go out. So balance will be 350 units. Out of 5855, 2100 will go 3755. Clear? Done. Next, what is happening? Again, we are issuing 200 units. Now, sir, guys, try to understand. First 100 units was already exhausted. Second 200 mein 150 got over in first one only. 50 was remaining. And again, when we issued 200, first we issued that 50. So the second also got exhausted. From the third 200, we issued 150. Which means third is still remaining. How many units? 50 units. So that is, third is there 10.5, fourth is there 10.8. So average will be 10.5 plus 10.8 divided by 2. 10.65. 200 into 10.65. 2130. Now it is 150 units. 1625. 1625. Done. Next, purchased 100 units at rupees 11. So 100, 11, 1100. So the balance will be 250 and 2725. Correct? Then we issued 150 units. Guys. First one already exhausted. Second one was already exhausted. In third one, 50 was exhausted. Sorry, 150 was exhausted. 50 was remaining. Yes or no? See, total how much is gone? Now already 250, 200, 200. 650 is gone. Which means 100 from the first one, 200 from the second one, 200 from the third one. In this 300, 150 was exhausted. Which means this is remaining. That is 10.8 plus 11. 21.8 divided by 2, 10.9. So 150 what we are issuing, that is valued at 10.9. 150 1,635. So here it will be 100 units are remaining and 2725 minus 1635. 1090. So your closing stock will be 100 and 1090. Value of consumption will be this plus this plus this plus this. 1090, 100. That will be your closing stock. I hope in FIFO how you are doing. Hope you guys understood. This one, see madam, 250 was there. In that 100 from this, 150 from this, which means from in this 50 is remaining. So before this, we have these three prices now: 10.2, 10.5, 10.8. Now, what if it's a weighted average method, sir? What if it's a weighted average method? Guys, in that the prices will be considered on the basis of values. First, we are purchasing what? 100 units. At what rate, guys? 10 rupees. Value will be 1000. My balance will be 100 units, 10 rupees, 1000. Clear? Next again, purchased how much? 200 units at the rate of 10.2. Correct? So it will come to 2040. Now in units I will write 300. Guys, I will take value as 3040. Price also I will consider. Average price will be 3040 divided by 300. Because summation WX divided by summation W. Summation WX is units into weight is units, rate is X. So units into price is 3040. divided by units is 300. How much? 10.13. Correct? 133 or 13, whatever you want to take. Next, what is there? Issue is there. Correct? How many units? 250 units. We are issuing at 10.13, which will come to. Just take 250 into 10.133333333333. 2533. Then 2533 will take. Yes. Now, guys, 50 units are remaining here, and value wise, how much is remaining? 3040 minus 2533. 507. Price will remain same. That won't change, because price will change only when new units will be purchased at different rate. Here units is not purchased, so after issue price will remain same. Done. You will get 10.14. That is because of rounding off. That's it. So next, purchased 200 units at the rate of 10.5. How much? 2100. So here it will be 250 units, 2607. How much is 2607 divided by 250? 10.42. Done. Next, we purchased 300 units at the rate of 10.8. Will come to 3240. So units will be 550 and totally will be 5847. Prices will be same. What same? It cannot be same. 10.6. Prices will remain same only in case of issue. 10.63. Okay. Done. Next we are issuing 200 units at the rate of 10.63. 2126. So it is 350 and 10.63. Whatever the balance it is. 5847 minus 2126. 3721. Again we are issuing 200 units at the rate of 10.63. Again 2126. 150 at the rate of 10.63, which will come to 1595. Basically this minus this you do. Just don't multiply the rates. You will get somewhere there only. Next, purchased 100 units at the rate of 11, which will come to 1100. So it will be 250, 1100 divided by 250. Sorry, 2695. 2695 divided by 250. 10.78. Then again we issued 150 units at the rate of 10.78. How much it is? 1617. That is 100 units are remaining. How much is 2695 minus 1617? 10 per unit. How much? 10.78. That is under weighted average. 10.7. Weighted averages need not be LIFO. We are considering each and every stock. Once we find out average, no? No, before, whatever remains here is a closing stock.
The issue price.
Issue price is basically averages. No, here, because I told no, madam, once your issue happens, your price won't change. When the receipt happens, price change. So last was issue. That's why price didn't change. If at all it was purchased, it would have changed.
What you are you have the balance, that is what is giving it.
See, try to understand. If at all it was 150 purchased, then it would have changed. So, guys, one thing you have to remember here. I was about to tell, I forgot. Leave. Forgot. Yeah. Here you are going line by line basis. Okay, with the balances. Okay. Now, guys, there is something called as base stock method. What do you mean by base stock method? Once either from the opening balances, if the opening balances are there, or from the first purchases, we are going to keep some stock. Now that stock will be our base stock. Whether it's FIFO or whether it's LIFO, we are not going to use that stock. Whether it's FIFO or whether it's LIFO, we are not going to use that stock. Now that is your base stock. See here. The stock of a material held was 400 units at the rate of 50. The following receipts and issues were recorded. You are required to prepare the store's ledger showing how the value of issue would be calculated under base stock method, FIFO, LIFO, base being 100 units. They are asking base being 100 units. They want to know it under FIFO as well as LIFO. Guys, so base stock will be out of the opening stocks. Base stock will be out of opening stock. Got it? What I was about to tell was, that's what weighted average. Once you find out average for that particular level, there won't be any other price. Average price is the price. But in simple average, what we used to do, along with FIFO, you used to do no. For that, that had a own identity. Here, no identity. Once the average is found out, finish. Now, guys, which are the columns will be there? Date, I am not going to consider date, okay? Date column should be there. I am not going to consider date. Receipts. Issues. Balance. Correct? In the receipts, it will be units. Units, rate, total, units, rate, total, units, rate, total. Now try to understand. First, there is a opening stock of 400 units. Guys, as there is a base stock, I am going to split into 100 and 300. 100 units and 300 units. Both are at the rate of 50. First I am doing it under FIFO, okay? 100 into 50. 15,000. Clear? Now, first I am purchasing how many units? 600 units or 100 units? I am purchasing 100 units at the rate of 55, which will come to 5,500. So here now try to understand, stock will become all these are stocks only. All these are stocks only. Next, issued 400 units. FIFO, as it is a FIFO, guys, when issuing 400 units, I am not going to touch the base stock of 100. Other 300 and 100 I am going to issue. 300 at the rate of 50. 100 at the rate of 55, which will come to 15,000 and 5,500, which means balance will be 100 units of 50 rupees, 5,000. That too only base stock. Base stock. Done. Next, purchased 600 units. Hey, by the way, when we return it to our supplier, will it come in a issue column or receipt column? Issue column. Because that is going out of the stores. Whenever our departments will return back our goods, we issue to production department, no, when they return back our goods, it will be there in the receipt column. And whenever they return, just assume it as recent receipt, recent purchases, and add it to the last line. If at all they return, no, the price will be the price which we issued recently, and in the balance ledger what we write, there take it as a recent stock. Don't add it to the particular stock, take it as a recent stock. So 600 units at the rate of 55, which will be 33,000. So here it will be 600, 55, 33,000. Next, we are issuing 400 units. Of course, that 400 will be from this only. 400 from the stock of 55 only. Like that only, we are going to do it for each and everything. Make sure you are not going to touch the base stock. Got it? Under LIFO, it will be, what happened, sir? Under LIFO, recent issue will be, recent purchase will be issued first. Recent purchase will be issued first. You are going to do under that way. Here also, all these are based on that only, guys. Here only FIFO is there. No, this thing is there. Return from department B. Try to understand. Here, we issued to department B 115 units at the rate of 195. So, see, from the LIFO. So, this one is what we issued. Correct? 225 of 195 rupees. That one we issued. This one. Then we got this one. These are the two stocks available. Now what we did, 115 we issued, FIFO method. So, we issued from this one. 110, 195, this one, and 320 remaining as it is. Now, those guys returned it back to us. So, it will come in our receipt column. 35, 195, 6825. Correct? Now, when you are adding it back to the stock, don't add it to that particular respective units only. Take it as a new stock. That is, old will come as it is. After that, take it as a recent stock. This is the return, how we are going to treat it from the departments. Hope it is clear. Yes, these are the few things, guys, you have to keep in mind. What are the moving monthly simple average of January, February, February, March? Which means you are going to consider January month's prices and February month's prices, and you are going to compute. See, first take the average of January and February. Of that, take the average, you will get a moving average. As simple as that. If it's a 3 months, divide by 3. If it's a 4 months, divide by 4. All these things you have to go through this. All these things once. Then you will be easily securing your 7 to 8 marks from your material costing. One of the easiest chapter. Try to understand, scoring that 60 is not at all difficult if you study properly, and if you see. The thing is, few people will be having this. All chapters, half you study. Like rat eats, no. Like that. Then there is no point. Because you know about your luck. The other half only will come in exam. In this mindset only, we'll go to exam also. If we know also, we forget things. Instead of that, give your time. 1 month is remaining. Push hard. Study for 10-12 hours. You won't die. If you sleep for just 6 hours, you won't die. Try to understand. Push to the maximum extent. Try to get that. See, for example, in a group 1, if you take, which and all are the subject we got? Accounts, law, tax, costing. Try to understand accounts and law, accounts and costing is the basics what you had in your foundation in accounts, correct? And costing is also not much difficult thing, correct? So, these two papers target to get at least like 65 to 70. If you get this 65 to 70, aggregate is sorted. Then all you have to do is 40-40 in this. And law also, tax also, it won't be that difficult. Try to understand 1 month is there. If you utilize your 1 month properly, guys, easily you can crack it. Because so far in your institute examination, they don't ask like rocket science and all. Correct? They ask that whatever is there. So don't overthink much. What if it come difficult and all? You put your efforts. Okay. Just you might have played, you might have wasted your time, you might have did a lot of time pass, whatever you might have done so far. Classes getting over in 2 days or 1 day. I don't know. 2 days. I didn't know. I didn't speak to him. Daily therapy you should give. No. Today's therapy is not yet over. So, laughing shameless. So, 2 days it will get over, let's say. Proper 1 month will be there. More than 1 month. Guys, if you give your 100% at that time, you can crack it. Still the things are there in your hand. Whatever you played, forget it. Just think about your parents' money. Give and try. Nothing will happen. Got it? Fine. With that, we have completed our material cost. Now, we'll be starting with employee cost. We'll take a quick break of 5 minutes and we are starting with employee cost. Standard price and all, they might tell like 10% over and above the past price. Then last year's price we will calculate based on that plus 10%. Like that. Okay. Settle down, guys. Now we'll be starting with the employee cost. What do you mean by employee cost? Whatever you pay to the employees, workers, that itself is a employee cost. Guys, it could be in the cash or it could be in kind. That is, whatever expenses you incur as a benefit to the employees, everything is an employee cost. Okay. And employee cost could be direct employee cost, indirect employee cost. Direct employee cost means employee cost which could be traced in the final product, whereas indirect employee cost is those which cannot be traced in the final product. For example, factory labor cost that can be traced in the final product. However, manager's salary, can you trace it in the final product? No, that is indirect. So, whatever you incur, guys, whatever you incur, everything is a employee cost. Either it could be in the cash or either it could be in the kind. Now, sir, labor cost management means what, sir? Trying to make sure that our labor cost won't exceed more or won't exceed more than our standard. Sir, how to do it, sir? Can we fire our employees and all? No. By doing that, you should not reduce your cost. You should take the different measures to reduce the cost. What are those, sir? What are the steps involved in effectively managing labor cost? Guys, one is production planning. That is planning exactly how many units we are going to produce, how many labors are required for that, how many labor hours are required for that, etc. Without production planning, if you just tell produce and for the work of 80 workers you are putting 100 workers, then what is the use? Correct? So that is your production planning. You should have a labor budget. That is, during the year, when I am planning to produce so much, this much should be my cost of labor. Labor standard, that is setting a labor cost for the actual cost. That is, boss, skilled worker, I should pay only 200 per hour. That is standard. Let's say they are taking 210. Why is it so? Now setting a standard. That is your labor standard. Labor performance report. Checking whether the laborers are effectively working or no. Whether laborers are wasting their time, idle time or no. All those things. What do you mean by idle time, guys? Laborers not working. That is, production is not there, but payment is there. Then only it's idle time. Idle time means for that paid, but in that labors didn't work. Always remember that. So to become idle time, you must have paid first. You can't tell 24 hours in a factory they were there for 8 hours, 16 hours they didn't work, idle. No. Let's say you paid for 10 hours, they work for 8 hours, 2 hours is idle. So difference between paid hours and worked hour is idle time. Not that total hours minus worked hour. No. Idle time means always and always you must have paid and they shouldn't have worked. And incentive scheme, that is telling laborers, see boss, if your efficiency is more than 100%, if you produce fast, you are going to get some bonus and all. When we do that, automatically they will produce faster, so the efficiency will be more. If the efficiency is more, cost will be less. Cost will be less. And keeping the proper accounts of the labor, how many hours they have worked, how many hours are idle time, how much we have paid, what are the measures have taken, like that. Proper accounting if we keep, we can control over our labors. Clear up? There are different departments, plays a different role. Personnel department, basically your HR department, they are there. We should tell them, boss, which kind of labor I want, at what price I want. Their work is to get the right labor at a right price. The HR team's work is what? Right labor at right time. They should get us right labor at a right time, right price. Whereas engineering department works is trying to eliminate a manual work as much as possible. They should bring the nice machines where number of employees were there 8 earlier. Let's say manual work was more. Now for the new machine only 5 workers are required. Like that, engineering department should bring that automation, should reduce that manual laborers work. They should work towards that. That is their contribution towards labor cost control. Timekeeping department. Here these guys should keep a proper time when the labor enters, when the labor leaves. So accordingly, only paid for them being in the factory. We are not going to pay in general. For example, government office and all. How they will pay? Monthly. When the people will come, when they will go, who cares? But they are getting in full. It should not be like that. When the employees will come, that time will start. When the employees will leave, that time will end. Based on that, the payment will be made. So this is how timekeeping department will contribute towards employee cost management. Payroll department, again, they should properly calculate everything and they should make the payment. There should not be any mistakes and all. Cost accounting department, they are going to account for all these things. What are the factors, sir, to control the employee cost? You can assess the manpower requirement, exactly how much manpower I want, and keeping the control over timekeeping and time booking. Timekeeping means, guys, recording when the employee entered, when the employee left the organization. That is time keeping. Time booking is when they were in the factory, no, how they spent their time. For example, I enter the class at 7:30. Let's say I leave at evening 7:30. Now I entered at 7:30, they have recorded. I left at 7:30, they have recorded. That is time keeping. Now from 7:30 to 7:30, what I have done? 7:30 to 12:30 foundation classes, 12:30 to 2:30 break, 2:30 to 7:30 CMA marathon. Now that is time booking. That is time booking. Got it? You should have a better control. Then you can find out how much idle time is there, whether it's normal, abnormal, all those things. Time and motion study. That is for this particular work, how much time I should allocate and how much is the movement. Because if the movement is there more than production, that is somewhere there the material is there, every time employee should go there and get it here, go there and get it here, then automatically it takes time, no? So for that particular work, how many hours should be taken and how to reduce it. That is your time and motion study. Control over idle time and overtime. Idle time is basically we are paying for them, they are not working. We should have a better control over it. And also your overtime. Sir, overtime is good only, no sir, but overtime we have to pay more than the normal rate, no? More than the normal rate, no? So we should make sure they work it in the normal hours only. Overtime is only in case of inevitable situations. And control over employee turnover. That is, guys, when the employees leaves and all, we might have to train them again. We might have to spend on a selection cost, joining bonus, like that. So many expenses will be there. No, instead of that, make sure your employee stays in your organization only. That time their productivity also will be more. Training, etc. No need. All those things could be achieved. So you should have a control over employee turnover. Employee turnover means employees leaving and going the organization. Basically change in the composition of the employees. That is employee turnover. Streamlining the workforce plan. That is exactly telling what is your work boss, how to do it. Streamlining it. And implementing a good time and attendance system, enhancing the workforce productivity, training them more and more and more, how to do this work in a better way, how to do this work in a faster way, like that, so that we are increasing their productivity. One not 10 products, tomorrow onwards, one not 12 products. Automation and technology solution, that is reducing the manual work as much as possible, wherever it's possible, automate the works so that it will be easy. I mean, number of employees will be less. And employee training and skill development to increase their efficiency. Basically, these are the things. Guys, work study is there. Work study is what, sir? Work study is nothing but understanding what we are doing right now and finding out where we can improve. Understanding how we are doing our work now, what are the things are there right now, and how to improve that work to reduce the cost. That involves following time study, that is understanding exactly to perform this job how many hours is required. For example, marathon, they are like, marathon boss take 15 hours. Now they calculated each and every chapter need how many hours, like that. Now that is time study. Motion study, that is making sure movement of the employees are not more. If the movement of the employees are more, then the employees will get tired. Yes, fatigue will be there, because of that efficiency will correct. So to reduce the efficiency, you have to, to increase the efficiency, you should reduce the movement of the employees. And method study, that is what are the methods we are applying to do it now and how we can improve it. What are the methods we are doing now and how to improve it. That is method study. And work measurement, that is measuring exactly, comparing all these things. What are the improvements we have got? Is there any changes in our method, etc.? And basically based on those changes, any changes in our employee cost or no, all those analysis it is. Got it? All those things go through it once, guys. And there is something called as job evaluation. What do you mean by job evaluation, guys? That is, see, for everyone, can you pay the same amount? No. So different job requires different skills. Based on a different skills, your payment also will be different. For example, you take ArivuPro. Yes. Buy also will be there from 7:30 to evening 7:30. Correct? Housekeeping. We will also be there. Faculties also be there. Let's say from 7:30 to 7:30. Both of us are there. Yes. So can they make a same payment for Bhaiya as well as us? No. Bhaiya will get paid more because yes, he will get paid more now because his work is more. Like that, for which work, how much to be paid, they are going to evaluate on that. That is based on the skills required, based on the time required, based on the education qualification, based on the performance, all these things, based on the criticality of the work, all these things basically the job will, work to work will change. For example, Rolls Royce, few things will be handmade and only few employees are there for that. Do you think they are going to pay them normal like any other? If they do that, they will leave and go. If they leave and go, what they will tell? Handmade. Nothing. Yes or no? So you should evaluate which job should be paid, what amount. How to evaluate, sir? One is point ranking method. That is, we'll find out what are the different factors involved in this particular thing. Okay. For example, teaching. Skills are required. Education qualification is required. Experience is required. So many things are required. Based on that, we will rank this one. Point. Give a points. This for 10 point, 10 point, 10 point, 10 point, like that. For other work, experience, how many points? Education, how many points? Like that. So based on that, we are going to fix the salary for the different work. Ranking method, based on the criticality of the work, we'll rank 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like that. Rank, beginning rank, important ranks will get more payment, less ranks will get less payment. Grading method, like that only, we'll grade it. Grade 1, grade 2, grade 3, grade 3. Which and all work will fall in grade 1 will get paid more. Grade 2 will paid less. You might have heard in newspaper and all, they will give government office examination. Grade A officer, grade B officer, grade C officer. Grade A officer is like your Tahsildar and all. Important. Grade D, group D, basically your assistants and all. Like that. So we'll grade and according to that payment we'll do. There also the payment will be differing, no? Like that. Merit ranking is what, sir? Merit ranking is basically for that employee how much to give. For that particular employee, how much to give. That is your merit ranking. For example, now let's say one teacher is there. Okay, 5 hours of class, 7:30 to 12:30. Exactly taking 5 hours and leaving. Yes. Let's say other faculties are there. 7:30. Let's say Karthik sir and me. Okay, Karthik sir and me. Now, Karthik sir and me. I am like 7:30 means 7:30, 12:30, 5 hours. In fact, less than 5 hours. Correct? I will leave on time. But Karthik sir, sometimes, let's say class is for 20 days. Around 18-19 days, he will take bit more than 12:30. Correct? To complete the concept. Sir, why 19 days he will take? Sir, one day he will complete early. No, so he will give you. So, now, for payment for Karthik sir as well as for me, if they give the same, assume, don't you think there is no value for the work? Don't you think there will be no value for the work? Yes or no? Karthik sir experience, my experience, altogether different. Correct? So now try to understand. So you can't pay each and every employee with the same amount. What you will do is, you will find out which employee should be promoted, which employee should be paid more. For that you should analyze now which employee it is. For them you should give a point and all. No, that is your merit rating. That is your merit rating. Got it? Timekeeping, time booking and payroll. I told you timekeeping is nothing but recording when the employees will come to the organization, when they will leave the organization. Time booking is when the employees worked in organization, how many hours they have worked in what work, how many hours is idle time, all those things. Payroll is nothing but based on the time booking and timekeeping data, they are getting paid now. For that, calculating how much should be paid. That is your payroll. Sir, what are the different methods of timekeeping? Sir, one is attendance record, that is present to absent to present to absent, recording it in books. Next one is disk method, that is employees will be given a disk. When they come in the morning, they will keep it there. Then they will go. When they go back, they will take and go. Now, when they keep and go, the timekeeper will record, okay, this employee, this employee, this employee. When they will go back, they will take and go. So, we'll get to know at what time they entered, at what time they left. Correct? But of course, proxy is possible. That is, you should get your own disk. No, you got your friends, everyone. 4-5 disks. That means the employee is there inside, but actually employees there are. Time recording clocks or a clock card. That is, basically we'll get a card, like ID card kind of thing. You will go, you will punch. Automatically, as per your ID, it will record at what time you went. And while leaving, you will punch it again. At what time you came out of the organization. Biometric is like basic on a physical trait. Like, not threat, traits. TRAITS, physical behavior. Either it could be retina scanner, either it could be face scanner, either it could be thumb impression. Got it? So, that is your biometric attendance system. Generally, face scanners will not be there. If the face scanners are there, few women employees might complain, no? Morning it recognizes me, evening while going. So, I mean, they will be tired, no? Huh. Time booking, how is it possible, sir? That is, which work he has done for or she has done for how many hours? For which job, how many hours? Guys, daily timesheet will be given. Here, where the employees will be recording. Today morning, I started at this time. I did this, I did this, I did this, I did. Basically, you guys have seen, we after the class recording the comment. This video, duration so many minutes. Which concept is covered, what is covered. Like that. Now that is time booking. That is time booking. Whereas weekly timesheets is not daily but weekly. Given to employees weekly once. Boss, in a week, what and all you have done, write and give. Job A, how many hours you spent. Job B, how many hours you spent. Job ticket. Job ticket is basically, for one job, one ticket will be given. Each and every employees have to write this job, how much hours I spent. Whereas labor cost card is basically which involves several operation or stages of completion. Instead of giving one card to each worker, only one card is passed on to all the workers. Basically, one work is there. Okay, let's say marathon. First they will give it to me. I will write costing 15 hours. After that they will pass it to Karthik sir. Marathon 15 hours. Akhilesh sir, marathon 20 hours. Dilip sir, marathon 18 hours. Now that is one single sheet, all the employees, it is passed between employees. Whereas your job ticket is like, for each and every employee, one ticket will be given. Time and job card, basically this gives what time it is taken to complete the job, as well as it will also consider, like calculates whether you are present on that particular day or no. Payroll department, by using this data, they are going to compute how much should be paid. Guys, in question they might ask, compute the total employee cost or compute the total employee earnings. Always remember one thing. Employee cost means from the point of view of the organization, business. That is what and all you will spend. Guys, one, what you give to your employees, plus also you have to pay some money on behalf of employees to government, no? PF, employer contribution, etc, etc, etc. Now, don't you think that is also our cost only? So now my employee cost means basically how much I should give in hand to employees, their contribution, how much I deducted and gave to government, plus my contribution, how much I gave to government. That is employee cost. Employee earnings means basically employees, how much they will get in hand. That is, how much is their gross salary. If at all employer's contribution is already added in that, exclude it. If their contribution which is to be given to government, if that is added, that also you exclude, because that they won't get in their hand, no. After all the deduction what they get in hand, that you should calculate for employee earnings. For example, gross salary 10,000. In that, employees contribution 2,000 should be given to government. Employer also should contribute 5,000. Now for the cost of employer, that is employee cost will be 8,000 what we will give it to employee, 2,000 employees contribution what we are giving to government, 5,000 what we are giving as our contribution, 15,000, or you can tell it as 10,000. That is employees only, but 8,000 we gave to them, 2,000 we gave to government, plus what extra we are giving. Employee earnings means 10,000 is their earnings. However, in the 2,000 is given to government, so their earnings is 8,000. So always remember, earnings means you should take in-hand salary to employees, whereas cost means you should take total cost to employer, total how much they are incurring on that particular employee, whether cash or in kind. Labor turnover means what, sir? That is employees leaving and going the organization. Change in the composition of employees in the organization. What are the causes, sir? Personal causes could be there. That is, they might not be liking the environment. They might be having family responsibilities. They are like, I want to change the career. That Naukri.com ad will come. No. It's just 1 year. Oh my God, before your birthday celebration, your farewell came. But the same numbers will come in the bank account. Balloon. Like that, they will be changing their career and all. All those things will be there. Also, sometimes can't help. Will be sitting like this, working, something will fall. Gone now. Yes or no? Now let's say one faculty is taking one particular batch. Yes, they had enough of it. He will be like, here onwards, I won't take for that batch at all. Now, that is again a retirement. Now, these are the personal causes. I don't know which. I'm literally thinking how much you might have frustrated him. Because generally he won't get angry or frustrated. Huh? What could? Why? Unavoidable causes. Unavoidable causes is like, guys, you have to leave the employees. For example, recession is going on. You can't help, you have to leave your employees now. Yes. Shortage is there, material shortage is there. Now you can't do the same activity like you were doing earlier. In all those situations, you are going to leave your employees. Avoidable causes. That is, me going and telling ArivuPro people, boss, whatever you are paying me is less. Now, they have an option to control. No, sir, we'll pay more. Finish. Let's say they don't pay more, I will go. Now, that is avoidable. If they want, they can avoid it. That is avoidable causes. Sir, how to calculate? How to calculate labor turnover? Guys, you got 4 methods to calculate labor turnover. One is additions method, separation method, replacement method, flux method. Okay. Additions method means what? Some new jobs are created. Guys, try to understand. Already we had 100 workers. Now we are opening a new wing, or we are opening a new position, because of which we are recruiting other 10. Guys, it is not for the same position. Additional positions we are creating. Those are called as additions. Whereas replacement is like, in this 100, no, 20 employees left. Okay. For the same position, 16 employees came. Now the 16 is replacement. Try to understand the difference between additions and replacement. Replacement means same position, new employees. Addition means new position, new employees. Got it? And that is replacement. Separation means this 20 employees left, no, separations. Whether they get replaced or not get replaced, when they leave, separation. Whereas flux means you are going to consider separation, replacement, new addition. Separation, replacement, new addition. That is your flux method. So what is the formula for addition, sir? Number of additions divided by average number of workers during that particular period. Let's say 3 months, 6 months, 1 year, etc. For example, let's say this will come as 15%. This will come as 15%. Now try to understand, 15% is coming for how many months? Let's say 3 months. Now if they ask you to calculate equivalent employee turnover, for a year, then what you should do is 15 for 3 months, for 12 months how much? 60%. That is your equivalent employee turnover. Converting it to 1 year. Average is how much you had opening during that beginning of that 3 month, at the end of that quarter. Beginning of the quarter, how much you had, plus end of the quarter, how much you had, divided by 2. That will be your average number of workers during that period. Number of separations divided by average number of workers will give you separation method. Number of replacement divided by average number of employees will give you replacement. Flux will be like, guys, additions plus replacement plus separations divided by average numbers or they are using the formula one more as number of additions plus number of separations, half of number of additions plus half of number of addition plus separations. That will give you flux method labor turnover. Sir, and these are important, keep this thing in mind. And there is something called as accession, guys. What do you mean by accession? Total number of employees recruited during the year. That is accession. That is 1. Total number of employees. 1 will be due to replacement, 1 will be due to additions. So replacement plus additions will give you accessions. Replacement plus addition will give you accession. Sir, what are the cost of labor turnover? Preventive cost. That is incurred by organization for maintaining the worker satisfaction and discouraging from them leaving the employment. Whatever the cost they incur for that will be your preventive cost. That will be your preventive cost. Like employee benefit, training and development, workplace and wellness program, competitive compensation, employee recognition program, all these things. Whereas replacement cost, that is when they want to recruit a new employees, replace the old employee with the new employee, whatever the cost they incur, that is your replacement cost. Like recruiting the employee, that cost, training and orientation of those employees, productivity loss, because new employees whenever they come, do you think they will be 100% productive? They won't be 100% productive. So there will be productivity loss also, and also there could be a wastage. There could be a wastage also. Got it? There could be wastage in the production, whatever they are doing, because it might be not up to the mark. Not up to the mark. Got it? Now, sir, how to treat the labor turnover? Preventive are treated as a overhead expenses, and replacement may be treated as the fault of that particular department and charge it to that particular department, or charge it as a overhead. Charge it as a overhead, but end of the day, remember that both are extra cost only. That is, if the employee turnover is not there, that cost won't be there. See here, they have given this question. During October, following information is obtained from the personnel department. Labor force at the beginning of the month is 1900, end of the month is 2100, which means average is 2000. Correct? During the month, 25 people left. Separation. 40 persons were discharged, which means total 65 is separation. How much is separation? 65. They left, we removed, nothing matters. End of the day, whether they went out of the organization, separation. 280 workers were engaged, out of which only 30 were appointed in the vacancy created by the number of workers separated. So, 280 workers were engaged, leave that, out of which 30 was, 280 workers were engaged, means 280 workers are added. But in that 30 is due to replacement. 280 is total accession. By the way, guys, sorry, addition means accession, new joinees means only to the new position. New joinees means only to the new position. Addition means accession here. Now, calculate the labor turnover in different method. First one is addition method. That is accession. Total accession is how much? Replacement plus new joinees. 280. Average 2000 into 100. 14%. Separation. Number of employees left. 65. Out of 2000 into 100. 3.25. Replacement. 30 were replaced out of 2000. 1.5. Next is flux. Flux is nothing but accession plus separation. Accession is how much? Accession is 280 plus separation is how much? 65. Sometimes you are going to use half of this divided by 2000. How much it is? 8.6. 8.625 or 8.63. Got it? So, okay. So remember that additions means not the new joinees. Additions means accession. Recruitment plus new joinees. New joinees means new joinees. Okay. Done. See here. The extract from the payroll of the measure Maheshwari Bros are there. Number of employees at the beginning, number of employees at the end. By the way, if they ask you to calculate equivalent annualized employee turnover, then this is all for month into 12. If you do, you will get for a year. Number of employees at the beginning is 150. Employees at the end is 200. Total divided by 2. 175. Number of employees resigned 20. Discharge 5. This is separation. Number of employees replaced due to resignation and discharge. Replacement. Calculate the labor turnover of the different methods. First, separation method. 25 by 175 into 100. How much? 25 by 175 into 100. 14.28. That is separation. Replacement will be 20 by 175 into 100. 11.43. Flux will be like separation plus replacement because additions is not there. New joinees are not there. So additions is just a replacement. That is 25 plus 20 divided by 175. 25.71. But you can take it as half of this also. You can take it as a half of this also. That's what I told. I don't know when they are using half or when they are not using half. You better do one thing. In both the methods you do income. Flux with using half for the numerator, without using half for numerator. Both you do income. This question, you remember, that is LMR, last minute revision question. That is, find out the profit foregone. Guys, profit foregone, try to understand. I told you, I showed you in ICI material, similar question is solved in a different way. In ICI material, it's solved in a different way. Basically, what they are doing is, in ICI material, whatever they are losing, productive hours, that plus where they worked and they didn't produce, both they considered as the production lost. But in ICMA material, they are considering only and only how much is lost due to not recruiting. For example, here you try to understand, they have given 4.45 lakhs. Yes, and they have told that in that 4.45 lakh, as a result of the delay in the personnel department, 1 lakh potential hours were lost. The actual direct labor hours include 30,000 attributable to training. So 0.3 here is for training, which means 4.15 is where they worked. Correct? This productively they have worked, no doubt in that. And in the 0.3, that is in the training, half of it is unproductive. That is 0.15 and 0.15 is productive, unproductive. This is unproductive. This is productive. So 4.3 is productive. 0.15 is unproductive. Basically in ICI material, what they are doing, boss, this 1.5 is unproductive. Also 1 lakh hours is not at all utilized. So hours lost, they are considering it as 1.15. But in ICMA material, what they are doing, they took the productive as just 4.3 only. But production lost, they are considering only 1 lakh. They are considering only 1 lakh. So I am not going to tell again how the ICI had done and all. I will tell according to your study mat what they have done. I hope you understood. What I'm trying to tell, what is the difference there? Now, in your study material, what they have done, sir? Very simple. Guys, you know that contribution is equal to profit. You can consider contribution percentage is equal to profit percentage. Remember that I showed the workings also, but here now I am not going to show the workings. Contribution percentage is equal to profit percentage. Now try to understand, guys. Try to understand. Last year, sales amounted to 83,03,300, where the PV ratio was 20%. Correct? That is your contribution percentage. In the given question, we are going to use it like a profit percentage also. Now, guys, last year what they have done is, of course, we are paying them for 4.45 lakh. That is 4,45,000 hours. Correct? But in that, what is happening, sir? In that, 30,000 hours is relating to training. Whether 4,15,000 hours is not relating to training, it will be complete productive. No doubt in that, this is completely productive. Whereas in this 30,000 hours, they are telling, boss, 15,000 hours are productive, 15,000 hours are unproductive. So basically last year, out of 445,000 hours, total productive was just 4,30,000 hours. Correct? Now, last year, guys, just by working 4,30,000 hours, we were able to achieve the sales of 83,03,300. Guys, again I am repeating, unproductive hours, they are considering only and only due to delay in recruitment. They are not considering 1 lakh plus this 15,000. They are considering only 1 lakh. So I am going to do in that way only. But according to me, they should have considered 1 lakh 15. But once they have asked the same question in examination, there also they have considered only 1 lakh. Okay. Now listen, for this 1 lakh hours, how much it is, sir? In that 1 lakh hours, if at all we work productively, how much units we would have sold, or how much sales we would have made? 19 lakh 31,000. This much extra sales we would have made. If at all this much extra sales we would have made a profit of 20% also. 3 lakh 86,200. This much extra profit also we would have made. This much extra profit also we would have made. Guys, this we didn't do, but this we lost. This profit we lost. Plus, due to these all nonsense things, we incurred a settlement cost of 43,820. We incurred a recruitment cost of 26,740. We incurred a selection cost of 12,750. Training cost of 30,490. Total, this much is what we lost in the profit. This is what potentially profit we lost. Guys, sometimes they will give whatever they have produced, no? In that 10% is defective product. To rectify the defective product, you have to spend, let's say, 50 rupees per unit. Then that also will be forming part of your, for example, they will tell 1 lakh hours our normal employees will work. 1 lakh hours they will work. In that they will produce 10,000 units. Correct? Now, let's say in that 1 lakh hours, these guys would have produced 10,000. In whatever they produce 10,000, 1,000 is defective. To rectify this defective, we are spending 500 rupees for each unit. Now, this 1,000 into 500, 5 lakh also will form part of your employee turnover cost. Keep that thing in mind. That is rectification of the defective. I think in additional question bank, when we are doing, we have done this. We have considered this and done it. Where defective is also there. Keep that thing in mind. Sir, overtime means what, sir? Overtime means basically the employees working either before the working time or after the working time or on the holidays. Employees working before the working time or after the working time or in the holidays. Now that is overtime, and overtime will be paid at more than the normal time. Now, what you pay more than the normal time, that we call it as a overtime premium. That we call it as a overtime premium. For example, normal hours we are paying 100. Now, overtime when they work, we are paying 180. Now, 80 rupees extra we are paying. No, that is overtime premium. Sir, how to treat the overtime premium? Guys, you should check. Why that? See, overtime normal rate will be there. No, that will be employee cost only. No doubt in that. But overtime premium, purely overtime premium. That is over and above normal rate what you are paying, that one. How to treat that, sir? Guys, if at all that overtime is worked due to the expedite order, that is emergency order by the customer, and customer is asking you to work, in that scenario, charge it to the particular job. Charge it to the particular job. No, sir, overtime is work to cope up with the orders. Sudden increase, for example, you are a bag manufacturer. In the month of May, June, your sales will increase. Yes or no? Then it will get to stagnant. Now, for 2 months, can you employ new employees? Can you ask the employees to join for only for 2 months? No. So what you will do? You will tell your current employees only to work for more. Now, to cope up with the sudden orders, when you are asking them to work extra, now that is, guys, you are going to treat it as a overhead. That is, you are going to treat it as a overhead. Now, if at all you are working due to a particular department's mistake, charge it to that particular department. Due to unseen circumstances, like your flood, etc., then charge it to costing P&L. Guys, if at all due to worker shortage and you are trying your best to bring the workers, and now it has become a regular, that is, working overtime has become a regular, then not only going to charge to that particular job, calculate the inflated rate, that is, treat the overtime as normal only, divide it by the total hours. For example, normal is 10 lakh, overtime is 3 lakhs. Now your total wages will be 13 lakh. Normally you work for 10,000 hours, here you work for 200. Now 13 lakh divided by 10,200. This will be my normal hourly rate. Normally I will be charging this. I won't be charging normal rate anymore per hour. I am going to charge it at a inflated rate. I am going to charge it at a inflated rate. That's how you are going to treat the overhead premium. Sir, idle time is there, sir. Idle time. Guys, idle time could be normal idle time, abnormal idle time. Normal idle time means which you cannot avoid. Giving employees break to have food. Correct? Rest time. All those things are normal idle time. Normal idle time, charge it to normal cost only. For example, if the employees working hours are 48, 4 hours are normal idle time, then whatever the cost is there, divide it by 44, which means charge it to number of hours they have worked. If at all it is abnormal, then charge it to costing P&L. For example, normal idle time was 4 hours, but total idle time is 7 hours. In that scenario, for example, let's say you paid your employee 5,000 rupees. Okay. Now 5,000 divided by 44. Effective hours. That is total hours paid minus normal idle time. 113, leave 4,400 I will do. Rupees 100. Yes, 100 per hour. Correct. Now what you are going to do is 100 per hour is your cost. So to compute a cost, what you should do? Total hours minus normal idle time, which will be called as effective hour. And the rate what we computed now is effective hourly rate. Now 3 hours is abnormal is there, no? 3 hours into 100. That will come to 300. Charge it to costing P&L. So abnormal idle time, charge it to costing P&L. Normal idle time, adjust it to effective hours. Adjust it to effective hours. Got it? Now cost of idle time means idle hours into hourly rate. Whereas idle time ratio is, in my case, 7 hours is idle time when the total hours allowed was 48 into 100. That will be your idle time ratio. Got it? Wait, I will just show you through ICA material once how that overtime premium thing I told. No, that thing I will show you. Give me a second. Now, guys, listen. Hey, where overtime is worked regularly throughout the year as a policy due to worker shortage, then what you should do? Calculate the inflated rate and apply it to job throughout. There is no differentiation between normal rate and overhead rate. Correct? Now try to understand. I will calculate the rate. How, sir? For a whole factory, I will calculate, not for particular job. I will calculate for a whole factory, not for a particular job. Listen here carefully. What I am going to do? See, before and after normal working hours, if they pay, they will get 175% of basic wage rate. Now, 75% is a premium. If they work on Sundays and holidays, 225 is what they are going to get. That is 125 is a premium. Okay. See, 100% is normal. Over and above that, what they get is premium. Because they are talking about total wages. Overhead rate. Hey, overtime rate and overtime premium are different. Overtime rate means for working overtime, total how much they will get. Normal rate plus overtime premium. Overtime premium means extra how much they should get. They will get. Now, guys, so normal rate is 100. If they work on Sundays, I mean before and after working hours, they will get 175 rupees. If they work on Sundays and holidays, they will get 225 rupees. 225 rupees. Now, during the previous year, 1 lakh hours they worked in a normal hours. That is 1 lakh into 100. How much? 1 crore. How much? 1 crore. Now, overtime before and after work, 20,000. So 20,000 into 175. 20,000 into 175. 3 lakh? 35 lakhs. 35 lakhs. And 5,000 into 225. 5,000 into 225. 11 lakh? 25,000. Now the total is how much? 1 crore? 46 lakh? 25,000. This is your total employee cost. What I am going to do is, my cost is 1 crore, 46 lakh, 25,000 divided by 1 lakh 25,000. Sorry, 117. Guys, I am going to charge directly 117 into 1125 throughout. Basically, 117 I am going to charge for all the jobs, for whole 125,000 hours jobs. So for this particular job, I am going to charge 117 into 1125. How much? 1 lakh 31,625. This is due to worker shortage. Next, worked irregularly to meet the requirement of production. That is like bag example which I gave. You should treat it as a overheads. You should treat it as a overheads. Guys, normally if at all you work for 125,000 hours, we would have paid you 1 crore 25 lakhs. Correct? Correct? But you are getting paid for 146,25,000, which means extra how much you are getting paid? 21 lakh 25,000. Guys, try to understand. In this job now, normally for 1,000 hours, what I am paying, there is no overtime as such. So 1 lakh 1000 into 100, 1 lakh, correct? Overtime premium is 0. In this scenario, 100 into 100, 10,000 is normal rate. Overtime premium is 75 rupees. 75 into 100, 7,500. In this 25 hours, 2,500 is normal, 25 into 100. Whereas overtime premium is 125 rupees. 125 into 25. Sorry? 3125. Now it is 1,12,500 and 10,625. Now 1,12,500 will be treated as employee cost. 10,625 will be treated as overheads. Overheads. 10,625 will be overhead. 1,12,500 will be employee cost. Done. Next, what they are asking, where the overtime is worked at the request of the customer. So whole whatever is there cost, that is 1,12,500 plus 10,625 will be charged to customer completely to the job. 123 125 will be completely charged to the job itself. Please go through this. I hope you remember how to download the ICI materials. In ICI material chapter number 3 employee cost, in that illustration 5, please go through it once. I'm feeling this kind of question might come in the examination. How to treat the overhead premium, overtime premium. Give me a second. Now, sir, what are the different methods of remuneration payable? Guys, we got a time rate system, piece rate system, bonus, indirect monetary incentives. Now, time rate system means what, sir? Basically, guys, based on the hours worked, we are going to pay hourly rates. Piece rate means per piece how much it is. Bonus means we give individual bonus or group bonus. Individual bonus means for each and every employee based on their work. Sometimes what happens, they can't be able to work as individual in that particular work. So as a group, if they work, then only the product will get over. In that scenario, what we will do, for a group as a whole, we will give a bonus. That is group bonus. And indirect monetary incentive are like profit sharing and co-partnership. That is, we are treating them like owners. We are giving them some profit share. That is your profit sharing and co-partnership. Got it up? So in the piece rate, guys, in the piece rate or in the time rate first, we got at an ordinary level, that is per hour how much it will be fixed and it will be paid accordingly. Sometimes high wage levels, that is, the system is a variation of time rate at ordinary level, in the sense that in system workers are paid at a time rate, but the rate is much higher than the normally paid in the industry or area. That is your time rate at high wage level. You are paying more than industry. Whereas graduated time rate is basically based on the person to person, the time rate will change. Job to job, person to person, price rate will change. Now piece rate system means based on the units produced, you are going to making them a payment. And in the piece rate, we got a straight piece rate. What do you mean by straight piece rate, sir? How many units you produce into rate per unit. Finish. Whereas there is something called as differential piece rate. That is, if some employees, for example, in 8 hours I asked you to produce 800 units. Now if at all you are producing 900, don't you think for extra 100 you should get something more than what you should get normally? So that is your differential piece rate. Under that we got Taylor's differential piece rate, Merrick's as well as Gantt task. Now Taylor's, what does Taylor will tell, sir? Taylor suggests that two rates for two class of workers. That according to the tailor, if the workers are efficient, that is, if the workers are efficient 100% plus, they should be paid at 120% of the normal piece rate. If they are inefficient, that is less than 100%, they should be paid at 80%. Got it? If the worker's efficiency is 100% plus, then it is 120%. If the worker's efficiency is less than 100%, then it is 80% of the normal piece rate. By the way, exactly 100, 120. Now, if at all, sir, how to calculate the efficiency? Units wise, guys, actual output divided by standard output. Actual output divided by standard output. Whereas, if it's a time basis, efficiency shall be calculated as standard hours by actual hours. Hours wise, standard by actual. Because 8 hours I have allowed. You have completed in 6 hours. Whether you are more efficient or less efficient. More efficient, which means your numerator should be more. That is standard by actual. I asked you to finish off 10 units. You finished only 8 units. More efficient, less efficient. So numerator should be less. So 8 by 10. What was 10? Standard output. What was 8? Actual output. So output wise efficiency ratio is actual by standard. Hours wise it is standard by actual. See there. From the following particulars, calculate the earnings of X and Y. Standard time allowed per unit is 20 units per hour. Normal time rate is 60 per unit. Which means per unit, what is the hourly rate? Per unit you tell. 30 rupees for 20 units. 1.5 per unit. 30 rupees we are paying per unit. So 1.5 per unit. 2.5 or 1.5? 1.5. Differential rate. 80% piece rate when below standard. 120% at or above standard. That is 100% or more than 100%. In a particular day of 8 hours, X produced 140 units, Y produced 165 units. Guys, in 8 hours, normally we are expecting them to produce how many units? 160 units. Correct? This is our standard output. Now, actual output of A is how much? 140. X is how much? 140. Y is 165. So, efficiency will be, first one it is 140 by 160. Numerator is more than denominator, which means you will get less than 100. How much is 140 by 160? Tell that, no. 87%. For the second one, 103 percentage, which means into 100 you should do. So now, here you will be paid at 80% of normal rate. That is 1.5 into 80%. 1.2 Here you will be paid at 1.2 per unit. Here you will be paid at 120%. That is 1.8. 1.5 into 120%. 1.8. So for X, how many units X is producing? 140 units. Getting paid at rupees 1.2. Y, how many units Y is producing? 165. Getting paid at 1.8. One not? 168. 168 and 297. That is under which one? Taylor's differential. Now, there is Merrick's differential piece rate. Merrick, what he tells her, guys, don't be that harsh also. What Taylor is telling, boss, you are more efficient or at least 100%, you will get 120. Otherwise, directly 80. Merrick is telling, don't be that harsh also. So what Merrick told, boss, up to 83%. Up to 83%. That is 82.9999%. You are going to get a normal piece rate. Whether you are less efficient, 1% efficient, 2% efficient, 10% efficient, 82% efficient, you are going to get a normal rate. If at all you are 83 to 100, you are going to get 110%. If at all you are more than 100, 120%. That is what Merrick told. He is not deducting anything for being less efficient. But although you are being less efficient, but you are somewhere between 83 to 100, including 100, you will be getting paid at 110%. If at all you are more than 100, then you will be getting paid at 120. Got it? Gantt task. Gantt task, he mixed the time rate and piece rate. What Gantt task did? Mix the time rate and piece rate. If at all your production is less than the standard, you are less efficient, then you will get a time rate. Piece rate we don't pay you only. If at all you work at 100%, then whatever you get as per time rate, for that we are going to give you 20% extra. If at all you are more than standard, then you will be get at a high piece rate for the entire output. High piece rate is how much, sir? They will tell. High piece rate, they will tell. Got it? So, what the Taylor's differential will tell? Less efficient, 80. Exact 100 or more than 100, 120. What does Merrick tells? Less than 80. Less than 80. 100%. 83 to 100. 110%. More than 100. 120%. Gantt task. Less than 100. Guaranteed time rate. 100. Time rate plus 20%. More than 100. High piece rate. Listen. XYZ are the three workers in a manufacturing company, and their output during the particular 40 hours week is as follows: 96, 111, 126. How many hours week? 40 hours week. Always remember, standard means, guys, you should compute standard for actual. Standard means not standard for standard. Standard means standard for actual. Keep that thing in mind. Done. Now, guaranteed rate per hour is 10 hours. Low piece rate is 4. High piece rate is 6 per unit. This is for Gantt task. High task is 100 units per week. Normal piece rate to be taken as rupees 6 per unit. Compute the total earnings and labor cost per unit under Taylor, Merrick and Gantt task. First Taylor. Guys, 100 is a normal, which means X, Y and Z. X is less efficient, less than 100. Y is more efficient. Z is more efficient. So X will be paid at 80% of unit. How much it is? 6 rupees into 80%. 4.8. Y and Z will be paid at 6 into 1.2. That is 120%. 7.2 and 7.2. So as per the Taylor, X will get paid 96 into 4.8. 4. 60.8. Y will be paid at 7.2 into 111. 799.2. Z will be paid at 907.2. Got it? Now, going to Merrick. What Merrick tells? Hey, X is less efficient, I agree. But pay him at least 6 rupees. 100%. Y is more efficient. More efficient by how much? 111%. 111 is a standard. Sorry, actual. Standard is 100, which means 111%. So, more than 110%. I mean, more than 100%. So, he should be paid at 120%. How much it is? 7.2. Z will also be more than 100%. What Merrick tells? Up to 83. 100%. 83 to 100. 110. More than 100. So, here both are more than 110. So, 120%. 120%. So, 6 into 96. Here, this person will get 576. These two will get same like a Taylor. Correct? Done. Now comes the Gantt task. What Gantt task is telling? Oh, is not reaching the efficiency. Pay him under a guaranteed hourly rate. How much is hourly rate? Hourly rate is 10 rupees per hour. He is working for 40 hours. 40 into 10. 400. Why? Oh my God, more efficient. Paying under a high piece rate. That is 6 rupees. 6 into 111. 666. Whereas next one 126 into rupees 6. 7. So the first one it is 460.8, 799, 907. Second one it is again Merrick, no? Oh, Merrick not straight away 100%. We didn't check the efficiency. How many percentage it is? No, is 96%, no? Efficiency is 96%, no? So we should pay 110%. So not 6 rupees. How much? 6.6. How much it will be? 633 point. Understood, da? 633.6. So much. Under Gantt task. First it is 400. Hourly rate. 666. 756. Hope it is clear. Now, piece rate with the guaranteed rate system. That is, boss, you will be paid at the piece rate. Provided, anyhow, you produce, you don't produce, do whatever you want, you will get a daily wage. You will get a daily wage. You produce, you don't produce, do whatever. You will get a daily wage. Along with daily wage, if at all as per your piece rate, your earnings are more, you will get a piece rate. That is, we got two. One is Emerson's efficiency system. One more is points scheme system. Emerson's efficiency, what he will tell? For a performance below 66.67, only time rate wage is paid without any bonus. Whereas performance somewhere between 66.67 to 100, you will be paid a bonus at somewhere 0.01 to 20%. If at all your performance is above 100%, then you will be paid a bonus of 20% of basic wage plus 1% for each 1% increase in your efficiency. 20% anyhow you are going to pay if it is up to 100 also. So along with that 100, up to 100, over and above whatever you are paying, I mean efficiency where you are going to get 1% each. So come on guys, less than 66.67. Guaranteed rate. Guaranteed rate, time rate. If at all it is somewhere between 66 to 100, that they will give in the question how many percentage. If at all it is over and above 100, got it? What Bodak system tells, sir, you have to give 75% of the time saved. That's what they will tell. They will tell how many points and all that you leave. Now, going to bonus scheme. By the way, which are those two based on the daily day wage as well as piece rate? Emerson's and point scheme. Now, bonus system. Guys, individual bonus, you got three methods. Halsey, Halsey-Ware, Rowan. Halsey will tell what? Boss, ordinarily how many hours they worked into hourly rate you pay. But if at all they saved any time, for that time saved, half of the wages you pay. That is, he will tell hourly rate into time taken plus half of the time saved into hourly rate you pay. That is Halsey. Total wages. Premium is only so much. Premium is so much. Total is so much. Try to understand. This is premium. Now, Halsey-Ware what it will tell? Same. Boss, you pay hourly rate into time taken. But if at all they have saved any time, no, then for them give 1/3 of the time saved. Not 1/2, it will be 1/3. Rowan tells what? Boss, just don't consider hours saved. Consider time taken, time allowed, everything. So what he will tell? Give it in the proportion of the time saved compared to standard hours, time allowed. I will tell it as time allowed into time taken into hourly rate. Always remember at 50% of efficiency, 200% of efficiency, that is when you consider half of the time taken, both Halsey and Rowan will be same. Both Halsey and Rowan will be same. Sir, which is scientific, sir? Rowan is scientific. Why? Guys, up to 50%, the premium keeps on increasing. But once you reach 50%, it will be equal to Halsey. But over and above 50%, your premium will keep decreasing, which means there is no compromise with the quality. Because imagine 8 hours work if I have to complete in 4 hours. Let's say if I complete in 3 hours, imagine about the quality. It gets compromised. So he encourages up to 200% efficiency. That is completing the 8 hours work in 4 hours. But over and above, if you take something less than that, then it is not encouraged, that will be discouraged. So automatically your premium will start decreasing. Got it? But in Halsey, not like that. It keeps on increasing. The more and more you save, the more and more premium you get. And one more point you have to remember here. That is up to 50%. Premium under Rowan is more than Halsey. At 50%, premium of both will be same. Over and above 50%, I mean time taken is less than 50%. Halsey is more than Rowan. Because Rowan's premium will start decreasing. Halsey's premium anyhow it keeps on increasing. This is individual. Group bonus, there are different methods. Okay. Basically to the group we are going to pay. These are the few things, guys. Now we can see directly few questions. Shall we? Now, before that, listen, few ratios are there. Which are those? Labor efficiency ratio. That is how efficient they are. That I already told you. Remember? Standard hours by actual hours into 100 or actual output into standard output into 100. Actual output by standard output into 100. Capacity utilization ratio. That is how many hours were available, how many hours you actually used. How many hours were available, how many hours you actually used. That is capacity utilization ratio. Production volume ratio is nothing but how many hours work you have done, not actual hours taken. For example, 8 units, I am completing it in 8 hours. But I have given you 10 hours where each and every unit should take 1 hour, but I completed it in 6 hours. Now for a production volume variance, I am least concerned about how many hours I have taken. I will consider how many hours work I am completing. 1 unit I considered as 1 hour, which means I am completing the work of 8 hours. That is standard hours I should consider divided by budgeted hours. What do you mean by budgeted hours? Total how much I allowed you? 10 hours. So I am completing the work equal to 80% of time. Got it? See this question, you will understand. May, there are 21 working days of 8 hours. So how many hours were available? 21 into 8. And there are 10 employees. So 10 employees. How many labor hours are available in total? Sorry? 1680 hours are available. Due to the problem in production system, machine breakdown, 240 hours were recorded as idle time, which means, guys, they are not working for 1680, but actually they are working for actual hours. They are working for 1440. During May, workforce produced 5400. The expected time per unit is 15 minutes. Which means to produce 1 unit standard time is allowed is 0.25 hours. Now we are using producing 5400 units. For that, how many standard hours? 1000. This is standard hours for actual production. Standard hours for, always remember, standard hours means standard hours for actual production. First they are asking efficiency ratio. Guys. you should have taken 1350 hours, but you are taking 1440 hours. That is standard hour by actual hours into 100. So 93.75% is your efficiency. 93.75% is your efficiency. Guys, total I allowed you to work for how many hours? 1680. But you are working for how many hours? 1440. That is your actual capacity utilization ratio. 85.71. Next is your production volume. That is, guys, I have allowed you to work for 1680 hours. In that 1680 hours, how many hours work you are completing? You are just completing the work equivalent to 1350. Standard hour by budgeted hours. Sorry? 80.35. 80.35. Hope it is clear. Hope it is clear. Akka. And always remember, production volume ratio is nothing but efficiency ratio into capacity utilization ratio. Sorry, madam. We calculated now here. Clear? Yes. Now quickly we'll see all the numerical questions of the labor. Patapat. Before that, we'll take a 2 minutes break and we'll start. Listen here. Time allowed for a job is 48 hours. Oh, by the way, before that, let's revise quickly what are the formulas. Yes? First, labor turnover formulas we have seen. Separation divided by average. What do you mean by separation? Number of employees left the organization. Whether reappointed not, that doesn't matter. Replacement, who left, and for that who are reappointed for the same position. Additions is accession. That is new joinees, that is for a new position plus for the replacements. And whereas flux method, it is half of additional plus separation, or you can tell it as replacement plus separation. Okay. Divided by average. Equalization means you should take for 12 months how much. And then we discussed about time rate, hourly rate, etc. In that differential time rate, there it is, three different people told three different things. First one was Taylor. His name must be Hitler, but he is Taylor. That is very strict. Correct? That is less than 100%. Hitler. Okay. Less than 100% of efficiency. Pay only 80% of the piece rate. More than or equal to 100%. 120%. He is like devil as well as God. Because 100% means he will pay normal. But he is telling pay 120. At the same time, 99.99 pay 80. Got it? Whereas Merrick is like, hey, don't be that harsh. Up to 83.33. Normal piece rate. 83.33 to 100. 110% of normal piece rate. Over and above 100. 120% of normal piece rate. Then came Gantt task. This guy is like mixing the time as well as piece. What is telling? See, Gantt task, two names are. So two things are there, time as well as piece. Merrick and Taylor, one name, only piece. Now, Gantt task, what it tells? 66.67 or less. Give the guaranteed time rate. 66.67 to 100. Give time rate plus 20%. Oh, sorry, Emerson's. So, Gantt task is what? Guaranteed time rate below standard. If it is exactly 100, guaranteed time rate plus bonus. If it is more than 100, higher piece rate. Higher piece rate. That is Gantt task. Next, we discussed about Emerson as well as point scheme. Point scheme you leave. Emerson's, what you will tell? up to 66.67. Pay the time rate. Correct? 66.67 to 100. Pay the time rate plus bonus up to 20. Over and above 100, bonus plus 20 plus for each and every 1% increase in the efficiency, 1% bonus. Correct? Then we discussed about efficiency ratio. Standard hour by actual hours or actual output by standard output. Capacity utilization. Actual hours by total hours available. Actual hours by total hours available. That is your capacity utilization. Production.
Standard divided by total.
Standard divided by total hours available. Standards hours divided by budgeted hours or total. So production into your efficiency will, efficiency into your capital utilization, capacity utilization, you will get a production. Now, shall we proceed? Time allowed for a job is 48 hours. Worker takes 40 hours to complete the job. Time rate is rupees 15 per hour. Compute the earnings of the workers under Halsey, Halsey wire and Rowan. Under Halsey it will be normal rate will be same for Halsey, Halsey wire as well as Rowan. That is 40 hours they have worked, 15 rupees they are getting paid. In both, in all the three it will be same. Correct? Yes or no? Under Halsey, bonus will be half of, or premium will be half of time saved, 8 hours into hourly rate, 15. Under Halsey wire, 1/3 of 8 into 15. Rowan it is time saved 8, time allowed 48, time taken 40, hourly rate 15. You are going to do this way. Got it? And there is something called Barth variable share. That is nothing but, guys, R into square root of time allowed into time taken. R into, that is rate, into time allowed into time taken. Time allowed is how much? 48. Time taken is 40. Square root of that into 15. Next up, calculate the total earning and effective rate of earnings per hour. Effective rate of earnings per hour means total whatever they earn divided by number of hours they are working. Under Rowan scheme and Halsey scheme, standard time fixed for a production of 1 dozen of article is 50. The rate is 1 rupee per hour. So they have taken so much. Based on this, you are going to calculate. I am not going to show Rowan and Halsey and all. Very simple it is. A workman takes 9 hours to complete a job on a daily wages, 6 hours on a scheme of payment by results. His hourly rate is 25 paise, material cost is 4 rupees, factory overhead is 150% of the total wages. Calculate the factory cost under Halsey, Rowan and this one. Very simple, guys. Material cost will be same for all the three situations, but wages under time rate it will be 6 hours into rupees 0.25. Okay, under Halsey it is 6 hours into 0.25 plus hours saved is 3 hours into 0.25 into 1/2. Under Rowan it is, of course, 6 hours into 0.25 will be there plus time saved is 3 hours out of the 9 hours allowed, time taken is 6 hours into 0.25. You will get a wages. Factory overhead, you are going to take 1.5 of whatever wages you get. You will get a total factory cost. Nothing much special here. Not going to do that. Here, a worker under Halsey method, remuneration has a daily rate of 12 per week of 48 hours plus cost of living bonus of 10 paise per hours worked. He is given 8 hours task to perform, which he performs in 6 hours. He is allowed 30% of the time saved as a premium bonus. When they tell the percentage, then it is percentage you should take. You can't take 50 directly. What would be his earnings under Halsey and Rowan? Very simple. Under Halsey will take 30%. Under Rowan you will take normal, nothing much. Whatever they get, plus 10 paise for each and every hour's work they have to give as a cost of living. you will arrive at earnings under Halsey and earnings under row 1. See, again, I am not going to discuss about those things. In a factory, guaranteed wage rate is rupees 18 per hour and paid 48 hours a week. By the time and motion study, it is estimated that to manufacture one unit, 20 minutes are taken. Time allowed is increased by 25%. Basically, for the standard loss. Basically, each and every unit 20 minutes plus 25%, which will be 25 minutes. For each and every unit, how many minutes are allowed? 25 minutes, standard hours. A produced 180 units. So guys, to produce 180 units, how many minutes is required? Divided by how many hours in terms of hours? 180 into 25 minutes, you will get it in minutes. Divided by 60, you will get it in hours. 75 hours, which means the work which he should have completed in 75 hours is completing it in 48 hours. Calculate wage, time rate. Time rate, no bonus, nothing. 48 hours he worked, he will get 1.8. How much? 86.4. Correct? Now, next one. Piece rate with a guaranteed weekly wages. Weekly wages will be 86.4. No doubt in that. But piece rate, if you go, guys, in 1.8 hours, we are expecting them to produce, 1 hour, we are expecting them to produce 3 units. Yes, which means per unit, how much is a rate? 0.6. Correct? 0.6. Guys, try to understand. 1.8 we are paying for 60 minutes, but we are expecting our units to get over in 25 minutes, not 20 minutes. How much? So your rate per unit is 0.75, not 0.6. Remember, because per unit it is not 20 minutes, it is 25, because we only allowed it. If they have taken it, that is secondary, but we only allowed them 0.75. Now guys, 180 into 0.75, 135. So as per guaranteed weekly wage, which the one the employee will take? 86.4 or 135.5? 135. Done. Under Halsey, guys, very simple. Normally, whatever the time he has worked, 48 into 1.8, he will get. Along with that, half of time saved. Time saved is how much, guys? 75 minus 48. 27 hours into 1.8. Rupees 110 point that he will get. Next up, row 1 premium. This normal basic though he will get plus 27 hours out of allowed is how much? 75 hours into rate is 1.8 into time taken is 48. $117 point. Clear? By the way, sometimes they will give, what they will give is, there are 2 employees, A and B. Both of them use the material of same amount. Okay. And A is getting wages under Halsey scheme. B is getting wages under row 1 scheme. Hourly rate they don't give. Number of hours work they will give. Number of time allowed also they will give. Now they will give total factory cost for A, total factory cost for B. Here material you don't know, hourly rate you don't know. What you should do is simple cost sheet. Material XX. So why X and X, sir? For A also X, for B also X? Yes. Why? Same material is used. Always remember, 2 equation means you can only find out 2 unknown figures. 1 equation means 1 unknown figure. So always and always you should try to keep it simple. For example, in few questions, time saved also is not given. Time allowed is also not given. Total time is given. In that time, guys, only 1 equation could be formed. In that time, what you should do is, time taken, if you take it as X, Time saved is not y. What you should take? Total time minus time taken. So that time only x will be the variable. So always remember, try to keep your variables as less as possible. Here two equations are there, no problem. Material I will take same. Now rate I will take the same. I mean rate for x it is how much, for y it is how much. And if I solve that equation, direct material, direct labor, factory over, it will be factory cost. Two equations I will get. For x and y I will solve. Rate as y, material as x. I will find out how much is x, how much is y. Okay. Sometimes they will give effective hourly rate of x is so much, effective hourly rate of y is so much. X is paid under Halsey, y is paid under row 1. That time what you guys should do is directly not, for example, effective hourly rate of x is 10. Effective hourly rate of y is 12. X under Halsey, y under row 1. Now what you will do? Straight away, sir, Halsey row 1 formula will write is equal to 12, is equal to 10 will write. Wrong. That is 12 per hour. You should multiply it with the number of hours taken. Got it? If they give hourly rate, always remember for the total earnings, because whatever formula we are writing is total earnings, not per hour. You should multiply it with the per hours. Or you should divide the total earnings by time taken. Something you have to do. Basically, you should read the question carefully. And you should understand what exactly you are trying to do, what exactly you are doing. Listen here. Calculate the earnings of worker A and worker B under straight piece rate scheme and Taylor's differential piece. Normal rate per hour is 1.8. We are least concerned. Standard time per unit is, oh my god, 20 seconds. Which means in 60 minutes, how many seconds will be there? 60 seconds will be there. In each and every second, each and every 20 seconds, we are producing 1 unit. How many units? 1000, 8, 180. Which means in a minute, in an hour, we are expecting to produce 180 unit. So per unit, how much is the rate? 1.8 divided by 180. 0.01. Now, straight piece rate they are asking as well as differential. 80% below the standard, 120% at or above the standard. If they haven't given also, we would have taken that only. Now, A produced 1300 units. 1300 into 0.01. B produced 1500 into 0.01. Straight line basis 13 and 15. This is the earnings of A and B under straight piece rate. Differential, for that you have to check efficiency. To check the efficiency, you have to check what is the standard quantity. Guys, in 1 hour we are expecting to produce 180 units. In 8 hours they should have produced how many units? 1440. Guys, A is producing less than that. So he will be paid at 80%. B is producing more than that. He will be paid at. So that is, guys, 1300 into 0.01 into 80%. 1500 into 0.01 into 120%. For A it is 10.4. For B it is 'Clear? Clear? Always remember, for Halsey and Rowan and all, standard hours for actual output. Here they will be given some time. That itself is a standard hours. Because they will give how many units you produced in the given number of hours. For Halsey and Rowan, for the units produced, how many hours you should have taken, how many hours you have taken. Got it? For example, in 8 hours, see, 1 unit, 1 hour. In 8 hours, we produce 10 units. Now, for Halsey and Rowan, what we should do? For Merrick, for your Taylor and all, straight away you can tell, more efficient. But for Halsey and Rowan, 10 units, standard hour is 10 hours. You completed it in 8 hours. Time saved is 2 hours. Got it? Now, standard production per unit is 6 units. Normal rate per hour is so much. Mohan produced 32 units. Ram produced 42 units. Prasad produced 50 units. Calculate the wage of these workers under merit differential piece rate, assuming a day of 8 hours a week. Sorry, 8 hours as a working day. Which means, guys, again, piece rate only. So, in 8 hours, for each and every hour 6 units means in 8 hours we should produce 48 units. Mohan is producing 32 units. How many percentage? 32 by 48 into 100. 66 point. Wow. This guy will be paid at just 100% of the piece rate. 100% of the piece rate. By the way, piece rate is how much, guys? In 1 hour, we are paying 1.2 to produce 6 units. Which means to produce 1 unit, we are paying 0.2 per unit. Correct? Now, Ram produced 42 by 48. 87.5 percentage. Great. This person will get a bonus of 10 percentage. Prasad produced 50 units. 104.16%. So he will get 120%. So try to understand. First one, 0.2 into A produced 32 units. How much? 6.4. Going to Ram, 0.2 into 42 into 110%. 9 point. Prasad, 0.2 into 50 units into 120%. Clear up? How many illustrations are there in total? In which illustration we are in now? 46 are there. 33 we are in. 34. In a manufacturing concern, daily wage rate is 2.5. I don't know. These people at least, no, they should understand some 1990 question they are coming and putting here. Wage of 2.5 per day. Like division also it becomes very difficult. I am not telling them increase it to 2,500. At least make it 250. Forget about 250. Make it 25. No. Seriously, they lost it. Standard output in 6 days week is 200 units. Not per day. In a week. Representing 100% efficiency. Daily wage rate is paid without bonus to those workers who show up to 66.67% of efficiency. Beyond this, there is a bonus. 82% efficiency, 5%, 90%, 9%, 100%, 20%. Basically, this is our which one? Immersion, no. Up to 60.67, paid the normal rate. Over and above 66.67, up to 100. Up to 20% bonus. Over and above 100. 20% plus 1% for every increase. Further increase of 1% bonus for 1% rise in efficiency in 6 days week. A produced 180, B produced 164, C produced 200, D produced 208, E produced 130. Now quickly tell me their efficiency. Padapat, padapat. Guys, in a week 200 is that. So A efficiency is 90%. B's efficiency is 82%. Correct? C's efficiency is 100%. D's efficiency is 65%. D is 104. E is 65. Correct. Now, guys, A is 90%. 90% means he will get a hourly rate. See, try to understand. Here it is not on a unit basis, it will be on the hourly basis. So each and every one of them are working for 6 days, which means for A it will be 6 day into per day 2.5 and also bonus of 5%. Rupees 6 into 2.5 plus 5%. 15.75. Next, B. Guys, 6 days at the rate of 2.5 plus as is 82%, 5% bonus. Oh, first one was 90%, no? Then I will make it as for B. Let's find out for A. 90% it is 9% bonus. How much? 20? So much will come now. 16.35. Now, C 100% efficiency, that is 6 into 2.5 plus 20%. 18. D it will be 6 into 2.5 plus 104 means over and above 1% for every 1%, which means 24, not 20. Already 20 is there, no? Further increase of 1% bonus, increase 24%. 18.6. 18.6. E will be 6 into 2.5 plus 0 because 65%, less than 66.67. How much? 15. 15, 16.35, 15, 18. All these things go through once, guys. Nothing special in all these questions. Just go through all these things once, okay? These and all might come in MCQs. Few things, few missing things you have to find out. This is the one which I was talking about. They have given here. In a factory bonus, workman is paid under row 1. Time allotted for a job is 40 hours. Normal rate is 1.25 per hour. Factory overhead charges are 50 paise per hour for the hours taken. Did they tell how many hours it is taken? No. The factory cost for the work order is 161. Factory cost also they have taken. Given. Cost of material also they have given. Calculate the hours of time taken by the workman to complete the work order. All you have to do is do that table. Material is how much? Material is how much? They have given no material cost. Cost of material is 100. Wages will be, guys, time taken I don't know. I will take it as T. And always remember, I should try to keep the variable to 1 here, because only one equation is possible. Time taken is T and hourly rate do we know? 1.25. Correct? Plus time saved I don't know. I will take it as 40 minus T divided by 40 into time taken is T into hourly rate is 1.25. So I will get a 100 material, labor this one. Factory overhead will be 50 paise per hour, that is 0.5 T. You will get a total as 161.875. If you solve the equation, you will get a answer. If you solve the equation, you will get an answer. Hope it is clear. This one also nothing special. All these things you can solve. This is the question which I told once again. Material. Two workmen, Vishnu and Shiva, produces the same product using the same material. Their same material means both will be X. Their normal wage rate is also same. Both will be Y. Vishnu is paid bonus under row 1. Shiva is paid bonus under HAL C. Time allowed is 100. Vishnu takes 60 hours. Shiva takes 80 hours. The factory overhead rate is 10 rupees per man. The factory cost is so much. You are required to calculate normal rate of wages. That is, you have to calculate Y. Find out the cost of material. Calculate X. Very simple. Do the equation. You will get an answer. Do equation. Solve it. You will get an answer. I hope all these things you can be able to solve it. Yes. They are asking you to calculate the total employee cost. Employee cost in the sense from the point of view of employer. Total spendings. Not the earnings. Not from employee point of view, but from the employer point of view. Basic pay is 5 lakh. Lease rent paid for accommodation 2 lakh. I told you whether it is paid to employee, whatever it is, end of the day, if we incurred cash or in kind, end of the day it is cost only. From employee, recovered from employees 40,000. So our cost is 160,000. Try to understand. We are paying 2 lakh to landlord. We are recovering from our employee just 40,000, which means 160,000 we are bearing from our hand. That is our cost. Employer's contribution to PF, our cost. Employee's contribution, guys, this is we are going to reduce from their earnings. So instead, directly you take their earnings. Don't do anything to these transactions. Reimbursement of medical expense, our expense. Hospitalization expense of the employee's family member borne by the employer, our expense. Festival bonus, our expense. Festival advance. Guys, advance is not a cost. In future, we are going to reduce it from the employee's salary. From future salary, we are going to take it. Why will I take it as an expense? Correct. So my expense will be 5 lakh basic wages. Around 160,000 of lease rent. Our contribution of 75,000. Employees contribution I am going to ignore because out of that 5 lakh only I am going to give. I will give 425 to employee, 75 to government. End of the day I have taken it as 5 lakh. So ignored. Plus 67,000 plus 19,000 plus 20,000. I am not going to take the festival advance. 8 lakh 41,000. Got it? Gross pay 10 lakh 31,000 including cost of idle time 25,000. Accommodation provided to employee free of cost. Depreciation is 1 lakh. So that will come. Correct? Because it is owned by us. Maintenance charges 90,000. We are only paying. That will also come. Municipal taxes 3,000. It will come. Employer's contribution. It will come. Including 2,000 for a violation of PF rules. Always and always remember, that is abnormal. Penalty, all those things are abnormal. That will go to costing P&L. That will not be normal cost. So you should take only and only 98,000. Employees contribution of 75,000. That we will deduct from 10 lakh 30,000 while paying to government. So that won't come in our calculation. Hope it is clear. Which one, madam? But here they are treating it as an abnormal idle time. The treatment, they assume to be abnormal idle time. Cost of idle time is assumed as abnormal idle time. If it was normal, we wouldn't have done anything. Got it? Guys, trial balance they have given. They are asking you to compute the employee cost. Material consumed won't come. Salaries will come. Training cost will come. Perquisites to employees will come. Contribution to gratuity fund will come. Lease rent for accommodation provided to employees 3 lakh. However, we are recovering 35,000 from them. So I am going to take it as 2,65,000. Festival bonus will come. Unamortized amount of employee cost related to discontinued operation. Special subsidy. So this will be reduced because that's an income relating to employee cost. Got it? See this discontinued operation not relating to this one, so it is not an employee cost. Just you can write it off in costing P&L also. This was about your employee cost, and very important chapter also from the examination point of view, especially those formulas. I will quickly revise one formulas once again. Yes, we discussed about labor turnover, separation, replacement, additions. Guys, additions, that is replacement plus new joinees, that is who left and on their position who came, that is replacement. New joinees, new workers altogether. Separation means whom we removed, who they left, end of the day who left in total. Now your flux method means, not flexor, fluxer. Flux method means half of additions plus separations. Guys, instead of additions, if you take replacement, don't take half. Generally I can tell that way, but you do one thing, better do and come in both the ways. But generally I can tell it like, basically that half is not at all required in first place. I don't know why they are taking it. None of the other books it is there half. Only in CMA books it's there. Otherwise generally accession plus separation divided by average. But in CMA book they have given formula that way. But two questions they solved in different two ways. Just by looking at that question, what conclusion I can draw is, if that is just the separation plus replacement, no need to do half. If it is addition plus separation, do half. Okay. Then we discussed about the rates, time rate, differential, this thing, unit price itself. So unit difference, that is we got different rates like Taylor, Merrick as well as Gantt task. Taylor, what he tells, less than 100 give 80%, more than 100 or 100 give 120% of the piece rate. Taylor. Next is Merrick. If it is 83.33 less than that, give 100%. 83.3 to 100, 110%. 100 greater than 100. Try to understand. Here 100 will fall for 110%, but 83.33 also fall for 110. Up to 83.33 means 83 will go for next one. No. Up to 83.33 means you are going to pay for 83.32. Up to that. 83.33 to 100 means for both 83.33 as well as 100, you will be paying 110%. Over and above 100 means more than 100, you will be paying 120%. That is your Merrick. And one more is Gantt task. What Gantt task will tell? Less than standard. Pay the time rate. Pay the guaranteed time rate. If it is 100, time rate plus 20%. If it is more than 100, high piece rate. Plus 40%. Which formula da? Pay high piece rate. Now, if at all it is Emerson's, up to 66.67%, pay the normal time rate. 66.67 to 100. Normal plus bonus up to 20. Need not be 20 directly. It could be 1%, 2%, 3%, etc. If at all more than 100, normal time rate plus the 20% plus for each and every percentage increase in 100, 1. Okay. If it's 106%, then bonus will be 26%. Got it? And we discussed about the this thing, Halsey, Rowan and all. And there I told you standard hours how to calculate. Standard hours for actual output. That is, Halsey will be, normal will be same in all the three. That is, Halsey where, Rowan. Time taken into hourly rate will be same. Bonus under Rowan, Halsey will be half of time saved into timely rate. If the question tells different percentage, take the different percentage. Rho 1 it will be time saved divided by time allowed into time taken into hourly rate. Under where it is 1 by 3, that is done. And one more thing, Barth it is rate into square root of time allowed into time taken. And we discussed about efficiency ratio, that is hourly basis it is standard hours by actual hours, unit basis actual unit divided by standard unit, and your capacity utilization is basically actual hours divided by time allowed, not standard, time allowed, whereas your productivity is basically standard hours for actual production divided by time allowed, standard hours by budgeted hours. Got it? Like that we have done, and few questions we have seen. Please go through all these questions, and with that we have completed our employee cost. So what do you mean by direct expense, guys? Direct expense is any other direct expense other than your direct material and labor. Whatever things direct expense covered under direct material, direct labor, excluding that whatever the expense is there, that is your direct expense. Correct? Basically, I told you few direct expense to remember. Which are those? What was the keyword? Trash DP. That is T for technical know-how, R for royalty on production, A for Apple, amortization of molds, pattern, patent. Correct? Trash. S for specific software, H for hiring of a special equipment or a specific equipment. Trash. D for drawings and designs, not drawings and design department, drawings and designs. Drawings and designs department, rent to salary, all those things is factory overhead. P for power, fuel and consumables. Power, fuel and not consumables, power, fuel and steam. Consumables will come in factory overhead. Shall we see questions based on this? Yes. Royalty paid on sales. Royalty paid on units produced. Higher charges, design charges, software development charges related to production. Compute the direct expense. Don't you think everything is a direct expense here? Peace. Next one. A manufacturing unit produces two products, X and Y. Following information they have given. That is units produced, units sold. Machine hours utilized, design charges, software development charges. Royalty paid on sales is 54,000. Royalty paid on units produced is 35,000. Higher charges of the equipment is for product X only 5,000. Now, direct expense, royalty paid on sales, will it come or no? It will. How much it is? Guys, 2 rupees per unit. That is 15,000 into 2, 30,000. 12,000 into 2, 24,000. Royalty paid on units produced is rupees 1. That is 20,000 and 15,000. Machine hour utilized you leave. Design charges, directly it will come. Drawings and designs, 15,000, 18,000. Software development charges, yes. If at all it is generic software, then it won't come. So everything will come again. Clear? That is for your overhead calculation. Machine hours into hourly rate. That will be your overhead calculation. That has nothing to do with the direct expense. That was all about your direct expenses. However, guys, from the direct expenses, they might ask about CAS 10. Okay. Cost accounting standard 10. Direct expense is there, no? About that, they might ask for 5 marks or so. How to treat, etc., etc., etc. All those things, see and go once. Okay. All this theory of CAS 10, see and go once. See, I'm not going to cover the CAS again. For 5 marks and all, I'm not going to spend a hell lot of time here. Anyhow, whatever we are doing in costing, everything is as per cost accounting standards only. Correct? So in that particular separate chapter, in that nothing they have mentioned in first place. Correct? See, they might ask 5 marks theory from that, and in MCQs they might ask this accounting standard is relating to what. That also they will ask major only, like CAS 10 and all. For direct expense, for material what, like that, for labor what, like that they will ask. That is your cost accounting standards. And now few chapters we are left with. We'll do one thing, cost accounting standard, which are the standards for what, that we will discuss. Shall we? Basically, you can go through like this cost accounting standard, like how the board will be, who and all will be there in the board, all those things we have discussed now in theory, that you can go through once. Now I will just revise you which are the cost accounting standards. Okay, first, cost accounting standard 1 is relating to classification of cost. Cost accounting standard 2 is relating to capacity determination, that anyhow we are going to learn in overheads chapter. Cost accounting standard 3 relating to production and operation overhead. 4 is relating to cost of production for captive consumption, that is for our own consumption. And 5 is cost of transportation. 6 is material. 7 is employee. 8 is utilities. 9 is packing material. 10 is direct expense. Guys, from 6 to 10 it is simple. 6 to 10 it is simple. 6 material, 7 labor, that is employee cost. 8 is utilities, which will come in your direct expense. 9 is packing material cost. 10 is direct expense. First one is classification. Second one is capacity determination. Third one is captive consumption. Third one is overhead, production overhead. Fourth one is captive consumption. Fifth one is cost of transportation. First one is classification. Second one is capacity. See, whenever it comes to MCQ, all you have to remember is that small keyword. No need not to remember everything. That will be like very difficult to remember. No, first one classification. Second one capacity. Third one production overhead. Fourth one captive consumption. Fifth one transportation. Sixth one material. Seventh one labor. Eighth one utilities. Ninth one packing material. 10th one direct expense. Okay. 11th one is admin overhead. 12th one is repairs and maintenance. 13th one is cost center. 14th one is pollution control. 15th one is selling and distribution. 11th is administration. 12th one is repairs and maintenance. 13th one is cost center, that is service cost, service center, that is we will reapportion it now. Service center overhead we will reapportion to production. In overheads chapter I will tell. Nice, you remember so much. That is basic of overheads. Oh my god. 14th one is pollution control. 15th one is selling and distribution. Got it? Again, 11th one is admin overhead. 12th one is repairs and maintenance. 13th one is service center. 14th one is pollution control. 15th one is selling and distribution overhead. Now, first one is classification. Second one is capacity. Third one is production overhead. Fourth one is captive consumption. Fifth one is transport, cost of transport. So 5 done. Next class. Material is 6. 7 is employee. 8 is utility. 9 is packing. 10 is direct expense. 11th one admin overhead. 12th one repair and maintenance. 13th one service center. 14th one pollution control. 15th one selling and distribution overhead. Clear? Now 16 to 20 selling and distribution overhead is done. 16 is depreciation and amortization. 17 is interest and finance charges. 18 is R&D cost, not R&D overhead, R&D cost. 19 is joint cost. 20 is royalty. So guys, 11th is admin, 12th is repairs and maintenance, 13th is service center, 14th is pollution control, 15th is selling and distribution, 16th is depreciation and amortization, 17th is interest and finance charges, 18th is R&D, 19th is JC. And 19th, how to remember? Joint cost. Leave. Joint cost. 20 is royalty. 21 is quality control. 22 is manufacturing cost. 23 is removal cost. 24 is treatment of revenue in cost statement. So basically guys, come again. First one is classification. Second one is capacity. Third one is production overhead. Fourth one is captive consumption. Fifth one is transportation. Sixth one is material. Seventh one is labor. Eighth one is cost of utilities. Ninth one is packing material. 10th one is direct expense. 11th one is admin overhead. 12th one is repairs and maintenance. 13th one is cost and service center. 14 is pollution control. 15 is S&D overhead. Now 16 depreciation and amortization. How to remember 16? 2016 what happened? CSK completely depreciated. No. RCB got into finals. Very good. Last finals. Correct. They went into finals. 16th one is depreciation and amortization. 7th one is interest and finance charges. 18th is R&D. 19 is joint cost. 20 is royalty. 21 quality control. 22 manufacturing cost. 23 removal of overburden removal cost. 24 is treatment of revenue. Guys, try to remember one thing. These numbers are important for a MCQs. 2 to 4 marks they might ask in MCQ. This standard is relating to what? And what they ask in 5 marks, that will be relating to your material. That is 6. Labor. 7. Direct expense. 10. Admin overhead. 11. S&D overhead. 15. Treatment of packing material. 9. Classification. 1. So, like this, they will ask the major one for which the separate chapter is there. From that, they will ask the 5 marks. Because in the third chapter, whatever they have given, in that, forget about 5 marks. We don't have information relating to 1 marks also. But from the particular chapter to chapter, there are informations. This is your cost recording standards. I am not going to cover those separately. Please go through it along with each and every chapters. So we'll continue. Now listen, guys. We are starting with the overheads. Basically, direct material, direct labor, other direct expenses, we call it as a prime cost. Whereas indirect material, indirect labor or indirect employee cost and other indirect expenses, together we call it as a overheads. Together we call it as a overheads. Okay, sir, for this, why separate chapter is required? Try to understand. Direct material, you know exactly how much to be charged to particular product. That's why it's called as direct material. Direct labor, guys, you know exactly how much to be charged to the particular product. Direct expense also, you know how much exact to be charged. Now, indirect are those which you cannot trace and which you cannot ascertain particular product how much it is. That's why those are called as indirect, no? But telling that it's an indirect, can you leave it as it is without addressing? You have to charge to your products or no? For example, rent. Can you trace it per student how much? You cannot. Student comes, student won't come, end of the day it will be same. You cannot trace it per student how much. But do you think we can't recover, we should not recover this rent from you guys? If we don't recover in 1 year, we go bankrupt. Rent is the highest expense, no? Yes or no? So try to understand. Now we have to recover the rent. How we can recover, sir? Directly though we can't. We can't. On some basis, we are going to recover it from the final product. On some basis, we are going to recover it from the final product. That thing we call it as absorption. Also we call it as recovery. That is charging the overhead, allocating the overhead, allotting the overhead to the final product, charging the overheads to the final product. That process is called as, guys, absorption or recovery. That process is called as absorption or recovery. Okay, sir. Fine. How we were going to absorb? Before absorbing, guys, what you should do is, you should check, for example, now listen. We got CA, we got CS, we got CMA, we got ACCA, and we got other courses also. For the time being, we'll take only 4. And also we got a new course called as ArivuPro 1. Correct? Correct? No. All the courses in one marketing team. So, to know about the ArivuPro 1, you guys go and check it. Whatever it is, forget about it. You don't know about ArivuPro. Leave that. Concentrate on these 4. Now, you know that rent is there. Rent should be charged to CA students, CS students, CMA students, ACCA students. Let's say sales team is there outside. Yes, they are giving their service to CA, CS, CMA, ACCA. Their salary will be there. Academic team also there outside. Now, let's try to understand. Only one classroom is there for everything. For CA, one classroom is there. For CS, one classroom is there. For CMA, one classroom is there. For ACCA, one classroom is there. And also, sales team is also there in the same building. Administration team is also there in the same building. Correct? Let's say accounts team is also there in the same building. Now my question is, don't you think we recover the whole rent from the students? We have to. Yes or no? Now, when we want to recover from the students, what we have done is, let's say this building, we are paying a rent of 10 lakh. Okay? 10 lakh is more. We'll go for 6 lakh. Okay? Nungambakam. Opposite to metro. Opposite to income tax office. ICI Bhavan. Whatever it is. But this area is costly, that's what I feel. Because Raj Bhavan guy is sitting somewhere without giving any tasty food. Just because he's sitting there, he's charging premium. Then this area should be premium. Taj. MOP Vaishnav. Now listen. CS, CMA, ACCA is there. Let's say 6 lakh rupees. Now, on the basis of square feet, we will divide it. On the basis of square feet, we'll divide it. On the basis of square feet, when we will divide, let's say I'm not going to tell the numbers. Let's say for CA course classroom, it became 1 lakh. For CS course, let's say 1,50,000. For CMA again, 1,50,000. For ACCA, 2 lakh. How much it is? Oh, yeah. 1 lakh will do. 1 lakh. Sir, but 6 lakh, sir, rent, but you allocated only 5 lakh. Guys, sales team also there. administration team also there, academics team, as well as accounts team also there. Which means what, they are sitting outside on road? No, same building. Which means they also have the share in the rent. So for them also we'll charge. How much, sir? Let's say for sales team 50,000, for administration team 25,000, for accounts team 25,000. For accounts team 25,000. Clear? Now CA course, we can recover it from the CS students. CS rent, we can recover it from the CS, CMA, ACCA. Sales team rent from whom to recover? Employees are. Academic team, accounts team from students only, no? So what we will do is, again, sales teams will charge it to each and every course based on some basis. Time spent by them, number of employees, number of students, on some basis we will charge it to each and every course again. Now for CA, let's say we charge 10,000, for CMA 15,000, for ACCA 15,000, and for this one 10,000. Again, academics team, let's say 10,000, 5,000, not 10,000, 5,000 for CA, 5,000 for ACCA, 10,000 for CMA. They have to manage a lot, no? Yes, and 5,000 for ACCA. Correct? That is academics team. Accounts team, let's say again 8,000, 8,000, 8,000, 1,000. 8,000, 8,000, 8,000, 1,000. Accounts team has not much things to do for the ACCA. Born rich. Correct? Exam fees only paying 30, 40,000. Why? I don't know exactly, but somewhere there. 15,000 per exam. Nice. 15,000 they pay. Here they come and sit and watch movie. So it is assumed to be rich now. Now leave that. Now what I am going to do, now I got to know overheads for CA course, overheads for CS, overheads for CMA, overheads for ACCA, where I took overhead only as rent. Again salaries will come, many things will come. Now CA course total is how much? 1,23,000, 1,78,000, 1,70,000, 1,83,000, 1,16,000. Now for ease of calculation, let's say 123 CA students are there, 178 CA students are there, 183 CMA students are there, 116 ACCA students are there. Now from each and every CA student we are going to recover 1,000 rupees, CS students 1,000 rupees, ACCA students 1,000, CMA student 1,000, ACCA 1,000. Now guys, what we are going to charge to the final product, that is our students. Now that is absorption, the process where I divided the total overheads with the cost units and charge to that thing, activity. Now that is called as absorption. Now guys, what I allocated rent to CA, CS, CMA, ACCA, sales team, academic team and accounts team, no, that is called as allocation and apportionment. That is called as allocation and apportionment. Sir, what do you mean by allocation and apportionment? Guys, try to understand. Allocation means it is indirect only, but which can be easily ascertained for which team it is. For example, let's say there is one test series team. Now the test series team, they are giving service only and only to CA, not based on number of students. Generally we pay them rent, we pay their salary and all. No, now their salary, it is directly only to CNO, because they are providing service only and only to CA. Now guys, that is called as allocation, where indirect overheads, that is overheads which can be directly allocated. The process of directly allocating, we call it as a allocation. For example, sales team salary, where we are going to allocate? Sales team. Academic team, accounts team salary, accounts team. Are we going to distribute it? In the beginning, are we going to distribute? No. Now that is called as allocation. Rent. Can you exactly tell how much for CA, CS, CMA, ACCA? No. On some basis, we will divide. Rent generally on the square feet basis, space area basis. Now that is called as apportionment. Overheads which directly cannot be allotted, attributed to the particular department, that we are going to apportion it over them. That's we call it as apportionment. Now, after doing apportionment, what we did, we got to know that sales team, academic team, accounts team, they can't recover directly from the students. They can't recover their overheads directly from the students. Now, when we got to know that, when they can't directly recover it from the student, what we did, their expenses we charged to the production teams, that is where the product will be there, CA, CS, CMA, ACCA. Now that is called as redistribution or reapportionment. The service team, where they are unable to recover it from the products directly, their overheads we are going to charge it to the production departments. That process is called as redistribution or reapportionment. Clear? Sir, how to redistribute or reapportion? Sir, for the different methods are there, that I will tell later. Now we got 1000 no. Guys. We got 1000 no. Now that 1000 is called as absorption rate. The rate at which the overhead is recovered from the final product, that we call it as a absorption rate, or we call it as a recovery rate. We call it as a absorption rate, or we call it as a recovery rate. Is it clear? The rate of the overhead which we recover from the final products, that we call it as a absorption rate or a recovery rate. Clear? Now, listen. Sir, this recovery rate you told, no sir. This whether we calculated on the budgeted basis or actual basis. Guys, listen. Are we going to call you guys after your batch ends, telling that, see, in your fees, rent is not recovered, sales team salary is not recovered, admission team salary, administration team salary, accounts team salary is not recovered, because we didn't know earlier how much it would be. So this is your expense, 1000 rupees. Please come pay and go. Do we do that? You guys, will you really receive the call? Once you will receive, after we tell that, do you receive? The person you are trying to reach is currently busy or unavailable to take your call. Please call after some time. Correct? Yes? If only English comes, then it is blocked, no? Only in English if they tell if it's busy, that means it's blocked now. Nobody blocked you. That's what you thought. I mean, we also didn't know. Recently went to watch a match, no? There, when we went to watch, The guy who told I will arrange a ticket, we went there near stadium. Till then he was in call only. After we went to stadium, person is busy. We are like, oh my god, this is unusual. Otherwise, once it will tell in Tamil, once in Hindi, once in English. Now it is telling only in English. Then we thought, might be different sim. That hope will be there, no? Of course, RCB and CSK. Hope will be there, no? By the way, guys, if you are watching this video on 4th, CSK fans, sorry for making you guys lose again on May 3rd. Sorry? Today is also match. Homegrown match. Again, you guys will lose. Listen. Which match I don't tell. If I tell date, they will get to know. Recorded students. Listen. So later, Akhilesh sir was like, sir, from last 4-5 times, this coming busy. Can you check once? Then I checked. It's ringing. Oh, sir, it's ringing. And he cut the call. Next I called. Same busy. Then we understood. And blocked us. What to do? Now listen. So don't you think you guys will block? Or no? If ArivuPro people call you telling that pay the fees, you won't block? You won't receive? You will pay? No, but they will call you after group 2, no? They will call you after group 2 or no? Truecaller, ArivuPro, no risk. Done. In Truecaller it comes as ArivuPro. ArivuPro, blue tick. Bangalore, Karnataka. Now, guys. So, you won't receive. So, basically, or have you experienced anywhere the soap brands, the toothpaste, all those people calling and telling, please pay us extra money? No. Whatever they charge in that is recovered. Which means try to understand your absorption will happen on budgeted cost basis. Generally it will not be on the actual cost basis. It will be on the budgeted cost basis. Now guys, try to understand. We thought so much. We did like we are going to recover 1000 each from the students. Okay. So we'll be able to recover the rent of 6 lakhs. Correct? Now what happened, you know? We got in total 500 students. We got in total how many students? 500 students. Now, guys, from each and every student, how much we are recovering? Sir, recover more only, no, sir. Hey, do I know on the first day of your admission that I am going to incur more expense? No. So, 500 into 1000, which will come to 5 lakh. Can I call it as an absorbed overhead? Can I call it as an absorbed overhead? Or can I call it as a recovered overhead? Can I? Or no? I can. Now, let's say actual overhead is around 5,50,000. We thought our rent will be more, 6 lakh and all. No. It is 5,50,000. Now guys, actual overhead is 5,50,000. Recovered overhead is 5 lakh. The other 50,000 which is not recovered, no, that we call it as under recovery. That we call it as a under recovery, or we call it as a under absorption. We call it as under recovery, or we call it as a under absorption. Now let's say we expected 500 students, but student came to 700, which means we are absorbing how much? 7 lakh. The same way how you guys don't pay us the money if we call later stage, same way do you think if we receive extra money we are going to give it back to you? Here we are teaching all profit. Do you think we are going to lose that? No. Which means we are going to recover 7 lakh. 7 lakh only. We will only keep it. Which means we recovered 1,50,000 extra. That we call it as a over recovery or over absorption. Guys, which is better? Over recovery is better or under recovery is better? Over recovery is better from the business point of view, always and always. That is, you are recovering more than what you incurred. You recovered more than what you incurred, or you absorbed more than what you incurred. That is over recovery. That is called as favorable. If at all it is recovered less, that we call it as under recovery, adverse. Got it? That is your over recovery and under recovery. Sir, how to treat the over recovery, under recovery? I will tell that later. Treatment of over recovery, under recovery, I will tell that later. Right now, I hope so much you understood. This is the basic idea about whole overhead. Hope it's clear. Clear? Production overhead, which cost accounting standard? Three. A, one is what? Classification. 2. Capacity. 3. Production overhead. Captive consumption. 4. 5 is transportation. 4 is captive consumption. 3 is production overhead. Got it? Now, I hope you guys understood all these allocation, absorption, all those things. Guys, listen here. When you are allocating, they will give direct material, direct labor. They will give production department 1, production department 2, production department 3, service department 1, service department 2. Now, guys, direct material should I allocate to production department 1, 2, 3, S1, S2, or should I apportion to P1, P2, P3 and S1, S2? What I should do? I should allocate or I should apportion? Allocate, because it's a direct. No, guys, direct material for the production team is treated as a prime cost. Why it is even to be allocated or apportioned? That is not an overhead, no. That is not overhead, no. But for the service departments, we should allocate it because it's direct for service. What do you mean by allocation or apportionment? What do you mean by overhead? What do you mean by overhead? The expense which you cannot trace it in the final product. For a P1, P2, P3, you can trace this thing in final product. That's why we call it as direct. For S1, S2, final product only is not there. What you can trace? So for service departments, anything whatever is there is a overhead. For production team, prime cost is not overhead. After prime cost, whatever is there, that you should allocate or apportion. Understood? So when you are doing primary distribution means allocation and apportionment. Make sure direct material, direct labor you don't take to the production team because that is not a overhead. That is not a overhead. That's a prime cost. Understood? Generally, on what basis we will apportion? Rent and all, guys. Rent, rate, taxes on the floor area. Repairs to building, either floor area or value of the building. General lighting on the basis of number of light points. Always remember, power and lighting both are not same. Power and lighting both are not same. Power will be generally for the machineries. Lighting will be these lighting. Power, HP of the machine. Guys, in the question if they give HP of the machine as well as machine hours, you should multiply these two and you should take it. Or if they give HP as well as number of machines, you should HP and number of machines both you should multiply, and on that basis you should apportion. Try to understand. If they just give machine hours, then on the basis of machine hours. If they just give HP, then on the basis of HP. If they give HP as well as machine hours, then take both HP as well as machine hours If you remember in regular class, I gave the example of bikes. Pulsar, Royal Enfield, whatever the blah 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 you told. You remember? No, sir, I am watching only marathon in the YouTube. What I should do? Come to class and all. No, Papa, they have exams. What nonsense you are talking? Huh? Next time, what nonsense he's talking? They should pass in June. No, that's why they are watching. No, just buy the class. Don't come to class and all. Huh. Guys, telephone and all based on the number of calls or extension, etc. Supervision based on the number of employees. Material handling based on the number of material requisition or value of the material handled. On this basis, you are going to treat it. Okay. Basically, question to question, sometimes it changes. For example, indirect labor they will give, on which basis they don't give. Then you can allocate it on the direct labor basis. Sometimes material handling they will give, no information they will give. That time, if they have given a direct material, on that basis you should apportion. Like that it is. See here, they are asking you to do the primary distribution. Rent is there, guys. Rent, using which one I can apportion? Area square feet basis I can apportion between P1, P2, P3, S1, S2. Repairs. Repairs. You know the value of plant. Depreciation. Again value of plant. Lighting. Area. Supervision. Number of workers. Fire insurance for stock. Stock value they have given. Stock value. ESI contribution. ESI is relating to employees. Number of workers or wages. Guys, wages is better. You know why? ESI is percentage of wages. Not that per person it is so much. It is not per person 1000. No. ESI will be 2% of salary. Which means you should consider wages or salary. No? Power. Horsepower of a plant. Like this you are going to primarily distribute. You will get a primary distribution. Now this S1, S2 is there. No. That should be allocated to, apportioned to P1, P2, P3. That process we call it as a reapportionment. That process we call it as reapportionment, or that process we call it as secondary distribution. Secondary distribution. Now, sir, on what basis we will reapportion? Guys, for that you should divide. Try to understand. There are different service department, like quality means number of inspection, maintenance means maintenance calls or material used or a time spent. Stores department means indirect material cost, issue slip, quantity, etc. Canteen or welfare means number of workers. Internal transport means number of trucks or miles consumed or material handled. Payroll means number of labor hours. Purchase office means number of purchase orders. Like that, secondary we are going to do. But try to understand. Secondary, you have to divide into this. Divide into which, sir? Try to understand. You should check whether it is non-reciprocal or reciprocal, or whether it is direct. What do you mean by that, sir? Guys, direct will be applied when no service departments will provide service to other service departments. Which means each and every service department is providing service only to the production department. Each and every service department is providing service only and only to which department? Production department. That we call it as a direct method. There we will go for direct redistribution. Direct redistribution. Whereas if at all one service department provides service to the other service department, then we should go for the either non-reciprocal or reciprocal. either non-reciprocal or reciprocal. What do you mean by non-reciprocal? Guys, try to understand. P1 is there, P2 is there, P3 is there, S1 is there, S2 is there, S3 is there. P1, P2, P3 is a production, S1, S2, S3 is a service. Guys, sometimes while giving in table, they might give ulta. S1, S2, P1, P2, P3. That time you should know which is for production, which is for service. It's not something like always production will start first. No. Now listen. Service department 1 is there, no? That provides service to P1, P2, P3. Service department 2 is there, no? That provides service to P1, P2, P3. Service department 3 is there, no? That provides service only to P1, P2, P3. Now guys, directly we can allocate, no? For it's a canteen expense. Let's say S1 is canteen. Now directly you can allocate it to the number of employees in production 1, production 2, production 3. ESI, production 1, production 2, production 3 on the basis of wages. Now that is called as direct distribution method. That is called as direct distribution method. But do you think it really works like that? No. Try to understand. We have canteen. We have canteen. Production department employees came. We gave them food. We gave them food. Service department people came. We are like, no food. Go. Can we do like this? Let's say accounts team came and they are like, food. Canteen guy telling no. Only to production. What accounts team guys will tell? Next month beginning you will come no for salary. Come. Got it? Now try to understand. Here service, one service is providing service to other. Now what I told first example, no service team is providing service to other service. That is your direct distribution. Only to production you will allocate. You will get a total overhead. We will divide on the base. We will get an absorption rate. You will absorb. Now, sometimes service 1 will provide service to service 2, service 3 as well as production. Now, that is, in that scenario what you should do is, you should divide those kind of things into two. Reciprocal, non-reciprocal. Non-reciprocal means one-sided love story. Reciprocal means two-sided love story. What do you mean by that, sir? Non-reciprocal. One person showering like showing all the love to the other person. Other person, I love you as a friend. Try to understand, which means non-reciprocal means P1 is there, P2 is there, P3 is there, S1 is there, S2 is there, S3 is there. Now S1, one-sided love for P1, P2, P3. P1, P2, P3 though that is not in the competition itself. Let's say married. But S1, S2, S3 is there, no? In that, let's say S1 is providing service to S2 and S3. Okay. Now the turn of S2. Guys, S2 for P1 yes, P2 of course yes, P3 yes, S1, who S1? What S1? I don't know anything. S1 is giving service to S2. Is S2 is giving service to S1 now? One-sided. And also to S3 yes. Now S3 for P1 yes, P2 yes, P3, yes. S1, no. S2, no. Now, one service department is providing service to other, but the other is not reciprocating it. Canteen accounts is reciprocal. What is this? I don't know. But canteen accounts is reciprocal. What is this? You don't know. Guys. Canteen accounts is not non-reciprocal. That is reciprocal. Canteen department should provide service to accounts. Accounts should provide service to canteens. Okay. Now, in that scenario, what you are going to use is step ladder method or step method. Step method or step ladder method. Here what you will do, you know. First you will provide or first you will distribute the service department which is providing a maximum service. S1. You will provide to P1, P2, P3, S2, S3. Then service department 2 is providing more service. P1, P2, P3, S3. S1 is now blank and it will be blank. It will be blank. Now, S3 along with its own overhead, distribution of S1, distribution of S2 together, that will be distributed to P1, P2, P3. Now, that method is called as step method or non-reciprocal method. Don't write income, one-sided method. Non-reciprocal or step method. Understood? When we will apply it? When it is non-reciprocal. One service department provides service to other, whereas the other don't provide service to this one. That is step method or non-reciprocal method. Now, going to reciprocal. Reciprocal is full, proper relationship. Two-sided. Sometimes three-sided. What power? P1, P2, P3, S1, S2, S3. Correct? Here, S1 is providing to P1, P2, P3, S2, S3. Understood? S1 is providing to P1, P2, P3, S1 also. No, need not be. Even one reciprocal is there also, it's reciprocal only. I'm not telling each department provides to each. No. If one service it reciprocates also, reciprocal only. Sir, then why we want that separate method, sir? We can use non-reciprocal only, no? Guys, first S1 we will distribute to everything. Then again S2 we distribute. While distributing again it will get distributed to S1. Okay, again S1 came. Again we'll distribute. Again it got distributed to S2. Again S2 came. Again it got distributed to S1. Getting it? So that is your reciprocal method. In that scenario, we are going to use three different methods. In case of reciprocal, we are going to use three different methods. One is your simultaneous equation method. One is your simultaneous equation method. One more is your trial and error method. One more is your repeated distribution method. Hey, I told now. First S1 distribute to everything. Again S2 distribute to everything. Again S1 got. Again distribute it. Again distribute. Again distribute. Distribute till it becomes negligible number. That we call it as repeated distribution method. Till service department becomes negligible in nature, we keep on distributing. That we call it as a repeated distribution method. Repeated distribution method. Sir, simultaneous how it works, sir? That I will show. Simultaneous I will show. But before that, we'll see this one. Listen here. look into this one. Guys, there are two production department called fabrication and assembly. Two production department, fabrication and assembly. Three service department, stores, time office, maintenance. Stores, time office, maintenance. Now, fabrication guys, 24,000. Assembly, 16,000. Stores, 5,000. Time office, 4,000, 3,000. Primary distribution, they only have given. Primary distribution, they only have given. Now, stores department is there, no? That on the basis of number of stores, requisition slip we will allocate. Best part about it is providing service to fabrication, assembly and maintenance. Fabrication, assembly and maintenance. Correct? Now, time office, number of employees. It is providing service to fabrication, assembly, stores, time office and maintenance. Whereas maintenance based on the machine hours, if you take fabrication, assembly, which means no service department is reciprocating its service to other service department. For example, here if you see number of employees is relating to time office, no, that is providing service to all the service departments. But any service department providing service to your stores? No. Your stores is there, no. Sorry, time office. Your stores is there, no. That is providing service to maintenance. Whether maintenance is providing service to stores? No. It is providing service only to production. Now it is non-reciprocating. Non-reciprocating. In that, first what I should distribute? I should distribute one with the highest services. In this case, it is time office. In this case, it is time office. I am going to arrange it in that manner only. Okay. First, time office I am going to distribute among different departments on the basis of number of employees. On the basis of number of employees, ratio will be 20, 15, 10, 8, 5. That is, 5 is the prime number, so we can't do anything now. 20 plus 15, 35, 35, 45, 45, 50, 58. Or you can take total also. That is 40, 30, 70, 70, 20, 90, 90 plus 10, 100, 116. Total is 116. Now tell me, how much is the time office expense? 4,000. This I am going to distribute to fabrication, assembly, stores and maintenance in this ratio. That is 4,000 into 40 by 116. 1379. How much is 4,000 into 30 by 116? 1034. Next, 4,000 into, sorry, 690. Or guys, okay, don't add this 16. Don't add this 16. Why? Because that is relating to time office only, no? Same expense cannot be taken in the same department, so don't take it. Exclude it. Total is 100. Now, 4,000 divided by 100 into 40. 1,600. 1,200. Yes or no? Stores is 800. 400. This is time office. Next up, stores total is 5,800. Stores total is 5,800. Now stores we are going to distribute in the ratio of 24, 20 and 6. Total will come to 50. Correct? 5,800 divided by 50 is how much? 116. 116 into 24. 2784. And how much is the 2320? Here it is nil. Here 696. That is your stores. Next, going to maintenance. Guys, here the 5800 distribution done. Correct? So here it is 0. Here it is 0. Here 3400 696. 4096. Correct? How much is total here? Basically 3:2 ratio it is. How much is 4096 divided by 5 into 3? 2450. And one more. 2 by 5. 1638. Now I got to know how much for a fabrication, how much for a assembly. Now guys, if you see here, it looks like step, no? Yes, that's why we call it a step method. Got it? So this is the secondary allocation in case of non-reciprocal in nature. In case of non-reciprocal in nature, now we'll get for the production how much. Based on that, we will absorb it. Now, what if it's reciprocal? Guys, repeated distribution method. That is, till some amount becomes negligible, we keep on repeating our work again and again and again and again and again. See here. Primary distribution they have given. A, B, C is a production department. Service department X and Y. See, X and Y. X is providing 20% to A, 40 to B, 30 to C, 10 to Y. Service X is providing service to Y. Y is providing 40 to A, 20 to B, 20 to C, 20 to X. Sir, two-sided, one-sided. Talk. Two-sided, no. Because X is providing service to Y, Y is providing service to X. Here, if I apply repeated distribution, what I am going to do is, first primary distribution I wrote. First, X I will allocate to A, B, C and Y. Now Y became total 970. That I will allocate to A, B, C and X. Again X became 194. This I will allocate to A, B, C, Y. And Y became 19.4. Again balance. This I will allocate A, B, C, X. Again X became 3.88. This I will allocate blah 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 and Y. Now Y is negligible amount. I am going to ignore it. This is your repeated distribution method. Now one more method is trial and error method. How trial and error method works, sir? Guys, we don't consider this now. For first secondary distribution, we don't consider this. Let it be there aside. What we will do, first X will distribute to Y. X will distribute to Y. That is, X was 700, Y was 900. First X, 700 will eliminate and will distribute to Y, 70. Now Y became 970. That we will distribute to X, only to that percentage. That is 10 and 20. Y 970 distributed 20%, which will come to 194. Now this became negative. Correct? Now this 194 will distribute. How much? 10%. 19.4. Now this 19.4 again will distribute. 3.88. 3.88 again we distribute. 0.38. Now we got a negligible amount. Now what we will do, you know? We'll take total of this 700 plus 194 plus 3.88. How much? 8? 897.88. Total of this 970 plus 19.4 plus 0.38. Sorry? Guys, always remember this thing. Always remember this thing. In case of simultaneous equation and trial and error, you should use the percentage only. Don't use the proportion. Use the percentage. Reason I told you already by showing the workings in the regular class, if you remember. Correct? It should get allocated. No, if fully get allocated, so much overhead only is not there. What it will get allocated? Yes or no? So, remember this much for your trial and error, for your simultaneous equation. As the overhead total will exceed than the actual total overhead, you should apportion only in terms of percentage. Now X 897, can I consider it as 898? What I am going to do is 898 now I will apportion to A, B, C in the ratio, in the 20%, 40%, 30%. How much is 898 into 20%? First I already have 2400, 2100, 1500. How much? 179.6. B, how many percentage? Where it went? B 40%. How much it will be? Double of this. 359.2. Basically double of this. And one more is 30%. Somewhere in between. Divide by 3. Into, sorry, divide by 4 into 1. 269. This is relating to department X. Department Y. How much it is? 989.75. 989.75 into 40%. 395.9 into 20%. 79.8. Hey, not 79.8. 179. 197.95. Next one. Same. 197.95. May I know the totals, please? $2,975.5. Next one. 15. Next one. 1000. If you see, almost same. Now this is your trial and error. In repeated distribution, you did in a single table for all the production as well as service. In trial and error, first you do for the service, then you are going for a production. Got it? Now there is one more method called simultaneous equation method. There is one more method called as simultaneous equation method. In case of simultaneous equation method, what you are going to do, sir? Guys, try to understand. How much is the overhead of X? How much is the overhead of Y? Can you tell? You can't tell. Sir, that is there, no sir, 700 and 900. That is not a final overhead. Why, sir? For X it is 700 plus Y is 10%, no? Sorry, Y is 20%, no? Because Y is 20% is X overhead. So, can I tell it as 0.2 Y? Sir, but Y you know, sir, 900. Why not 900? Y is 900 plus 10% of X, 0.1 X. Always remember, this is not relating to Y. This is overhead of X to the Y. This is overhead of Y to the X. Y is? Department X distributes 20% to A, 40% to B, 30% to C, 10% to Y, which means total expense of X, if you take it as X, that is, or total expense of Y, you take it as Y, Y expense will be 900, which is incurred as per primary, plus 10% of X, because X is distributing its overhead 10% to Y, 0.1X. And if you take the overhead of X as a X, then that will be 700 plus 0.2Y. Got it? Now if you solve the equation, you will get how much is Y, how much is X. Now then you have to distribute it in this percentage. Now that is your simultaneous equation method. For example, if you want me to solve this, let's say Y is equal to 900 plus 0.1X. Now then I can write it as 0.1 into 700 plus 0.2Y. Can I? So Y is equal to 900 plus 70 plus 0.02Y. Y minus 0.02Y is equal to 970. Y is equal to 970 divided by 0.98. 98? 990 shall I take? Here in exam you take the decimals. Here in marathon I can't waste time. Now 990, no. Now X will be 700 plus 0.2 into 990. 898, 990. This you are going to distribute in the ratio. I mean not ratio, sorry, percentage. For trial and error as well as for simultaneous equation, you are going to use the percentage. Hope it is clear, guys. Clear? Guys, once in examination they have asked you capacities. They asked the capacities. Question based on capacities. So mark it as a important. Installed capacity means, guys, theoretical. That is maximum which you can achieve. Basically, you can't achieve it. If you work throughout, how much you will be able to achieve, that is your installed capacity. Whereas practical capacity is basically how much you are going to practically you can achieve. How much practically you can achieve if everything is normal. Whereas actual capacity is how much you are actually achieving. How much capacity you are actually achieving. That is your actual. Normal capacity means, guys, your practical capacity or your total capacity minus idle time. Which idle time? Normal idle time. Guys, your theoretical capacity minus normal idle time will give you normal capacity which you can achieve in the normal course of business. Whereas total capacity minus total idle time, that will give you actual capacity. How much you actually achieved. Understood? See here. Capacity per hour is 5 units. Number of shift, each shift of 8 hours, 3 shift you can do. Sundays 52 is there, other holidays 13 is there. Annual maintenance is done within these 13 days, which means there is no separate maintenance time for that. Preventive weekly maintenance for a machine is on Sunday. Again, there is no separate time for that. Normal idle time for batch changeover is 1 hour per shift. Now, production based on the sales expectancy is so and so and so lakh units. Actual production is 30.1. Assume 1, 3 and 5 years to be normal years. This one is normal. This one is normal. This one is normal. Installed capacity. Guys, installed capacity is maximum how much I can achieve if I work throughout. That is, in a year, if I work for 365 days, 8 hours for 3 shifts, 43.8 lakh units I can achieve. Sir, but it's not coming for 43.8. Guys, that is number of hours. Number of hours. But you can produce 500 units per hour, no? That is your idle installed capacity. Whereas your practical capacity is, guys, 365 days are there in total. Yes, in that how much you can achieve. Guys, can you work on Sundays? Can you work on holidays? How many days are remaining? 300 days are there. Correct? Guys, in each and every shift of 8 hours, 1 hour is going for a batch changeover and it's normal idle time. So that is 7. How many shifts? 3 shifts. This is your practical capacity. That is your practical capacity. Normal capacity. Guys, they have asked us to take 30.1, 29.7 and 30.2 as a normal capacity divided by 3. On an average, how much you can achieve on an average throughout? How much? 30. Actual capacity, guys, this year, actually how much we are doing? 30.1. That is our actual capacity. That is our actual capacity. Hope it's clear. Mark it as a LMR. Mark the capacity questions as a LMR. Sir, overhead on what basis we can recover, sir? Guys, you can use many things. You can use many things. Let's say you can use based on the number of units, based on the labor hours, based on the machine hours, based on the percentage of prime cost, based on the percentage of direct material, percentage of direct labor. All those things I gave in a regular class. Please go through that once. Basically, you should take for the factory as a whole. Find out how many percentage is overhead that you apply on a particular job. For example, factory as a whole, overhead is coming to, let's say, rupees 2 lakhs, where we expected a direct material to be 20 lakhs, which means, can I tell overhead is 10% of direct material? Now, particular job is taking 10,000 of direct material. Now, much for this overhead, how much I should absorb? 10,000 into 10%. 1,000. This is absorption based on the direct material. Like this only we will apply for the percentage of the labor, percentage of the prime cost, per unit, per labor hour, per machine hour, like that. Go through all those things. And predetermined overhead rate means based on the budgeted. Actual overhead absorption rate means based on the actuals. Generally, if they give just overhead rate, it will be predetermined. Blanket overhead rate is there. What do you mean by blanket overhead rate? Guys, you are not going to find out from department to department to department. You are going to take the overhead for the whole factory as a whole. And you are going to take one base. Department A separate overhead, department B, department C, we are not going to do that. For a whole departments, take the one total overhead divided by some base. It could be units, it could be labor hours, it could be machine hours, whatever it is. Got it? Guys, now, sir, when there is an under and over absorption, how to treat it? All you have to do is whether that under absorption and over absorption, is it relating to normal cause or abnormal cause? You should check. Normal cause means generally due to change in the prices, etc. Can you control it? No, that is normal loss. Abnormal loss means due to your deficiency or defect in making a decisions, management's fault altogether. That is abnormal. Very simple. Abnormal, no doubt, charge it to costing P&L. If it's a over recovery, credit it to costing P&L. If it's under recovery, charge it to costing P&L. Now, if at all it is due to normal reason, like increase in the price, etc., what you should do is find out a supplementary rate. Find out a supplementary rate and charge it to cost on that basis. For example, let's say under or over recovery is 1 lakh. Let's say under recovery 1 lakh. In that they are telling 40% is relating to change in the prices, other 60% is due to wrong estimation by the management. So 60,000 I'm going to charge it to costing P&L. Now this 40,000 I should charge it to cost. How you can charge it to cost? Guys, let's say during the year total we produce 4,000 finished goods. How many finished goods? 4,000 finished goods. And let's say in the work in progress 2,000 units are there, equivalent to 1,000 unit. Equivalent units 50% complete. 2000 WIP, if it's 50% complete, it is equal to 1000 finished goods, no? So 1000 is a equivalent WIP. So can I tell during the year I produced 5000 units? During the year I produced 5000 units. In this 4000 guys, let's say 3500 is sold. 3500 is sold. 500 is in closing stock. Now what you should do is, this 40,000 is there now, divided by number of units produced including equivalent WIP. Per unit you should charge 8 rupees. Per unit you should charge 8 rupees. How, sir? Guys, to WIP 1000 into rupees 8. Sir, but 2000 units no. 1000 equivalent unit no. Rate is for equivalent units, not for the 1 WIP. So which is coming to 8,000. Done. Now sold units you are going to charge it to cost of sales. That is 3,500 into rupees 8. 28,000 and cost of closing stock. Closing stock you are going to add how much closing stock? Out of 4,000, 3,500 is sold. 500 is remaining no, into rupees 8. Just check whether your whole 40,000 is addressed or no. You are going to do this way. But keep one thing in mind. When you arrive at this 1 lakh, you should arrive based on the actual overhead, based on the normality. For example, you arrived this, how you know? Let's say we expected our overheads to be, that is budgeted overhead or absorbed overhead. Absorbed overhead is 4 lakhs. Okay. Actual overhead is 5 lakh. Budgeted overhead is 4 lakh, or sorry, absorbed overhead is 4 lakh. Actual overhead is 5 lakh. Now it is under absorption of 1 lakh. Clear? Now try to understand. If at all while arriving at this 5 lakh, if they told strike is there, because of the strike, court gave an award to employees, which means award means judgment, where we have to pay 50,000 rupees, that is included in this 5 lakh. Is it normal? No. Take out from that 5 lakh and treat only 4 lakh 50 as a actual overhead. Let's say last year, while booking expense, we left one expense. We forgot one expense. That's we are booking now, which means that expense of 10,000 is there in this 5 lakh. Is it relating to this period? Exclude it. So all those special items will be there. No. After excluding what will be there, that you should consider as a actual overhead for computation of under absorption or over absorption. Got it? See here. Overhead incurred is 150. Overhead recovered is 1 lakh, which means around 50,000 is under absorption. Correct? Cost of sales 10 lakh. Finished goods 8 lakh. WIP 7 lakh. Guys, in this ratio only we'll allocate. This 50,000, you are going to allocate it in this ratio. Finish. Here no need to calculate supplementary rate also, because units only they haven't given. Straight away in this ratio, 10 lakh, 8 lakh, 7 lakh, in this ratio you allocate this 50,000 under absorption piece. So full-fledged question will be like this. Okay. All these things you have to go through once. Sometimes guys, sometimes listen, in overhead, you might remember that special question where they won't tell factory overhead is, they will tell factory overhead is recovered on the basis of prime cost. Factory overhead they will recover on the basis of prime cost. Administration overhead they will recover it on the factory cost. Percentage, but you don't know how much it is. They will give two different equations. What you should do is, let's say factory overhead be F, administration overhead be A. Using the equation, solve it. You will get F and A. You will get F and A. Of course, you are going to get it in decimals. Let's say 0.25 and 0.4, which means 25% is a factory overhead based on the prime cost and 40% is admin overhead on our factory cost. Like that question is there. Just go through those things. I'm not going to tell or show that again once again, but those things are already discussed in the class once, if you remember. Correct? Now guys, there is something called as machine hour rate also. There is something called as machine hour rate. What is machine hour rate, sir? Guys, machine hour rate means instead of department, you are going to calculate based on the machine cost. What you are going to do in a department, let's say 4 machines are there. Now, for each and every machine, how much is my cost? Rent I will divide, insurance I will divide, standing charges, like that. I will divide all the expenses per machine. How much? I will divide it by number of machine hours relating to that machine. I will get to know how much is my machine hour rate. How much is my machine hour rate? Now, that is your machine hour rate. Got it? Here, so far what we discussed, production department A, department B, department C, like that. No. Now, if you do it for a machine, per machine how much? First, you will compute cost per machine, either monthly, weekly, yearly, based on question to question. You got machine how much? Now, divided by number of machine hours in that machine, you will get a machine hour rate. That will be your absorption rate. That will be your absorption rate. Got it? Now, for example, machine A, total cost came to 1 lakh. Machine hours came to 10,000. Now, machine hour rate is rupees 10. Machine hour rate is how much? 10. Now, try to understand. Product A is taking 4 hours of machine, which means overhead to be absorbed to product A will be 4 into rupees 10, 40. Got it? This is how you are going to treat the machine hours and all. Guys, but always remember, machine hours when calculating, you should take the effective machine hours. What do you mean by effective machine hours, sir? Total machine hours available minus normal idle time. Any effective hours means total hours minus normal idle time. Even your employee. Even for your employee also, effective hours means total hours minus normal idle time. That will give you effective hours. Now, total cost, if you divide by effective hours, you will get the cost per effective hour. Guys, in the machine hour, there is something called as composite machine hour also. Composite machine hour also. Sir, what do you mean by composite machine hours? Guys, generally what happens is, there will be operator wages and all. Basically, direct wages are, it is not a overhead, direct wages. But sometimes, when we calculating machine hour rate, we will treat it as a overhead and will charge it to this particular machine. Now, that kind of machine hour rate, where it includes the direct wages paid to operator, that kind of machine hour rate, we call it as a composite machine hour rate. And here, guys, remember the question which I am expecting this time in examination is that with use of robot, without use of robot, with use of computer, without use of computer. Hey, first they will give all the different expenses. Okay, machine jobs with use, without use. Now what you should find is, you should find out how many hours we used, work for the job without using machine. How many hours we worked with machine. Now we'll calculate the rate without machine, we'll calculate the rate with machine. Let's say one will come to 10, one will come to 15. For example, rent is there, that I will divide into 2. With use of machine or without use of machine. Salary is there, with use, without use, like that I will divide. Now without use, how much is rate per hour? With use, how much is rate per hour? Now let's say one job is there, job A. This takes 10 hours without machine, 5 hours with machine. Now for this 15 hours without machine, I will charge this one. 5 hours, I will charge extra machine rate. With use of computer, without use of computer, that question is there. Go and check in exam, list this thing. And by the way, that equation question I told, no, that is this one. Find the rate of factory overhead and office overhead. Illustration 61. Keep that thing in mind. All these are important. Basically, overhead, before going to exam, go through it once properly. Then only go to exam. Got it? Now we will tell SS. And also in overhead, sometimes they might ask customer performance management. That time what you should take, total sales minus discounts, you will get a total revenue. From that, you should allocate a different expense on different basis. Delivery on the number of deliveries, your sales call, that on the basis of number of minutes for each customer, how much we spent. Like that you should distribute, you will get a profit for each and every customer. Based on that, you are going to allocate. That question we didn't solve. That with use of machine, without use of machine. Illustration? No, not that. Then I think in additional questions we have solved it. Give me a second. From ICAI I solved that question if I am not wrong. I will show it once. No worries. I don't know. Sometimes no. What I feel it will come. Sometimes it comes. Now you guys also praying for that. No, let it. But worst part is whenever I tell this will come, that will be majority of the time different questions. Where you see it as a difficult questions. Correct? Guys, sometimes they don't give a machine hours. What they will give is each and every machines need operator all the time. Now they will give how many hours operator has worked. Now that it will be machine hour. For example, they don't tell class hours. They will tell each and every class requires faculty from beginning to end. Now how many hours faculty work, that is a machine hour. Class hours, no. Same. How many hours the employee work, that itself will be the machine hours. Sir, for the first time in life, feeling guilt. I should have studied from the beginning. Correct? No? No, sir, not it. See that customer question I told, no, it will be like this. Rent and insurance based on area, salesman salary like this. They will tell on that basis you have to divide. That's it. Hey, this question is there in not in this also. How come? Not possible. Gemini Enterprise undertakes 3 different jobs A, B and C. All of them requires the special use of special machine and also the use of computer. They need machine also, they need computer also. Computer is hired and higher charges works out to 420,000 per annum. This will be only and only relating to computer. The expenses regarding the machine, rent for a quarter, depreciation per annum, indirect charges per annum. This is machine. During the first month operations, following details were taken from the job. Without use of computer, A needs 600 hours, 900 hours. With use of computer, 400 and 600. I mean, both is required. They are asking you to compute the cost for jobs. Guys. Shall we? Now, try to understand. Without use of computer, how many hours we are working? 1500. First month, no? In a month, right? With use of computer, how many hours we are working? 2000 hours. In a month. Now, what I will do? Rent. 17,500 for a quarter. Per month, how much? Not divided by 4, divided by 3. Quarter means 3 months. 5,000. Let it be. Now listen. Machine hours. Computer machine hours. Computer hours plus machine hours. Now, machine hours with only machine hour is how much? 1,500. Computer with machine hour is how much? 2,000. Now guys, 17,500 divided by 3 into 1,500 divided by 3,500. 2,500. Then 17,500 divided by 3 per month I will get into 2,000 divided by 3,500. 3,333. That is rent for 1 month for the machine hours used without computer. Machine hour used with computer. Depreciation 2 lakh per annum. 2 lakh divided by 12. 16,666.67 in the ratio of 3:4. That is 1,500 and 2,000. That is 3 by 7. 7,000. 7,001. 140. 143. The other one is 9,000, 10,000. 9,524. This will be where depreciation. Indirect charges 150,000 per annum. 150 divided by 12. 12,500. 12,500 into 3 divided by 7. 5357 divided by 3 into 4. 7143. Now also guys, there is a per annum higher charge is there. 420. Per month how much it will be? 420 divided by 12. 30. That will be only and only for the second one, not for the first one. Now, may I know total of this? $16,500 and 57,000. Now, per hour I am going to calculate 16,500 divided by 1,500, 57,000 divided by 2,000. 11 per hour. 28.5 per hour. Now, what I am going to do is, for A, B and C, how I am going to compute is A, 600 into 11. 6,600. 400 into 28.5. 11,000. Total 18,000. 900 into 11. 9,900. 600 into 28.5. 17,000. So 18,000, 27,000. B, it is 27,000. C, 0, 1,000 into 28.5, 28,000. This is the overheads for the job A, job B, job C. This is how you are going to do ICA material chapter number 4 overheads. In that, this question, if you want to take a photo, quickly take a photo. Hope you understood what we did. We just divided without computer, with computer, how much per hour, and accordingly we distributed it. Sir, in overhead, what at all we can expect, sir? One, this kind of question you can expect. Second one, what I am expecting is your treatment of under or over absorption. Treatment of under or over absorption. That supplementary rate and all I told, no? That one. Second one is calculation of the absorption rates, where you will do primary distribution, secondary distribution, then absorption rates. These are the three major questions you can expect. So if something comes outside that, nice. Next time I will include that also. And also capacity question. Recently they asked in the question, but still you can't trust institute. Got it? With that, we have completed a overheads chapter. Guys, concentrate more on this chapter. Very, 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 very important chapter. Okay. Now, guys, we are starting with the next chapter, cost bookkeeping. Okay. Cost bookkeeping is basically recording the transaction in the cost books. That is known as cost bookkeeping. Guys, cost bookkeeping, you can do it in two ways. One is integrated method. The other one is non-integrated method. One is integrated. The other one is non-integrated. Integrated means what, sir? Where the costing records will be maintained along with the financial records in the same set of books. Where the costing records will be maintained along with the financial records in the same set of books. That we call it as a integrated cost accounting system. Whereas if you maintain two separate set of books for the cost accounting and for the financial accounting, that we call it as a non-integrated cost accounting system. If you maintain two separate set of books for the cost accounting as well as financial accounting, that we call it as a non-integrated cost accounting system. Guys, generally in the non-integrated cost accounting system, your pure financial ledgers won't be maintained. Your pure financial ledgers won't be maintained. Like your cash account, bank account, purchase account, sales account, bad debt too, all those things won't be maintained in the cost accounting. Sir, but without this, how we can pass the double entry, sir? Without having these ledgers, how can we pass the double entry? Guys, for that, we are going to replace all these account with a special account called as CLC or GLC. CLC or GLC. That is cost ledger control account or general ledger control account. Cost ledger control account or general ledger control account. To make it double entry. Now, sir, in the cost accounting system, which are the different ledgers will be opened? First one, as I already told you, CLC or GLC. That is cost ledger control or general ledger control. Whereas that is nothing but a replacement of a pure financial items. Bank account, cash account, sales account, purchase account. Instead of using the name of all these, we are going to use GLC or CLC. Next is stores ledger control account known as SLC or material ledger control account. That is where we are going to record our material related things, stores related things. So that is whenever the material we receive, debit, whenever the material is issued, credit. Now let's say production, whatever we sent, from that we'll receive back our material. Inflow, material will be debited, giving it outflow, it will be credited. Next is wages control, that will be relating to wages. It could be direct wages or it could be indirect wages. It could be direct or it could be indirect. Production overhead, that is nothing but related to production. Sometimes we use the term factory overhead control account for this, manufacturing overhead control account for this. Next is administration overhead, related to administration. It could be general in nature or it could be related to production. Selling and distribution overhead, that will be relating to S&D guys. WIP control is related to production. It is basically production account. Whenever anything you give to production, it will be debited. Whenever the production gets over and will be transferred to finished goods, it will be credited. And if you have finished goods control account, that account will be relating to finished goods. Whereas cost of sales, basically all the sales, all the overheads, all the finished goods, all the cost will be transferred relating to the sold items to cost of sales. From cost of sales, it will be transferred to costing P&L. Got it? Generally, how it works? Listen here. First, material will come. Material will come. That is, we purchase the material. Now, so material is increasing. So we have to debit the material control account. Debit what? Material control account. Credit what, sir? Are we paying the money? If you are paying the money also, can you write bank as bank? No, you are going to write it as CLC, cost ledger control account. So what is the entry guys for the first one? That is when we purchase a material. Material account debited to CLC. Correct? Second one, in that material, something is relating to overhead, indirect. In that case, what we should do? Overhead is the expense. That particular department we should debit depending upon which overhead it is. Production overhead means production overhead, admin overhead means admin overhead, selling and distribution means selling and distribution. Material control will be credited because material going out, overhead account will be debited. Overhead is the expense, overhead account will be debited, material control account will be credited. Done. That is second one. Third one is you are incurring a labor cost, direct as well as indirect together. Direct as well as indirect, you are incurring a labor cost. What entry will pass, sir? Wages control account debited to CLC, not bank. To CLC, not bank. Done. Fourth is you are issuing material to the factory. You are issuing material to the factory. As I already told you, production means which account? Work in process account. Production means work in process account. So material is going out, will credit the material control, debit work in process control account. WIP account will be debited and material control will be credited. That is your fourth one. Sometimes we might incur direct expenses that will be charged directly to the production. No. So WIP account will be debited. For direct expenses incurred, WIP account will be debited. What will be credited? We are going to credit the CLC. Direct expense to CLC, WIP to direct expense. Instead, direct to take out. No. You are going to pass WIP control account debited to CLC account or GLC account. Depends on the question. Okay. Next, labor, direct labor. Guys, direct labor will be charged to the production. No. That is, work in process account will be debited to wages control account. WIP account debited to wages control account. Done. That is sixth one. Seventh is where? Seventh I skipped. That is what? Directly if you incur any overhead. Overhead account debited to CLC. To bank? No. To CLC. That is, if it's a production overhead account, incurrence entry. Production overhead account means production, administration means administration, selling and distribution means selling and distribution. Factory and production, manufacture, both. 3 are same. Done. That is your 7th one. 8th one is, second one was direct expense. So 8th one, whatever, it got adjusted there. Finish. Now, 9th one is indirect labor. Guys, when it is an indirect labor, respective overhead expense, it will be debited, and labor, that is wages control, will be credited. That is, for example, if it's indirect related to production overhead account, control account debited to wages control account. If it's administration, admin overhead to wages control. If it is selling and distribution to wages. Got it? 10th is, you are absorbing a factory overhead. Factory overhead you are going to absorb to production. No. Try to remember this. Factory overhead will be absorbed to production. Factory overhead will be absorbed to production. Admin overhead related to production will be absorbed to finished goods. Administration overhead related to production will be absorbed to finished goods. Administration overhead general will be absorbed to cost of sales. Administration overhead general will be absorbed to cost of sales. Selling and distribution will be absorbed to cost of sales. Selling and distribution will be absorbed to cost of sales. Always remember, in the question whether they will give selling and distribution is absorbed or not absorbed, how much is absorbed. If they don't give anything about it, how much is absorbed, complete you are going to charge it to costing P&L, but not in production and admin. Here you have to take the absorption rate what they have given. Okay. Now, what you absorb, that will be the respective accounts. That is, in case of the factory overhead we are discussing, WIP account will be debited and factory overhead account will be credited. We are charging, no, reducing from the overhead, we are transferring it to production. So WIP account debited to factory overhead account. Now, in the WIP, we finish goods. We finished our production. So finished goods. Now, once the goods got finished, we are going to transfer it to finished goods account now. So finished goods account debit to WIP account. See, generally in this account, you should remember one thing: debit the receiver account, credit the giver account. Generally, it will be like that: debit the receiver, credit the giver. Now, finished goods, anyhow, it's a asset account, so you should remember that way also. But generally, it will work this way: debit receiving department, credit giving. So now, finished goods, once it gets ready, it will be transferred to finished goods now. So finished goods account will be debited, WIP account will be credited. Finished goods account will be debited, WIP account will be credited. That is your 11th one. Now, as I already told you, if at all it is an admin overhead related to production, it will be absorbed to admin overhead related to production, finished goods. Production overhead is WIP, admin overhead related to finished goods, related to production is finished goods. So the entry will be finished goods account will be debited, production overhead account will be credited. Sorry, admin overhead will be credited. Finished goods account will be debited, admin will be credited. What if it is not related to production, sir? If at all it is not related to production, guys, you are going to charge it to cost of sales. That is, cost of sales account debited, admin overhead account will be credited. Done. Okay. 13. Sir, finished goods, cost of goods sold. Cost of goods sold will transfer to cost of sales. From finished goods, you will take it out and you will transfer to cost of sales. That will be cost of sales account will be debited to finished goods account. Cost of sales account debited to finished goods account. Now, 15th one, selling and distribution overhead, that absorption. That is, selling and distribution overhead account will be debited to cost of sales account debited to S&D overhead account. Cost of sales account debited to S&D overhead. Now from the cost of sales, you are going to transfer that cost to costing P&L. So that will be costing P&L to cost of sales. Costing P&L to cost of sales. Next, sales you have to transfer now to the costing P&L. What entry will pass, sir? Can you pass it as a sales to costing P&L? Can you pass it as cost to sales to costing P&L? No. Sales is treated as a CLC. So the entry will be CLC to costing P&L. Sir, sales is credited? No, sir. Yay! Transfer entry. Normal sales entry won't come at all. Why, sir? What is the normal sales entry? Bank to sales. Bank is CLC. Sales is CLC. CLC, CLC. What? Got it? That entry won't come. That entry won't come. Sales entry won't come. But the sales you are going to credit to costing P&L, no? That entry will come. That is, generally what we'll pass it as sales to trading account if you remember in accounts. Here what we will do, sales to costing P&L, but sales we don't take it as sales, we take it as CLC. We take it as CLC. And you know that in the overhead account, there could be under absorption, there could be over absorption. Under absorption means credited to costing P&L, over absorption, debited to costing P&L, over absorption means credited to costing P&L. Got it? After doing all these things, you will get a profit. Now, guys, that profit generally will transfer to capital, no? But here, do we open capital account? No. Here, we are going to transfer it to CLC account. Here, we are going to transfer it to CLC account. See the few entries I have given: purchase of material, SLC to CLC, payment to direct expenses, direct expense to GLC, and again when you transfer it to, it will be WIP to direct expense. Instead, you can pass one single entry as WIP to CLC. WIP to CLC. When you pay the wages, entry will be wages control to CLC. When you introduce a material to production, entry will be WIP to SLC. When you charge the direct expense to production, I merged and told. Next, when you charge the direct labor to your production, WIP to wages control. Payment of overhead, respective means production means production, admin means admin, selling and distribution means selling and distribution to CLC. Next, material related to overheads, that is overhead to SLC. Labor related to overhead to wages. Factory overhead charged to production, that is absorption, WIP to factory overhead. Finished goods produced during the year, finished goods to WIP. Administration overhead related to production, finished goods to admin overhead. Cost of goods sold, cost of sales to finished goods. Administration overhead not related to production, cost of sales to admin overhead. Selling and distribution absorption, that is cost of sales to S&D. See, sometimes they will tell administration overhead related to sales. Still you should take it as COS to admin, not S&D to admin. COS to admin. S&D overhead absorption, that is cost of sales to S&D overhead. Sales is CLC to costing P&L. Got it? Factory overhead? Factory overhead to WIP, production. Under absorption, over absorption will come to costing P&L. Yes. If there is any abnormal item, if there is any under absorption, if there is any over absorption, what we should do, sir? We should. Under means debit to costing P&L. Over means. Sir. Over means. Talk. Over means credit to costing P&L. Got it? Guys. Sir, always do we adjust this? No. If at all in trial balance, if they have given a overhead balance, then we are going to keep the overhead balance. If they tell write off the overhead absorption or under absorption, then only write it off. Or when they haven't given a balance in trial balance, then only write it off to P&L. Otherwise, you can keep the balance in a overhead account. Guys, stores ledger control account balance will be there. It will be there. What does that mean? Closing stock of material. Closing stock of material. Cost ledger control account balance will be there. What is the entry? I mean, what is the balance? That is making the debit credit match. That's it. WIP, closing work in process. Finished goods, closing stock of finished goods. Wages control, balance should not be there. Balance should not be there. If it is there, charge it to factory overhead. Charge it to factory overhead. If at all they give it as abnormal wages, then charge it to costing P&L. Overhead, it will be under or over absorption treatment I told already. That is all about your non-integrated. Shall we see a question based on that? Quickly. Yes. Pass the journal entries under non-integrated. Material worth rupees 50,000 returned to stores from the job, which means we are receiving. We issued to the production. No, they are returning it to us. Material control account will be debited to WIP. Gross total wages paid. Wage control to CLC. Employer's contribution to PF and ESI. Again, wage control to CLC. Wage analysis book detailed 40,000 as direct wages. See, total 1 lakh is there no in wages. Total 1 lakh is there no in wages. In that they are telling 40,000 is direct. That is WIP to wages control. Charge to production. WIP to wages control. 25,000 towards the indirect factory labor. Indirect factory labor. Production overhead to wages control. 20,000 towards salaries to office staff. That is admin overhead to wages control. 16,000 for selling and distribution. S&D to wages control. Why CLC? Wages we are transferring, not the direct expense. Got it? Second one, if you see, they have given few balances over here. Following items took place. The factory overhead are applied to the production at 150% of the direct wages. Any under or over recovery carried forward for the adjustment in the subsequent month. So don't write it off to costing P&L, keep it balance. All admin and selling expenses are treated as a period cost and charged off to P&L. So admin and S&D, if anything is remaining, charge it off to P&L. They are incurred. So following entries they are asking. So first, raw material purchased. Stores ledger control account will be debited. CLC will be credited. Return to supplier. Stores ledger will be credited. Supplier will be debited, but supplier is nothing but CLC. So the entry will be ulta entry. Try to understand, we returning it to supplier and our production department returning it to us is different. We returning to supplier is outflow. Our production department returning to us is inflow. If they return, our production department return, we will debit the SLC. If we return, we will credit the SLC. Issued to production, WIP to SLC. Return to stores, SLC to WIP. We are getting it back. What we sent to the production, they are sending it back to the stores. Productive wages, indirect wages. Basically, total we are paying 65,000. Wages to CLC, you are going to write it as a wages to CLC 65,000. Later, productive wages you are going to charge it to WIP. That is WIP account debit 40. Indirect wages to factory overhead. Factory overhead to wages 25. In this only you are going to pass 3 journal entries. Factory overhead expense incurred. Factory overhead to CLC. S&D admin expense. S&D to CLC. Cost of finished goods transferred to warehouse. From finished goods you are going to transfer to cost of goods sold or cost of sales. In the given question, cost of goods sold. Okay. Cost of goods sold to finished goods. Yeah. When we absorb. But here they are telling charge it off to P&L. Otherwise, if it's related to production, it will go to finished goods. Now cost of goods sold is 2,10,000. Oh, sorry. This is from WIP we are transferring to finished goods. This one is from finished goods we are transferring it to cost of goods sold. This one entry will be finished goods to WIP. This one will be COGS to finished goods. 3 lakh is a sales that won't come anyhow. It will come in the P&L as CLC to costing P&L. Got it? Accordingly, we are going to do. They are asking you to keep the balances also. That is your non-integrated. That is your non-integrated. Hope it is clear. Non-integrated. Yes. Where you are leaving? Now, guys, integrated cost accounting system, that is where both financial book as well as cost books are maintained. I mean, cost records are maintained in the same books. Here, instead of CLC, we'll take the respective accounts. Instead of CLC, we take the respective accounts. Like bank means bank, cash means cash, debtor means debtor, creditor means creditor, sales means sales, purchase means purchase. Here no CLC account, directly we take everything. That is your integrated. Now guys, in integrated what happens? There is no two results at all. For profit there will be only one result. But when you maintain your accounts under non-integrated system, what happens is that will give one profit. Correct? Whereas your financial profit will give one profit. Your financial books will give one profit. Cost books will give one profit. Now both won't be same almost all the time. Both won't be same almost all the time due to certain factors. In that scenario, what we should prepare is, we should prepare something called as reconciliation. Examiner's favorite. Reconciliation of cost and financial accounts. Where in the cost accounting, when it is done in a non-integrated basis, and financial accounts, results generally it won't match. So reconciling it is a reconciliation. Got it? Now, sir, why the difference will come? Why difference will come? Guys, difference will come because pure financial items, will it be there in the cost accounting system? But it will be there in the financials, like your bad debt, interest, all those things. Income tax, it won't be there in the cost accounting system, but it will be there in the financial accounting system. Notional expense, it won't be there in the cost accounting system. Sir, it will be there in the cost accounting system, but financial, do we take notional? No, we take only actual expenses. It is not an expense, out of pocket cost, but for decision making it is important. For example, this building is of ArivuPro only, let's say. Now to ascertain the profit and loss here, they assume this if we pay the rent, how much it would be, or if at all we didn't do the classes here, we would have left it for a rent, would have earned some opportunity cost. Now overheads, guys, overheads as per the cost accounting system, it will be absorption basis, but as per the financial accounting system, it will be actual basis. As per the cost accounting it is absorption, as per the financial accounting it is actual, incurrence basis. These are the reasons what will lead your financial profit to be different compared to cost profit. Now we are going to analyze that. That is your reconciliation. While analyzing that, always remember, we can either start with the profit as per cost accounts, or we can start with the profit as per financial accounts. We can start with the profit as per cost accounts, we can start with the profit as per financial account. We can do it in a statement, or we can do the memorandum reconciliation account. We can do it in the statement, or we can do it like a memorandum reconciliation account. Now, if you do it in the statement, what is it, sir? Guys, we'll start with the cost accounts. Means what we are going to do is, we are going to do what in financial accounting it's done, what we haven't done, we are going to do that. What in financial accounts it's not done, but in our cost accounting it's done, we are going to eliminate. Basically, that Nagavalli movie is there, no? Which one in Tamil? Chandramukhi. What is that actress name here? Jyotika. Now Jyotika getting converted into Chandramukhi. So what she should do? What Jyotika do? What Chandramukhi don't? That she should reverse. What Chandramukhi does, Jyotika don't, that Jyotika should do. Then only Jyotika will become Chandramukhi. Which means in the class I gave example, no? So try to understand how Jyotika can get converted into Chandramukhi. What Chandramukhi used to do, Jyotika should do. What Chandramukhi wasn't doing, Jyotika was doing, that she should reverse. For example, Jyotika was praying to God, Chandramukhi wasn't. Now she should stop. She should stop. Now Chandramukhi dances, Jyotika won't. Now Chandramukhi should dance. Then only Jyotika will become. Got it? Now, same way, if we start with cost accounts, means to reach the financial accounts, what we should do, what we have done, they haven't done, reverse it. What they have done, we haven't done, do it. Then only we'll arrive at a financial profit. See, for example, we are starting with the profit. We should see what effect it makes on the profit. What effect it makes on the profit. First, we started with the profit as per cost accounts. We are trying to reach profit as per financial accounts. We are trying to reach profit as per financial account. Guys, there is an expense. Oh, anyhow, I shared to you guys, no? So I have a copy, but still. Done. Listen. Now, first, expenses recorded in cost accounts, but not in financial accounts. Guys, in financial accounts, have you recorded? No. But in cost, you have recorded. Now, to reach the financial profit, should we treat it as expense anymore? As per costing, it's expense. As per financial, it is not. What we should do? Eliminate the expense. Eliminate the expense means when you book the expense, you reduce the profit. Now, add back to profit. Got it? Incomes recorded in cost accounts, but not in the financial. Now, incomes recorded in cost accounts, but in financial it's there. No. When you recorded an income, your profit increased. Now to reach the financial profit, you should eliminate it, which means you should decrease your profit. Expense recorded in financial accounts, but not in the cost accounts. Expense recorded in financial account, but not in the cost account. What we should do? Guys, their expense recorded, which means in financial profit is less. Here, did you record expense? No. You have to record expense, no. Then only it will match. When you record expense, your profit you should reduce or add? Reduce. Income recorded in financial accounts, which means there you showed more profit. Here now you should show more profit or less profit.
You should add.
In financial you showed more profit. So in cost accounts also we should show more profit, for that add it. Overvaluation of closing stock. Always remember, closing stock and profit are directly proportional. Opening stock and profit are inversely proportional, which means more and more the opening stock, less and less the profit, more and more the closing stock, more and more the profit. Now, overvaluation of closing stock in cost accounts, which means in cost accounts profit is more. What we should do? Less. Overvaluation of closing stock in financial accounts. In financial accounts profit is more, which means we should add. Basically, whatever financial accounting has done, we have to do that. Next, undervaluation of closing stock in cost accounts. In cost accounting, profit is less. Add it. Then only you can reach the financial accounts. Undervaluation of closing stock in financial accounting, which means in financial accounting, profit is less. You also reduce. Got it. See here, who is right, who is wrong, that doesn't matter. You want to reach financial, whether that is right or wrong, you are going to follow that. Got it, Lokesh. Sir, she likes Korean drama. Now, if you want to be like her, you also should start watching Korean drama. Watching Korean drama is right or wrong, doesn't matter. She wants, you should do it. Then you will become siblings. Both same, no? Now, then you can call Aka. Now, guys, overvaluation of opening stock in cost accounts. In cost accounting, opening stock is overvalued. Profit is less in cost account, so you should add it. Very good. Overvaluation of opening stock in financial accounts. In financial, the profit is less. You should reduce it. Cost account is like Ambati Raidu. Financial accounts is like Dhoni. Dhoni won't change. Ambati Raidu, whatever Dhoni does. Last ball, let's say 6 runs required. Dhoni defenses it. Ambati Raidu is getting ready for next match. Tala for a reason. Getting it. So basically cost accounts won't, financial account, you are not going to change anything. You are going to reach financial accounts. So whatever financial accounting has done, cost accounting you should do. Whatever you have done, they haven't done, you should reverse. Undervaluation of opening stock in cost accounts. Here the profit is more. You should decrease. Undervaluation of the opening stock in financial accounts. Financial accounts profit is more. You should add it. Over absorption of overhead, which means, guys, over absorption means in the cost accounting expense is more. In the cost accounting expense is more. Over absorption means you are treating expense more than what actually it is. Exactly. No. Over absorption means you are recovering more. Over absorption, the balance will be charged to costing P&L. For example, you are incurring 5 lakh. You are absorbing 6 lakh. Which means as per financial accounting, expense is only 5 lakh. But as per cost accounting, 6 lakhs. The 1 lakh you are going to credit, that no doubt. But now that 6 lakh, what you will do? So, in the cost accounting, you showed the more expense. In financial, you showed a less expense. So, in financial, profit is more compared to cost accounts. You should add. And under absorption means in cost accounting, expense is less compared to financial accounting. Profit is more in cost accounting, decrease. You will arrive at a profit as per financial accounts. Got it? Now, sir, what if we start as per the profit as per financial accounts? then he will be trying to reach as a profit as per cost accounts. Now Dhoni is financial accounts or cost accounts? Cost accounts. Ambati Rayudu is financial accounts. Because Ambati Rayudu will change, Dhoni won't change. Dhoni will play with less than 100 strike rate only. He won't change. Ambati Rayudu will change. Got it? Now try to understand. Profit as per financial account is our starting point. Guys, here what we should do, financial accounting profit we should match with cost accounts. So in cost accounting what we have done, that should be done in financial. In financial what we have done, in costing what we haven't done, that should be reversed. Now expenses recorded in cost accounts but not in financial, which means in cost accounting profit is less, we should reduce. Incomes recorded in cost account, in cost accounting profit is more, here you should add. Expenses recorded in financial account but not in cost accounts, in cost accounting no change in the profit, but as per financial account it is decreased, add and make it equal. Incomes recorded in financial, in cost accounting no change, but in financial you added it, so you should reduce it. Overvaluation of closing stock in cost accounts, in cost accounting it is more profit, so you should add it. Overvaluation of closing stock in financial, in yours it is more, in cost it is not more, reduce it. Undervaluation of closing stock in cost accounts, in cost accounting profit is less, here you should less. Undervaluation of closing stock as per financial, in costing no change, but in financial it is less, add it. Overvaluation of opening stock in cost account, there the profit is less, reduce it. Overvaluation of opening stock as per financial, here the profit is less, add it. Undervaluation of opening stock as per cost accounts, there the profit is more, add it. Undervaluation of opening stock as per financial accounts, here the profit is more, reduce it. Over absorption of overhead, there the overhead is more, expense is more, profit is less, reduce it. Undervaluation of overhead in the cost, which means in financial the expense is more, profit is less, add it. You will arrive at a profit as per cost accounts. You will arrive at a profit as per cost accounts. Is it clear? Now, sir, what if I start from the loss? Here, see, try to understand. When you start with profit as per financial accounts, after doing this, if you get a negative amount, that will be loss as per cost account. Profit as per cost accounts, you get negative amount, then it will be loss as per financial account. Now, let's say you start with the loss as per cost accounts, you will get a negative, then it is profit as per financial account, because loss you taken as positive number, no? You started with loss as per financial account, you get a negative number, profit as per cost accounts. Same sign if you get, same it is. Different sign you get, opposite it is. Start with profit, you get plus, profit. Start with profit, you get less, loss. Start with loss, you get plus, loss. Start with loss, you get minus, profit. Now, we are starting with cost accounting loss, which means we are trying to reach loss as per financial accounts. Expense recorded in cost accounts but not in financial, which means loss in cost accounting is more. Loss in cost accounting is more. Decrease. Income recorded in cost accounting, loss in cost accounting is less, add it. Expense recorded in financial account, loss in financial accounting is more, add to your loss. See, what happens to loss we are checking, not what happens to profit. Incomes recorded in financial account, loss as per financial is less, less it. Overvaluation of closing stock in cost accounting, in the cost accounting profit is less, loss is less, Because more the closing stock, less the loss. No, more the closing stock, more the profit, less the loss. Now, overvaluation of closing stock, guys, in cost accounting you are showing less loss, add it. Overvaluation of closing stock in financial account, in financial account you are showing less loss, reduce your loss.
Will be same as profit as per financial. So
No.
treatment will be same.
No. That's why if at all, now you are assuming financial account also loss is there. That's why we'll get a negative amount. You get a negative amount means what you assumed is ulta. That's why we'll get negative amount here. So if you start with loss, then you are going to assume the other end is also loss. Yeah, loss and loss. Both you should assume as loss and loss.
Option of overhead is added here. This is loss as per cost accounts.
Mhm.
Profit as per financial accounts. Profit as per financial accounts.
You're telling those two tables. Yeah. Now, overvaluation of closing stock in financial accounts. In financial account, you showed less loss. Here also you reduce. Undervaluation of closing stock in a cost accounts. In cost account, you showed more profit. Reduce it. Undervaluation of closing stock in financial accounts. In financial account, you showed more loss. Increase your loss. Overvaluation of opening stock in cost accounts. In cost accounts, you showed more loss. More the opening stock, more the cost, more the cost, more the loss. More the closing stock, less the cost, less the cost, less the loss. So, more the loss, overvaluation of opening stock in the cost accounts, you are showing more loss, decrease it. Overvaluation of opening stock in financial you are showing more loss, add it. Undervaluation of opening stock in cost accounts, you are showing less loss, add it. Undervaluation of opening stock in financial accounts, you are showing less loss there, minus it. Over absorption of overhead, in cost accounting you are showing more expense means more loss, decrease it. Undervaluation of overhead, which means in the cost accounting you are showing less expense means less loss, add it. You will arrive at a loss as per financial accounts. If at all you get negative amount, that will be treated as profit as per financial accounts. That will be treated as profit as per financial accounts. Now, starting with loss as per financial account, which means we are trying to reach loss as per cost accounts. We are trying to reach loss as per cost accounts. Guys, expenses recorded in cost accounts but not in financial accounts. In cost accounting, the loss is more. Here also you should increase. Incomes recorded in cost account but not in financial. So loss is less in cost. Here also you should reduce. Expenses recorded in financial, which means here the loss is more, reduce it. Income recorded in financial, loss is less, add it back. Overvaluation of closing stock in cost account, there the loss is less, reduce it. And overvaluation of closing stock in financial, here the loss is less, add it. Undervaluation of closing stock in cost accounts, there the loss is more, add it. Undervaluation of closing stock in financial, here the loss is more, reduce it. Overvaluation of opening stock in cost accounts, there the loss is more, add it. Overvaluation of opening stock in financial, here the loss is more, reduce it. Undervaluation of opening stock in cost, there the loss is less, reduce it. Undervaluation of opening stock in financial, here the loss is less, add it. Over absorption of overhead, there the loss is more because expense is more, add it. Under absorption of overhead, there the expense is less, loss is less, you should reduce it. You will arrive at a loss as per cost accounts. Sir, what if they ask you to do the memorandum? Then you guys, I will show the memorandum for all the 4. Okay, whichever you want to start, you can start with. Always remember, credit means profit, debit means loss. Now, here we are starting with profit. Here we are starting with profit as per cost accounts. So I will write it in the debit side. Profit as per cost accounts. I will write it in which side? Credit side. Now, whatever add is there, no? Whatever to be added to profit, everything I will write in the credit side. Whatever to be reduced, no? Everything I will write it in the debit side. Now, debit side balancing figure if you get, that is profit as per financial accounts. That is profit as per financial accounts. Now, if at all credit side only will get a balance, then that is loss as per financial accounts. Sir, what if I start with the profit as per financial account? Again, you should start with the credit side only. Profit as per financial account. Whatever add is there, credit side. Whatever minus is there, debit side. If you get a credit side balance, debit side balancing figure, that is credit balance, then you have to, that is profit as per cost accounts. If at all you get a credit side balance only, I mean credit side balancing figure, debit balance, that is loss as per cost accounts. Basically, credit side balancing figure means debit balance. Debit balance means loss or profit? Loss. If I start with the loss, sir, if I start with the loss, guys, I will start with the debit side. Loss as per cost accounts. All the add I will take it in the same. Basically, add will come in the same side. Minus will go in the different side. Balance what you get, balancing figure, this will be loss as per financial account. If you get a same side, then that will be profit as per financial accounts. Here, if you start with the financial accounts as a loss, I will start with the debit side. Loss as per financial account. All the add, all the minus, balance will be loss as per cost account. If it comes in the same side, profit as per cost accounts. This is how you are going to do the reconciliation. Now, shall we quickly see few questions? Sir, in this what we can expect, sir? Guys, if at all they want to ask many adjustments for 7 marks, they will just ask you reconciliation statement or memorandum reconciliation. If they give the small question, but they want to check everything from the basics, then they will give a information. They will ask you to prepare a P&L as per financial account, cost sheet as per cost account. You will get a costing profit, financial profit. Then you have to reconcile. You have to prepare a P&L. Then you have to prepare a cost sheet. In P&L you will get a financial profit. Cost sheet you will get a costing profit. Both you have to reconcile. This also they might ask. They might ask for 14 only. Okay. That kind of questions are also there. You can go through it once. See, net profit of the manufacturing company appeared to be 64,500 in the financial records. Cost book showed a net profit of 86,460. You are required to reconcile. What shall be the starting point? What shall we take? Starting point. Profit as per cost accounts. 86,460. Correct? Income tax provided in the financial books, which means we are trying to reach the profit as per financial accounts. Now in the financial accounts, they showed it as an expense, which means there they reduce the profit. Here also you should reduce the profit. Bank interest credited in financial books. There they showed it as more income. Here you are going to increase your profit. Work overhead under recovered, which means in costing you are showing less expense, which means you are showing more profit. Decrease your profit. Depreciation as per financial it is 5,600. As per costing it is 6,000. which means 400 you showed more expense, which means more expense means less profit, add back. Administration overhead over recovered. In costing you showed more expense, in financial you showed less expense, which means less expense means there more profit. Here you should increase your profit. Less expense. Over recovered means in costing more expense, financial less expense. Less expense means more profit there. Here also you should increase. Loss due to obsolescence charge in financial. There is one loss in financial but not there in cost, so that will decrease a profit. Interest on investment not included. There it is increasing profit. Here also you should increase profit. Stores adjustment credited in financial, which means there you showed it as an income. Here also you increase your profit. Loss due to depreciation in stock value. There you showed it as expense. Here also you show it as expense. This is if you start with cost accounts. If you start with financial accounts, income tax provided. Here you showed it as an expense, but in cost accounting it is not there, which means in cost accounting profit is more. Everything will be opposite. Bank interest credited in financial books. In cost accounting it is not an income, but in your books it's an income. What you should do? Reduce. Works overhead under recovered. In cost accounting more profit, here it is less profit. Add. Depreciation. In cost accounting you charge 400 more, which means less profit. Decrease your profit. Admin overhead over recovered. In cost accounting more expense, less profit. Loss due to obsolescence. In cost accounting no change, but here you reduced your profit, add back. Interest on investment. In cost accounting no, which means same profit, but in financial accounting you showed more profit, add it. Sorry, reduce it. Store adjustment. In cost accounting no change, but in financial you increased your profit, decrease it. Loss due to depreciation in stock value. In a financial you showed it as a expense, but in cost it is not. So hope it is clear. Accordingly we are going to do it. See, they will give it like this. Here this is profit as per financial accounts. You are going to compute here. Cost. Guys, book value of closing stock 750, but you are going to take 780. Factory overhead has been absorbed to the extent of 189. Here it is 210, here it is 189,800, which means in costing under absorption. Sundry income is not considered. That will come in the reconciliation. Total absorption of direct wages is 246, but here as per actual it is 230. So in financial less expense. Like that you are going to do it, and you are going to do the cost accounts as well as financial accounts, and you are going to do it. One special question is there. I will show it once. Yeah. Illustration, which one? Lokesh? That it is to some extent it's fixed, some extent it's variable, that question. Listen here. Given below the trading and P&L of Vikas Electronics for the accounting year ended. Okay. As per financial account, profit is 10,000, and always remember financial account expenses and incomes will be based on the incurrence basis, not on the absorption basis. Normal output of the factory is 2 lakh, but actually we sold 2 lakh 50. No doubt in that. There was no opening stock also, which means we produced 250. But normally how much we thought we are going to produce? 2 lakhs. Factory overhead are fixed up to 60,000. Office expenses are fixed for all practical purpose. Selling and distribution are fixed to the extent of 50,000. Rest is variable. Guys, they haven't told which is actual, which is absorbed. So budgeted. So we are going to assume actual and budgeted both are same. Actual and budgeted both are same. Guys, try to understand this important point. Variable, budgeted and actual is same means it won't change. Which means variable for 250, whatever is there in this variable, it is same only. So under absorption of or over absorption of variable won't be there when budgeted and actual is same. But in case of fixed will be there, sir. Sir, what nonsense you are talking? How it will be there? Try to understand. How much we thought our factory fixed overhead will be? 60,000. Sir, actually also 60,000 only. That I know. But try to understand. 60,000, we thought of recovering from how many units? 2 lakh units. Absorption will be based on the normal output. Absorption rate, when we calculate, we consider the normal output, not the actual output. So we thought of recovering 0.3 from 1 unit. Yes or no? But actually we are producing 250,000 units into 0.3. We are recovering 75,000. Anyhow, other 60,000 variable that remains same. So for the cost accounting, factory overhead is not 120, it will be 135,000. See, here they will tell fixed 75. Those idiots, they never gave a calculation how it is 75. So don't get confused. In the costing, it is absorption based on normal output. But in the financial, it's actual. Done na? Next up. Office expense, 40,000. Complete fixed they are telling. So 40,000, guys, we thought of recovering from 2 lakh units. Which means we thought of charging 0.2 per unit. But actually, luckily, we are producing 250,000 units and we are treating our expense as 50,000. Again, over recovery. Over recovery. Selling and distribution, 80,000. In that 50,000 is variable. Sorry, fixed. So, 50,000 we thought of recovering from 2 lakh units, which means we thought of recovering rupees 0.25 per unit. We are recovering it from 250,000 units. 75,000. 62,500. 62, which means over recovery again. So guys, if you see, they take it on the absorption basis. Variable will be actual only, because when the variable is not there, budgeted and actual is same, no? Everything is per unit only, no? Variable feature is that only, per unit won't change. But see here, over recovery of works overhead, over recovery of office overhead, over recovery of selling and distribution. If they give like this, always remember to do this. Please mark illustration 7 as LMR. Before going to exam, you should solve it and go. Got it? With that, we have completed our cost accounting system. All the questions you have to go through once. Here, sir, what is your expectation, sir? If they just ask for 7 marks, they will ask a reconciliation or the entries under non-integrated system. If at all they want to ask for 14 marks, they are going to give like this, ask you to prepare the financial statements as per account, find out the financial profit, prepare cost sheet as per the cost accounts, compare both and reconcile it. All the 3 you only have to do. They might ask this for 14 marks. Got it? So please do that kind of sums also. Here in illustration 6 is there, if you see. Cost sheet also you are only doing. P&L also you are only doing. Based on that, reconciliation also you are only doing. Okay, that they might ask. So depending upon what marks they have allocated to it. And also one special question I have solved in that additional question, that is when the financial informations are missing. Ledger to ledger to ledger, financial informations are missing. Payment to creditors. Using that you can find out how much you have purchased. Using that you can find out how much you have issued. Like that. Finished goods, WIP. Fill in the blanks kind of question. That is there in the additional question bank. Additional questions what we have solved. Go through it once. Okay. 1 or 2 questions I have solved based on that. Please go through that. If at all anyone who don't know which question I am talking about, you open ICI material. In ICI material, the chapter number 7, cost accounting system, in that one illustration is there where they will tell fire in the factory, because of which the few documents were missed. Following is the information given. Based on that they have solved one question. Also practice problem 1 of ICI material. The same I have solved here. Okay, just go through that once. You will get a clear picture about it. With that, we complete our cost bookkeeping. Got it?